I'd like to call to order the work session agenda on Monday, April 20th. It is now 5 o'clock. Councilman Osborne is on her way. So,
Just walked in.
Oh, all right. She's on her way walking in. Okay, here she is. So we're all here tonight. The work session will be a review of the fiscal year 16 revenues and expenditures. So we're just going to start off on the number one. Is Lori Wiggenroth, Budget and Research Manager, will present the fiscal year 16 revenue projections. Hello.
Wonderful. Thank you for having us here. We're going to go through a number of areas.
Can I stop you right with some of the council people asked, because we had 1, 2, 3, 4, 5, 6 things on this tonight. Is this the one we're looking at? Mm-hmm. So just tell us which presentation, and then
okay.
We're starting out with this.
We're starting out with the one that's, yes, the one that has the revenue pie charts. It's basically has the cover sheet for the whole presentation, the FY16 revenue and expenditures. And I'll also point out when the handouts or the other materials would be pertinent to the conversation as well. We all ready?
Go ahead. We're ready.
All righty. I guess I need to actually advance the slides as well. So yeah, we'll start by going through a quick update on the revenues. We've talked to you quite a bit about revenues already in several meetings previously, so we don't have a lot of new information in that area. We'll be spending a lot of time talking about expenditures. We're going to organize the expenditures to talk first about the salary and benefit updates. We'll talk then about the base budget. We'll go through the proposed Tenure CIP, and then we'll go through the proposed budget supplementals. And then, as always, we'll wrap up with kind of the calendar of what the next steps are in the budget process. So in terms of revenues, we'll start by going through this pie chart. This is a pie chart of the proposed citywide revenues for the FY16 budget. And looking at it, you'll see that almost 50% of our revenues make up the general fund, and that big piece on the blue. The next two pieces, the impact fees, are collected for specific projects based on plans that were adopted by you last year. The capital contingency is the amount that we set aside should some type of development begin to emerge in the middle of the year. It gives us the capability to be able to, if we receive new resources, it gives us the ability to have the legal appropriation to spend those resources when they come in. The next section is kind of popped out, and it's in various colors of green. It was just kind of to show you those are the enterprise funds and their piece of the puzzle. And then the last grouping, special revenues, is primarily the HERF fund and several other smaller funds. And the debt service funds includes the secondary property tax that's used for GO bond, voter-approved GO bonds, and some other debt. And then the last item is the Fleet Internal Service Fund, and that's basically funded by Fleet charging other departments for maintenance of vehicles. In terms of the general fund, it represents $82.6 million in a revenue estimate for next year. In addition to revenues, the general fund budget is also supported by the beginning fund balance that rolls over from the prior year, which is primarily made up of the prior year's contingency. And then there's also a few transfers from the enterprise funds that are associated with paying their share of the cost of things like the city manager's office, the finance department, and those types of things. In terms of the revenues for the general fund, about a little more than 60% of the general fund revenue is made up of local sales taxes, both the ongoing sales taxes and the construction sales tax, which we treat as a one-time source, plus the state shared sales taxes. And then here's a little bit more information about the revenues, or more showing you side by side what's going on. In terms of some of the estimates, I'll talk a little bit more about property tax in a few minutes. Sales tax, you see what looks like a very large growth rate from 2015's budget, or this year's budget, to next year's proposed budget. Just letting you know that last year, you may recall, we finished the year with a little bit more of an ending balance than we anticipated. Part of that was because sales taxes came in higher. So last year, we collected more than budget. This year, we'll collect more than budget. And so there's kind of this base that's been building up. So that actually represents, if you compare that to this year's estimate, it's less than a 5% growth rate from this year's estimate to next year's sales tax budget.
Joe?
I just want to make sure if I read that correctly, then it's about $5.5 million of ongoing general fund money
In terms of
from budget to budget.
yes.
Okay, 72.6 to 78.1.
Yeah.
Total. Yeah.
Yeah.
About 5.5. Okay.
Okay. The next area of interest in terms of the growth rate that's shown there would be the auto lieu tax. That's essentially the revenues when you pay your license plates. That's the part that's shared with the city. That revenue estimate is provided by others, and we rely on that source. Then the next one, you'll see a negative 13% growth in development-related revenues. We do budget those conservatively. This year, those revenues are tracking close to budget. We have part of them are up high, part of them are down low. We really don't feel like we have a stabilization yet, so we don't want to be aggressive in preparing that revenue estimate. And if you drop down to the one-time construction sales tax at the bottom of the chart, you'll also see that we've dropped the estimate for the construction sales tax by 25% based on our understanding of what may be coming forward.
Joanne?
The development-related revenues, is that, just for memory, is that going straight to general fund, or is that typically used for one time?
This goes
ongoing or
it generally goes to the ongoing revenues, and that's another reason to be conservative in the revenue estimate. It does pay for the ongoing costs of the development services and the planning. There's not a direct relationship, but there are ongoing costs in those departments that this basically helps fund.
Wally?
My question is to Larry. Is there any more conversation of us doing our own audit for the sales tax and for the shared revenue so that we can be sure that the state is giving us the money that we think we should be getting? Did we talk about that a year or two ago, maybe?
Over the last couple of years, we've had a lot of conversation on the sales tax.
Yeah.
What has happened is that through state legislation, our ability to control the sales tax environment has been minimized quite a bit, but we still have on staff a sales tax auditor, and that will continue through and after the transition completely to the state and what they're doing. With the reporting that they're doing when they took in what are referred to as the non-program cities, the larger cities, with the reporting that they're doing, trying to get the larger cities hold to the reporting they had before, we'll actually have better information that should provide more tools to our sales tax auditor. And that's kind of where, what we're looking at.
I've never really felt, I never have really been confident that we're getting all that we should get. I always think that maybe they're not matching up both of our zip codes or something, I'm sure they are, but I just wonder for sure.
For the larger operations, we look at those pretty close so that we know we're getting the returns for them. There wouldn't be much of a chance that one of the big box stores would be reporting in a different city instead of to us, because we would catch that. We say all, of course, in the sales tax or in the tax compliance world, all is a pretty broad term. Obviously, 100%, I wouldn't even try to argue that. But I think we do a pretty good job of keeping an eye on it, watching trends, sending letters out where things don't look right, and that kind of stuff.
Thank you very much. Thank you for staying on top of it.
And then the last thing that I wanted to point out on this revenue slide is the other line item showing an 11% growth from this year's budget to next. It's kind of unusual to see other growing at that rate. In this particular case, there's about $400,000 in that estimate that's associated with a one-time capital improvement project that is being recommended for funding. And that is the developer's share of that particular project. We've already collected those funds, so we're just recognizing that they will be revenue to help pay for that project in the coming year. I want to talk a little bit about property tax. We haven't really talked about property tax in the prior presentations other than to say we're maximizing it. What we just wanted to show with this chart is to remind everybody in the change in the law with regard to assessed valuation. Assessed valuation is the basis on which property tax are determined. And prior to this year, there was 2 assessed valuations. There was one, a limited assessed valuation, or the valuation that's used to assess the primary property tax. And the primary property tax supports our ongoing budget. It's a general fund revenue. And that's what's depicted in the blue. Historically, it has lagged behind the full cash or the secondary assessed valuation because it was constrained by law by how much that limited could grow. But with the change in the economy and the change in the real estate market, those numbers grew much closer together, as you can see, as they dipped down in the 12, 13, 14 range. And then secondary began pulling away again. But there was a change in the law which basically creates only one assessed value that both the primary and the secondary are now levied on.
Bill?
I'm hopeful that's not either an
Yeah,
insult
it's,
of
you know, don't be too hopeful.
one or both of us. I'm not sure.
We'll discuss it
Let's
afterwards,
just
Bill.
keep it like that right now, okay, you guys?
So, Larry, it was either at last year's retreat or last year's budget presentation. We talked about the floating rate, and we kind of had projected. And I realize it's a projection, so it's only as good as probably the pencil and paper that was used to write it. But I just want to point, just for everyone's benefit, we had talked about the tax rate for this current year to be $1.90, and it's actually $1.87. The current, or the rate that was projected for 15-16 was supposed to be $1.85, but we're suggesting that it be $1.87. And I realize the rate, the levy, I don't want to have that whole discussion again, but I do want to talk about why there's a difference and what if we were to have it at $1.85 as though we projected? What would be the result of that?
Okay, first, if I could on this, because that's a good question, and the particular slide that you're referring to that showed the $1.90 for fiscal year 15, we ended up at $1.87. That was actually a slide that we did at the 2013 retreat when we talked tax policy. We didn't show that slide again in 2014. Not a lot had changed other than that 3 cents. And the reason it went down from $1.90 to $1.87 was our estimates were a little on the conservative side. And so $1.87 is the rate that we have today. For this upcoming year now, we had made an estimate, and I'm going to speak in this at a very high level, but it's in the property tax. It's important we conceptually understand how it works. When Prop 117 came in, what it did is it limited the amount of increase in property value each year to 5%. That's limited property value, not assessed value, but property value. So that's kind of the top number in there. We made an estimate then last year when we started looking forward. We said, well, we know it won't be 5%, even though a lot of our property is above that. We know it won't be there because there'll be properties that'll float through, and we had estimated 4.5%. This spring, when we got our estimates, they came in at 3.7% for real growth. I was kind of surprised by that, but I was more surprised to see countywide it was actually below 2%. And I'm like, with everything going on, that just didn't add up to me. So I asked the assessor's office, how did this happen? Why is it? Well, one of the things is, for example, when, and this is just an example of how it works, on commercial property, they've been phasing the rate down over a period of time. That comes after that limited property valuation calculation. So commercial property that had, let's say, 5% of in the bank capacity and valuation, the 5% would be where it would start, but then if that percentage went down, that'd come right off the top. So if it was a 1% drop, and in some categories that was true, that 5 would immediately become 4%. Other exemptions come into play also. An example they gave, the assessor's office gave, is that a lot of the solar companies that were investing a few years ago have actually been acquired by SRP, which is not on the property tax rolls. And so that moved property off the tax rolls. Anyway, to make a long story short, our 4.5% ended up being 3.7. So when we estimated to be at the $1.87 rate for this upcoming year at that point, or excuse me, at the $1.85, as you indicated, that was our estimate. To achieve what we need to do, it really has to be at the $1.87. So, and apologize for the lengthy answer to, I think, a simpler question than the answer, but first, our council policy, or budget policy on the primary property tax levy is that we will levy it at the maximum. I have not run a calculation of what that would be of the amount if we were to drop by the 2 cents referred to. But very quickly, when I'm just looking at this chart, that would be less than 2% of the primary levy on this particular schedule that you're seeing. But that would take us away from the council policy that says that we will levy the maximum each year in doing that. I can run a quick calculation if you'd like me to, but that would be kind of the outcome of it.
No, if I may.
Yes, you may.
I think that it's a good, close enough estimate. So the further charts that pushed us out then, and for me, the floating rate, I'm going to use that term, that pushed us closer to $1.60 at the end of this term was very appealing, and which is probably, for me, the biggest reason why I supported it. So going forward now, when you look into your crystal ball that sits on your desk, when do you think that $1.60? You think that pushes it a year or two out, or do you think
That's a very good question. Our estimate at the time that we had this conversation in 2013 was that we would actually hit the $1.60 in fiscal year 18.
Right.
We actually were, in fiscal year 18, it would be 1.57, just slightly below the $1.60. I would say with what I'm seeing now, it would either be at fiscal year 18 or it could push it slightly into 19, but I really don't think it's going to materially change that date at that point in time.
Okay, so the fact that we're off by just a little this year isn't going to be it's not going to be a tidal wave at the end.
Not an
It is
indicator.
not a tidal. I think that's a good way of putting it. No, I do not think it's a tidal wave at the end.
Okay, thanks for the explanation.
Go ahead.
Okay. And so to wrap up what the $1.87 in property tax means for this year, the maximum primary levy would be $7.8 million in next year's budget, and the secondary levy would be $4.7 million. Again, that $4.7 million is essentially what we require to pay the debt service that has already been approved by the voters and issued. To move on to just some highlights of some of the...
Excuse me,
Oh,
Joe?
excuse me.
Just quick, and it would be helpful. I'm just trying to do a quick count. Looks like about a 4.5% overall levy increase. 5? 4.5, 5?
Yep.
I actually have it here. The total. Yeah, I'm thinking it's about 6.9%.
Is it 6.9?
Yeah.
Bill?
Because I know that there's a great number of people that are listening, that 6.9 is not an NOT increase in the property tax.
Oh, no.
Yeah,
That's
thank you, Bill.
6.9. Yeah, thank you.
When we
That-
talk about increases, and
Okay.
that always launches us into
very
outer
good.
space. So
Let me
again, I understand
go
it,
on
but
that. No, I think that's a very, very important question. Okay. The 6.9% is broken down into two categories. And forgive the rounding. Understand when they're doing assessed valuation, they round each level when you're only at 1 decimal point. The appreciation portion of our increase in valuation is, if you go back a slide, all of these numbers that I'm going to talk about are on the darker line for fiscal year 15 compared to fiscal year 16, because we no longer have what was the red line, the secondary property tax. So, of that increase between 15 and 16, and the number that I gave, the 6.9%, was only on the primary levy. 3.7% is from appreciation. 3.1% is from new construction. Okay? So it's about half and half, and that's on the primary levy. On the secondary, because the secondary grew very little, if you look from the previous year, I don't have those numbers right in front of me, but on the secondary, wait, I do have, yeah, the secondary went from 659 million, because there isn't a secondary anymore. The new assessed value is 670, so it only went up that $11 million. That's a fairly minor percentage. That's not a 3% growth rate. That's considerably lower growth rate in there. So in that analogy, it was a lot easier when you had the same valuations both years. You could break it out, but it's less than the 3.7, or less than half from existing property. Thank you for that clarification.
Joe?
Is it also possible, just to follow up what Councilmember Stitt was saying, is it also possible out of that total 6.9 like you broke down, because constitutionally we can only raise our levy by 2%.
Correct.
Okay, so if you had so your actual increase on primary is going to be based on as a growth rate on your home, how on average you did compared to everybody else, because levy can only go up 2. Can you identify as a result of that how much was shifted to the residential as a result of the commercial dropping by a point? Is it possible to get a handle on that? Because, see, part of the reason for the increase is because we can only raise it 2%, but part of the rate of the increase is because the commercial is dropping. So is there a way to try to figure out, or can you get a handle on what that actually amount is, so that people know it's not just us, it's the shift of the commercial coming down is moving the burden from the commercial over to the residential?
But that was through the legislature.
I understand that, but
I know you understand.
What
it.
you're
I just want
asking
the people
really
to understand.
is, can we develop a pie chart that shows
Right.
where this levy increase is coming from, allocating it by category of existing appreciation versus growth versus tax shift? We will look into that for the meeting a couple weeks from now. I'm not sure that it's easier on the primary levy when I get the secondary in there, and then you start throwing these variables in. We'll just look and see if we can get our best estimate to give you a picture of it. I hope you don't expect it to be audited by a reputable national CPA firm down to the 10th of a penny at that point in time, but we'll try to give you a good picture of it.
Joe?
I just think it's helpful, because a lot of times I'll get questions in the community about, the tax, and I try to also explain to them as well, is part of that increase is a shift from the commercial to the residential. So any little bit you can get, and I don't expect it down to the penny, of how that impact is affecting residential would be helpful.
Well, and I don't think the residential community has really heard that.
No.
I think the business community has heard that because they lobbied for that, and so I think that's where kind of the disconnect comes in. That we've been saying this last year, we said this, right? So I'm not sure when it passed. When you remember the year?
Well,
like
actually, the
three years?
legislation for lowering the rate has been part of. There was Well, I've been in Arizona doing this, so we are talking with, a few centuries, but at one time, commercial was at 25%.
Right.
Residential's always been at 10%. I think, and the point that's being made in this dialogue is not that the policy that the state is setting is good or bad. That isn't the point. It's just the cost shift as a result of it.
Absolutely.
I
been
think
about
also as
5
part of
years.
it's been a lot more than that actually. And if I remember right, we're going down to 18% now, and it would require further legislative action to continue down. I think it's reasonable to assume that it is a long-term goal to pursue that legislation and continue it until they can get it all at the 10% level. Whether that happens or not,
Let it be known that we're not pinpointing the legislature on this. We're pinpointing this is what it is. And
We're
this is what
communicating facts.
Absolutely. So.
Correct.
Yeah, and the only point I'm going to make is I like to explain that to them with the shift. It's as a result, regardless whether you think it's good or bad, is part of it is that shift. It's just the way it is.
We call it, it is.
Yeah, it is.
It is legislation.
All righty. And just a few highlights on some of the other revenue sources. As with the other state shared revenues, the estimate for HERF, which is the gas taxes that are shared with the city, those estimates are provided by others, and we use those estimates. In the Sanitation Enterprise Fund, we've assumed no rate change in that fund. We're only adjusting revenue for account growth of about 4% a year based on our historical experience. The stadium revenue is based on recent trends. And one area that we did want to highlight is what's happening with impact fees. When the new impact fee plan or the development impact fee plan was adopted last year, an assumption was made that we would be experiencing about 1,340 permits issued in a year. The first several months, first half of this year, that level of permits is about 50% lower than was projected in that plan. So we have revised the impact fee revenue estimates over the original 10 years of the plan to where we've lowered the estimates in the first couple of years, and then we've upped the estimates in the last several years because we have to maintain that plan as it was designed. We just need to move things around in between there. But what that means is when we get to the CIP proposal, nearly every, if not every, impact fee funded project has been delayed from the plan that was adopted for this year.
Joanne?
And the state shared revenue, we will not see a change for our census until the next year, correct?
Correct, FY17 or 16. Yeah. 17. Yeah, I was right the first time.
Right.
17.
Thank you.
And I didn't mention the water and wastewater revenue assumptions. As you're aware, the water and wastewater programs are going through a process right now. They're working on an integrated water master plan as well as an asset management study for both of those areas. In addition, there's a citizens committee process that's going forward to review those plans, what's being proposed in terms of the work that may need to be done on the system, and then also to talk about what types of rate structures or rate proposals may be required to support that particular plan. Right now, the CIP projects are under close scrutiny that are included in that. The thing that we have to deal with in terms of preparing this budget is that that study information and those rate proposals will be coming to you after the budget is adopted. So we are in a situation where we may need to spend some resources that will be approved after the beginning of the year. So we're proposing that we come forward with kind of a two-part approach to the water and wastewater budgets. A piece of the budget will be based on the current rate structure and the current, so as a funded budget. And then we would also propose that we come forward and adopt a budget that would include kind of what today would be the worst case scenario or the highest cost scenario that has been proposed or that has been sorted out by the consultants.
And that would have to be adopted by the council.
Correct. So then at that point in time, those items could not be spent by the department. We would block their use. And then once the council acts, only the appropriate parts of that budget would be released for spending. So now we're going to move on to expenditures. And what we'll start with is we will be, Lyman will come forward and he will cover kind of the salary and benefits piece of the proposed budget. And then Larry will move into talking about the retirement plans. And then we'll shift back over and move into the base budgets.
Good evening.
Just
Pleasure.
introduce yourself because I didn't introduce you. So
Okay. Lyman Lockett, Human Resources Director.
Thank you.
Pleasure to be here tonight to talk about our medical renewal and our compensation update. I also have here, should you have any questions of our broker, Rick Shuckero with the Levitt Group, he's here. We also have some of our partners from Cigna, Erica Emmons, who is our client manager, and Margot Ozip, who is the VP of Existing Business. They're both back here, and can certainly field any questions should you have any. First thing that, let me grab my little clicker here, I want to begin to talk about is just a quick agenda. I'll spend some time, again, talking about our insurance renewal. We'll talk about the medical plan proposal that we're bringing to council. The impact on employees of both the medical plan and salary increases that we're proposing. A little bit of information on the clinic. I know that's always an area of interest, and I think it's an area that we're continuing to try and leverage to contain cost. We've got compensation for the three various groups that we have, our non-sworn or non-represented, and both our fire and our police department with the MOUs that we've recently come to tentative agreements on. And then, as Larry mentioned, he'll brief you on retirement plans. First off, just want to spend a little bit of time talking about the activity, the various activities that we've had leading up to where we're at today. And most of these have been in the cost containment effort that we've employed. One of the things that we did early on, and one of the things that we'll continue to do, is explore new opportunities to control costs in healthcare. We explored looking at the Arizona Metropolitan Trust, which is a consortium of 4 municipalities that have come together to build a trust to offer their employees health care. Our assessment was this wasn't the right model and or vehicle for us. There were a number of things that we felt would not fit with our plan designs, and also I'll talk a little bit about our plan for performance. But there were a number of things that we just didn't feel like this was the appropriate time, both for them and for us to pursue moving to a trust. Not something that we are totally moving away from. We'll continue to explore those things as they become available. We've also looked at fully, and I talked about this last year, but fully and partially self-funding models. As you may recall, many of the entities that are in our benchmark cities are self-funded. In fact, the vast majority are self-funded with the exception of 2. And they've experienced either low or rate passes on their insurance premium renewals. So it's something we continue to explore. Timing is everything. It's not a silver bullet. It's not a fix-all. And I'll get into a little bit more detail there. Level funding, which is a new element that I'll spend some time talking about that we've looked at. We've also completed our negotiations, and I'll talk about the renewal with Cigna. We've done 2 RFPs for vision and for life. We've continued to integrate our wellness efforts, and that includes beginning to try and pull all these pieces together with our wellness clinic, with the information that we're feeding to Cigna, and some of the activities that we're doing on our wellness initiatives, and that includes contracting with a new biometric screening provider. That allows us to flow information right to Cigna. And one of the questions that we're always asking are, how effective are our wellness programs? What kind of return on investment are we getting from the monies that we're putting into the wellness clinic and other wellness efforts? This data flowing to Cigna will begin to give us concrete data on how effective our wellness programs are working. From year to year, we'll be able to look at, for example, cardiovascular disease, and we'll be able to look at this year versus next year, and if that's an area of focus for our wellness program, we'll begin to see what kind of efforts we're having with actually having results with employees. A little further on our medical renewal, just a refresher, we currently have 3 plans. These are the 3 plans that we have. We have an HMO, and we have 2 high deductible health plans with health savings accounts. You can see the distribution there of employees. Most of our employees are in the HMO plan. We see a little bit of migration from year to year, but not much. In most cases, we're seeing a number of employees, few employees migrating to the high deductible plans as they learn more about those. But we do have 3 somewhat distinct plans that give employees options for their health care needs. Our renewal. So a little bit of good news, bad news as I get into this. On the bad news front, our renewal was based on a 94.29% loss ratio, which is very high. Certainly not where we'd want it to be. Signal looks at us to be at about 83%, and an 83% would typically generate a trend increase, which would be today somewhere in the neighborhood of 7 to 10%. We were able to negotiate, and we've been working with Cigna on a number of things in terms of our partnership. And again, trying to integrate the clinic in, trying to integrate some of our other wellness activities. Our first initial renewal quote was at 14.7%. We ended the negotiations with a 7% increase. So effectively, that was about savings of $545,000, almost $546,000 from the initial renewal. So we were very pleased with that. As we've looked at this renewal rate, this is one of the lower rates that I think we've experienced as a city. So while our loss ratio is trending high, we know we still have some work to do. We were able to negotiate a favorable rate, what I believe is a favorable rate for the city. One of the elements of our renewal will be a new level funding option. And what the level funding option does is it provides an opportunity for the city to get 50% of the premium, any premium surplus that's left over. And that would be minus. So we pay our medical premiums. And from those premiums, the claims are paid. Also, you have Cigna's administrative fees and expenses. So once those things are deducted, if there's any surplus left over, the city would be able to recover 50% of that. So this is a new feature. There really isn't a downside for the city. We're very excited about this because we think this supports our efforts. So if we have a good year, we've got the potential to recover some of that funding that we're putting into premiums.
Wally?
Okay, my question is the 50% recovery to us, Cigna gets the other 50%?
Right.
And they're already getting paid because we're doing all this other stuff, so they're really getting more than 50%.
Well, today they get 100%. So essentially, in a fully insured insurance model, we're paying our premiums.
Right.
And anything left over would be going to Cigna. There are some caveats there with the Affordable Care Act where 85% of that spend must go towards health care, or otherwise we would get a rebate through Affordable Care Act. But generally speaking, in a fully insured model, there wouldn't be anything coming back to the city. So
okay, well, I thought the Affordable Health Care Act gave us some back, even though they tripled everything else. But if I understand that caveat correctly, that's what has happened.
There is something that would come back based upon, whether or not they hit that 85% or not,
right? Or
if they're not spending 85%.
Okay.
So there is that caveat. This is something a little different and certainly very similar, somewhat similar, I should say, to a self-funding model where we've got more, I think, opportunity to take advantage of the other things that we're doing in our wellness front with the wellness clinic that may result in those funds coming back to the city.
Okay, bottom line, what did the city pay for healthcare costs this year? And once you give me that figure, then we're to add 7% more, which will be what you're proposing for next year. Is that correct?
That's correct. That's correct. It'll be additional 500,000. The 7% equates to
About
an increase of
500,000.
just under 500,000.
So what did we pay? What was the
The
budget
total
figure?
spend
Mhm.
for total spend. Got it. Yeah.
You can tell me.
The budget for this year for health insurance is $6.7 million. So I don't know
Wow. That's a lot of
what
money
we'll actually spend.
that
but
this
that was
city is
budgeted.
paying so that our employees can have health care. I want them to have health care, but I mean, that is a lot of money. And I don't think the public realizes what a big chunk that is. 6.7 million. And now we're proposing an additional 7% upon that. Larry, how much would that be? How many million? Did we go to $1 billion yet?
Oh, don't say that. It'll go.
Don't say that.
Yeah,
No, don't.
I know, but
We're not-
that's
we're
going to
not-
how high is that going to put us?
We're not bidding on this. We don't.
So that's an additional 497,000. I've got it in a subsequent
Okay,
slide coming
all
up,
right.
but it's
So
an
that'll
additional
be
497,000.
so probably we'll say 7 million. Oh, 7.2. Good. Okay.
Sherry?
Okay. That brought up when we talked about the Affordable Health Care Act.
Yeah.
Wally brought up a really good point. So when we got, how much did we get back, and what did we do with it? I think did we use it to pay for it this year, or how did we use the money?
The rebate that we got last year was very small. Again,
How much is very small?
That's not
104,000. Okay.
yes,
104,000?
Under 4.
Under.
Under 4,000.
Under 4.
under
Oh, under
$4,000.
$4,000.
Right.
Okay, so I assume we just put that back in to help pay or defer costs. I was hoping it was more. Okay.
Okay. Those funds just flow back into the general fund.
Yeah. Is there any way that we can reduce it, or anything our employees can do or we can do, or
And I think that, certainly, I think our wellness efforts, and I will move to a slide that will give you a sense of where we think we're heading and where we're trending. Much of the work we are doing is to help drive down the cost of health care. And as we explore, as I mentioned earlier, as we explore things like self-funding, that would create an opportunity where any surplus, we'd be getting back 100% of the surplus that we didn't spend. So that, again, all of these things are certainly contingent upon the plan, and in your experience is really either what drives cost up or what drives cost down.
So then can you go back to the activity leading to the proposal? You said evaluation fully or partially self-funding insurance option. A majority exception of 2. So you're finding that they're actually losing on this? Is that what were you indicating when you made that statement on that?
In terms of exploring those options?
Uh-huh.
Those are options that we'll continue to explore. Our broker is continually looking at it. At this time, we don't think it's the opportune time.
Don't think it because of
our loss ratio. So when you see that 94%, and you'll see a chart that I show here in a moment, we'd like to see a more stable and consistent loss ratio, and we'd certainly like to see a lower loss ratio before we move to a partial or fully self-funded.
Joanne?
And just to follow up, and I appreciate the conversation we had earlier today too. But when it comes to the breakdown, I mean, we have seen consistently for the last 3 to 4 years, $1 million increase, $1 million increase, $500,000 increase, I mean, it's affecting everybody, private, public, whatever. It's chaos. But if I recall, and I know you're getting into this chart showing what it means to our employees, but at the end of the day, we cover 97%, correct, of our employee.
Of our employees, we cover 93%.
93%, thank you. And how much of the employees' dependents?
83%.
83% is also covered.
That's correct.
Thank you.
Joe?
Lyman, out of the 7%, what percentage is the typical inflation for the industry?
Yeah, somewhere between 7 to 10%, but 7 to 10% would be trend.
So, make sure I understand that is, even if we were going to manage.
Let me rephrase, 8 to 10% would be trend.
Okay, but that's what's going on in the insurance industry right now, and we're looking at 7, and the trend itself through inflation of the
That's
industry
correct.
is higher than this proposed rate. Am I understanding that correctly?
Yes, the medical trend is higher than our 7% proposal. That's correct.
Molly?
What can we do as a city to stop that 94% loss ratio?
A lot of the work that we're doing in the wellness front is, and again, I'll get into some more detail, but our wellness efforts, certainly. One of the things that we're also doing is just continually looking at our claims, our high dollar claims. Going to get a little bit ahead of myself, but when we look at that 94.3 loss ratio, a lot of that is driven by high dollar catastrophic claims. In fact, today we have 31 catastrophic claims that are driving about over 50% of our experience. So we've hit what we feel is just some bad luck, and that is that's why we have insurance.
For the patient and us.
Absolutely.
That's
absolutely.
these
To protect
are-
our
It's a
employees and to
What you're
protect.
thinking, I just want you to realize that this is your cancer patients.
Right.
These are the
Certainly.
people that are,
So going beyond that, we look at these high dollar claims and we look to them to see, is there something that we could have prevented through our wellness programs? And for the vast majority of those claims, there isn't. But we're always looking for those claims where we could say, you know what, had we done X, Y, or Z, we may have had some impact on that. So a lot of our claims and a lot of our work within wellness, we are targeting at things that we know we can control and we can have an impact on. As we get more data through biometric screening, we'll be more surgical about where we target our wellness programs. But those kinds of efforts can have a great impact on it. Another area is how we use the wellness clinic. Today, and again, I'm getting a little bit ahead of
Not too
myself,
far
but the clinic and how we use, what kind of services we offer, how we can keep people from getting higher cost services in the medical community can have a significant impact on our plan.
So we need
as
more
well.
people to use the clinic.
Either more use of the clinic or the kinds of services that we offer, but absolutely, using the clinic can have a dramatic
can you
impact.
just elaborate on for the public listening, the biometric screening? Tell them what is included in that.
The biometric
provider.
screening, and part of our new plan here is to go to something that's a little less invasive. In the past, we've done a full blood draw. We're looking at I think it's a 9-panel, but we're looking at cholesterol. We're looking at triglycerides. We're looking at health factors that are controllable with one, knowledge that there's something that you need to address. Two, by driving it through Cigna, and I should mention this, in the past we've done the biometric screening and that data has gone to the employees. If they've elected, it's gone to the clinic. Many have elected that. The clinic has followed up. By going to Cigna, we can also use Cigna's case management services. So if there's anything that is out of range, Cigna will also follow up with the employee to begin case management. So that's another avenue of trying to control costs as well.
One last question, then I
Yes,
promise.
Molly, go ahead.
So, Lyman, in your job, do you talk to other human resources folks
Absolutely.
at other cities and say, how are your claims? We had 94%. Are you 70? Or, what's your secret? What are you doing? Because everybody can't have 94%.
No,
If they
everybody
did,
can't
we're
have
gonna
90.
be broke.
Absolutely. Rick, our broker, can probably speak to this even at more detail than I can, because he's talking to people beyond where I'm looking at. Some who have had rate increases of 40% or higher. But as I talk to other people, it does vary from entity to entity. Size is certainly a component of that, as well as plan structure. There are so many nuances in how plans are designed that it's tough to do an apples-to-apples comparison.
Well, do we do best practices maybe?
We do
we
best
take
practices.
ideas from others to see if
Certainly.
it'll work? Okay, good.
Certainly. From a healthcare perspective, we want to be competitive.
Yes.
So our first avenue of looking at competitiveness is to look at our plans to see if they're competitive, both in cost as well as services that are provided. But there are a lot of nuances once you get into plan designs that are very detailed. But we are always looking.
Haven't always
at
been at that percentage.
the 94%.
Yeah.
No, it does fluctuate, and if
Yeah.
you
So I'd like to, so the public knows that it isn't something it's been every year. It happens to be the timing on this, and which we don't have control over. Only one person does, and so anyway.
certainly it hasn't always been that high, and we've actually got a positive trend, which I'll show you in a moment here, that we think hopefully
All right, Wally,
is.
to go on.
Thank you
Okay,
very
go ahead.
much. Thank you.
A few other things on the renewal. Cigna is also continuing to support our wellness efforts with $50,000 that's targeted at wellness. That's a key piece. And then also the inclusion of our employee assistance program at no cost. So those are two features that have been included. Now not sure what happened there. Yeah.
Well, there's someone that's hiding somewhere, and they just changed
Hey,
it because it happened to
somebody's-
Chief last meeting. Remember?
It's got a little itchy trigger finger there.
Yeah.
But, just a quick look at our medical loss ratio. This chart here shows kind of a year-over-year model. So the green line is the year before last fiscal year, and the blue line is the current fiscal year. I think what's two things that are important as we look at our trend. If you look at the green bar and you look at the months of February, March, April, May, traditionally, even looking back a year beyond this, we have run very high in those months. And we're starting to see a positive trend. If you look at our last 4 months, we've been under 80%. We hope that's a trend that's beginning to develop and will continue on. We see it as a trend. That red line, is that 83% marker where we'd like to be. So staying under that becomes very important. Establishing a trend like you see that we have in the last 4 months really begins to be a trigger for how we look at self-funding and whether we begin to move in that direction.
Joanne?
And Lyman, you might add your other great chart that you had that shows the wellness clinic. I mean, that's about $400,000 worth of, fees that would have gone into the insurance if we didn't have the wellness clinic.
Absolutely.
So,
Absolutely, and I'll get there in a moment. I think that's very positive. That shows the power of the clinic in terms of how we can offer services in a much more cost-effective manner. What we're proposing is status quo, staying with the same plans that we have. It is a 7% renewal, $497,000. Other components of our insurance, our dental insurance, we're going to see a 5% rate reduction in dental with a enhancement of adding dental implants to the plan. So that's a positive. We are also, through our RFP process, we are bringing on a new vision carrier, Avisus. Avisus is a Arizona-based company. They're located in the Phoenix metro area. We feel very positive about that in that we're going to be able to tap into the resources that they have more readily versus some of the other bidders that we compared to. They have a broader network, so that's something that we're looking for. And I think that support really fits our model. We do leverage a lot. We're having Cigna in here at our wellness meetings. We're having them here on a monthly basis to really dig in and review claims. So we're asking a lot of our providers, and we'll be asking the same of Avisus. We will also have a new life insurance provider. The Standard will be our new provider. With this new contract, there will be an increase in the guaranteed issue for our basic life insurance. We're going to be moving from a guaranteed issue of $50,000 up to $100,000. For our supplemental, we're going to be raising the maximum on our supplemental to $300,000. It's currently at $200,000. And then we're also going to be bringing down the rate about 20%. And that's roughly about $13,500 a year savings for the city. So the one thing that I didn't mention about Avisus, there is going to be a slight increase in premiums for our vision. Currently today, employees, they pay the full price on vision. So as we look at financial impact, this is really a scenario looking at, we kind of look at the bottom of the pay for our employees to see what that impact is, the bottom of the pay scale. So this would be impacting an employee. If you look at the blue bar represents the increase in health insurance costs for the employee, as well as increase in vision. The gold bar represents what we would project as a salary increase based on the recommendation that you'll see in a moment here. And the gray bar would be what they would net based on the increase in health costs. So in all cases, the employee would be taking home more pay.
Joe?
What's the average salary that you're using on that plan, that 47? Are you gonna show us that a little bit down the road?
The average in this scenario,
Yeah.
we're looking at our lowest paid employees. So I don't have the dollar, but I could certainly get that to you. But we're looking so that we know that from there up, everybody would stay positive as well.
The reason why I'm asking is try to convert it to a percentage, something I'm used to
Percent
seeing
increase.
instead of just a dollar, so I kind of an idea what we're talking about here.
I can certainly provide you with that.
Okay, thank you.
The next scenario just looks at the 1250 HSA plan. Again, in all cases, positive. And then the 2400, same as well. And to move on, just to talk a little bit about the wellness clinic, really I wanted to focus on costs of service because I think this is a key aspect of our...
Before you do that,
Yes.
just give a little scenario for people listening, maybe first discovery we have a wellness clinic. Can you just kind of give a basic
Sure.
what our wellness clinic?
Sure. As a employee benefit and as a cost containment measure, we have a employee wellness clinic, a clinic that's open to employees. Employees can visit the clinic for primary care services. We also handle occupational services through the clinic, and that occupational aspect of the clinic is something that we're continually looking at growing because all the savings through the occupational side are direct savings to the city. The clinic offers a variety of services. We have a staff of 3. We're contracted with on-site care. On-site care is also the provider for the Mesa Clinic, and they're certainly involved in aspects where other cities are looking at growing or entering into a clinic operation. We offer 28 hours a week. So the clinic is open 28 hours a week for employees to visit. We have 2 times a week that they're open during later hours of the evening so that employees can also bring dependents, but the clinic is open to anyone who is eligible for our health plan.
Thank you.
The look at this chart right here really kind of it gets into the cost of services. If you look at the red bar reflects what we pay for the clinic operation. It's $80,000 per quarter, $320,000 annually. If we were to get those same services in the medical community on an individual basis, and employees would then be using their insurance. Essentially, for the same services, it would cost $424,000. That $424,000 would be a savings, or there'd be a savings of about $104,000. But the real savings here is if they got that in the medical community, that $424,000 would actually go on our medical plan. So when we look at that loss ratio of 96%, add another $424,000 onto that, and we're well over 100,000, or excuse me, 100%. Thank you, Larry. Yeah, it's always good to have the numbers guy next to me. But that would be well over 100% medical loss ratio. And again, what drives our cost increases are experience. So by keeping that $424,000 off of our plan, we're helping drive costs down. And we feel like we're providing quality care for our employees at a more cost-effective way of doing it.
Yeah, Sherilyn.
Would you explain that to me again? Because did the $320,000, did that go in? Was that paid for by medical insurance?
No, that's paid for by the city. So we're paying for the clinic operation, and I guess.
So aren't we keeping $424,000 off of our medical?
We're keeping the full $424,000 off of our medical,
And we're keeping people in work.
Yeah, no, that's what was confusing me.
Thanks.
And so that's the point of it. That people can leave and go to the doctor, come back to work in many cases.
No,
so.
But I was confused. They were saying it was $124,000 keeping that, or $104,000 keeping it off of our medical insurance.
The full
and that's what
$424.
wasn't computing.
Absolutely, yeah, great. I think for the clarification there, because that is in fact the key point here is that we're keeping that $424 off of our plan. So moving to compensation, first talk about our non-sworn, and just to revisit council interests going back, looking at our non-sworn, looking at moving our non-sworn closer to market, eliminating steps. So all of these things are still intact and are driving our compensation proposal. If we look at our proposed salary increase, we're proposing a salary increase of 3.25% for non-sworn. Looking at this and just breaking it down in terms of how that increase would be distributed. If you recall, we went to a quartile model where employees in the first two quartiles were giving them a larger percentage of increase to move them to market, which is the midline there quicker. Once you get to market, then those numbers come down. So essentially, what we are proposing is a salary increase of an average of 3.25. As we look at what this does and whether we're achieving our goal to move people to market, you can look at the numbers here. So, for example, in quartile 1, we currently have 129 employees that sit in that quartile. Once we would apply a 4% salary increase, we'd have 75 employees left in quartile 1. So those employees are moving closer to market, moving into quartile 2. We have employees in quartile 2 moving to market, some beyond, and so on and so forth throughout the plan.
Lyman, this is going to become important when we start talking about the implications of the MOU. On this particular slide, and this is probably more of a statement than a question, so just bear with me on this one. Market in this quartile is where we want the employees to be. Period. Correct? We want to get them there.
Yes, we want to get them there. Correct.
Okay.
Yes, sir.
Market also reflects the midpoint of these ranges,
That's correct.
which when we get to the MOU slides, that's where this slide and the rest of them start to diverge. And I think I'm laying the groundwork for that discussion as we roll down, because obviously I've seen it already.
Yes.
But I think it's important for people listening to, I think this is probably the second most complicated concept behind levy versus rate. I mean, very, very honestly.
Behind? I don't know. Before. Oh, yeah.
So I want to make sure that while we're on this slide, we talk about it, because when we start talking about percentages of increases, et cetera, they look entirely different. So for us to have a statement right now about our council, I don't want to call it a policy, but really our direction that we want our employees to be at the market. And in this slide, market is the middle. In the other slides, market is not the middle. And I think that's the important.
Absolutely, very important point. And there is a distinction between the two groups. And you've hit the nail on the head. Market for our non-sworn, there is a broader range, and the expected market position for anyone who's non-sworn is that market midpoint that we're trying to move them to. So we are having success in moving people there. Also on top of that, this is work that we've been after now. This would be moving into the third year of moving people to market at a accelerated pace.
Okay, and then the follow-up question to that then is, these quartiles are not steps. We've done away with the steps. We did that a couple of years ago.
That's correct.
And moving from steps to quartile takes there's also a bigger leap, or a couple of steps that you're going to take 2 stairs at a time instead of 1 stair at a time in order to move that.
It does allow that flexibility to move people. When you're on steps, you're moving at whatever interval those steps are at. This allows us to have more varied increases and allow us to do things like we're doing here to move people in the first quartile a little quicker than we would someone in the second, third, or fourth.
Okay. And finally, on the market, we have done a market analysis of all of our non-sworn, non-represented employees.
Yes,
That gets us
virtually
to this.
every, and I say with the caveat, we don't. Some positions we don't have matches for,
Right.
But for those that we have matches for, we feel like we've covered the vast majority of the positions in the organization to give us the appropriate market data to see where that midpoint is. And I guess another distinction is the range becomes key. So if I back up a couple of slides here and just look at the range, beginning of the range 14.83 versus the end of the range 22.03, that is what we are going out and assessing in the market to make sure that we are paying our people appropriately. Then the work becomes, how do we move them through the range? So we have adopted a plan to move them at an accelerated pace through the range, but we are testing those ranges to make sure that they are competitive within the market. Okay? So, segue. Thanks for the segue. Now we're moving into the proposed MOUs. And we'll start with the Police Officers Association. And we'll look at these following elements. We're going to look at the covered positions, those positions that are covered per the MOU, or meet and confer ordinance. We'll talk about the market data. We'll look at the components of the proposed MOU, results of the contract, and lastly, the cost of the contract. First off, the covered positions per our meet and confer ordinance are police officers and police sergeants. Little bit of background there as to what those various roles are. We have 73 police officers and 13 police sergeants that are covered. Getting into the market data, and there are three distinct elements of this chart here that I want to talk about. The first being the average tenure, and that's something that we're looking at that becomes very important as we assess our police officers versus police officers in other organizations. We want to make sure that we are on par as it relates to average tenure. You may have organizations out there that may have less tenured staff, and you may have some out there that have more tenured staff. We are applying standard deviation there to get to the average, what we consider to be the actual average. So 10.1 years would be what we would consider to be the actual average in tenure. The next 3 points, the minimum, midpoint, and maximum, are the points on our salary range. And that's another element of it. We're looking, and again, we're testing to see that our salary range is competitive in the marketplace. So as we look at this, as we look at those first two elements, with regard to average tenure, we're at 0.84 of the market. So our tenure is younger than the market average. If we look at our salary range is pretty much on par. We're a little higher, slightly higher than the market average. We're at 102% at the minimum point, 102% at the midpoint, 101 at the maximum. So that's a look at whether or not our salary range is competitive. The data is telling us that our salary range is. That last column is where we have an opportunity.
That's the story.
That's the story. What this is telling us, and essentially this is our actual average salaries of our police officers. Our actual average salary of a Goodyear police officer is $58,511 versus the average within one standard deviation of $68,000. So while our range is competitive, our people's placement within the range is not competitive. We are behind. We are at 86% of market. So we have work to do with our police officers. If we look at our police sergeants, you'll see similar data. We're at 88% of market with our police sergeants. So, as it relates to the components of the MOU, we have come to a tentative agreement with the Police Officers Association for a 3-year memorandum of understanding. It includes base pay. It includes a lump sum for maxed out employees, employees that are either at or above the maximum of the range. And it also has a revenue trigger. And essentially the revenue trigger, what the revenue trigger does, and this becomes important as we talk about where we're moving the organization. So we know we have a need to move our police officers to be competitive with the market. The revenue trigger gives us the opportunity to apply more funding in year 3 of the contract. The way the revenue trigger works is if we exceed revenue collections by 5%, we exceed them 5 to 6%, there would be an additional percent of salaries that would become available. If we exceed it by 6 to 7%, an additional 2%. And if we exceed it by 7 to 8%, an additional 3% that would become available to address salary issues at that time. And I'll talk a little bit more about that, so hopefully there's clarity there. Before I get there, though, let me just kind of talk about the base pay and the elements of the MOU. First off, there would be a front-loaded increase of 7.5% in year 1. This is an average increase of 7.5%. Year 2, an average increase of 6%. Year 3, an average increase of 5.24%. And in year 3, it also includes a 5%. That 5.24 includes a 5% market adjustment. There's a note there. They're going to be moving back to steps. In year 1 and 2, similar to what we're doing with non-sworn, we're removing them from the steps so we have more variability to move people through the range and catch up in a fashion that moves them.
Wally, should this proposal go forward, where would, for the front load year 1 of 7.5% increase, where would they put our police officers in the market?
If you can give me a moment, yes, I'll get to that.
All right, then I'll just wait.
I will. I'll show you where they move and give you a sense of how they're moving.
Okay, thank you.
Here it is, right here.
Oh, thanks.
So,
I should have turned the page, huh?
If you look at the gold bar is essentially our City of Goodyear police officers on the left-hand side and our sergeants on the right-hand side. It shows their movement. This also assumes that the market for police officers continues to move at a 5% rate. And for our sergeants continues to move at a 3.6% rate. And as you can see, we make some progress, but we still don't catch up. And this is why we've included that revenue trigger. That revenue trigger in that final year of the contract gives us the potential to apply more should the market move as we have assumed in this scenario here. So there's still work to be done. Again, we're making some progress, but we're still not catching up.
Sherry?
Yeah, I guess that's one of my concerns when I look at those lines. I don't see us moving. I mean, we have one little bump there, but then it comes back to about the same distance. I just don't see us making any progress. So I'm not sure if that's a 3-year plan. We're right back where we started.
And we are moving slightly. So we've got a 10% or $10,000 gap when we start with our police officers, and we end with about it's not much in terms of closing the gap, but the gap does close. The gap closes. I think the revenue trigger becomes the key for the opportunity to do more. One of the reasons that we moved to a 3-year contract is because that gave us the ability to do more over 3 years than we could have done over 2. So that was an opportunity to do more. In year 3 of this contract, should revenues come in higher, then we may have the opportunity to do a little bit more.
And has it been standardly about a 5%, the market moving at about 5%? Has that been kind of the current pattern?
That's been, and what we know, and even what our market data is telling us, and we know from our conversations with our benchmark cities, many cities through the economic downturn continue to move their salaries. Some that didn't move have gone back and have made adjustments since then. So the market essentially has moved. We have not moved with the market. So that's the reality of where we're at today.
Joanne?
Well, and I appreciate you bringing that up, because I was going to say, this is one of the most telling of the slides right here, showing that gap and how that gap continues. But the fact that we went 4 years without any increases, while you just stated other cities were continuing to give those raises. I think for our public, this just really, outlines where we are and how we're still, trying to make it up. But we're not going to be done. I mean, that's just,
And a point of clarification, there were some increases given within that 4-year time span. However,
but it wasn't a.
No.
Yeah. No. Okay.
Bill?
I know you've got a slide, but I've got 2 things. Number one is we keep talking about the market trigger, and if there's more money, we're gonna give it back. There's also a market trigger that if it doesn't grow,
Indeed,
there's a protection for the city. I just want to get that, and that's coming in a future slide. But we've heard a number of times already. There's more money coming later, but I want to make sure that everybody understands that there's There's also protection. on the
Absolutely. There's a
inside.
protection for the city. If we miss our revenue projections, that gives the city the ability to have a wage reopener to talk about adjustments
Okay.
with both associations.
So my second question then really relates to, this is all done through the meet and confer process. If we did not have the meet and confer process in place, our historical, the way we've always treated the market, et cetera, we would still be making these kinds of adjustments regardless of the MOU. Is that an accurate assessment?
That's an accurate statement. Our goal is to have every employee at market. So that's an accurate statement. The market data is driving what we're trying to accomplish here.
And it does, but I'm just, I don't want anyone to draw the conclusion that, well, because we've got MOUs, now we have to do this. We would have been doing this anyway. And if I remember correctly, it was in the 2010 budget presentations that their last big gap was identified. I'm looking at Larry because it would have been just before I was elected to my first term. That's the only reason that I remember it was 2010. But there were no MOUs in place. We made large adjustments to get the sergeants to a particular place. We made adjustments to get the deputy chiefs in the fire department to a particular place, battalion chiefs, et cetera. It was 10, 11, something.
I think it was 10, 11.
10, 11, yeah.
Yeah. So we've historically done this already. And for whatever reason, police and fire are always falling behind. And I think, if I can just editorialize for a minute, the reason for that is most of them fall under MOU in the Valley. So most of our comparable cities, they're marching through, which is why they don't lose their wage increases when the downturn happens. So not only are we catching up from our freezing of wages, but now we're behind. Is that kind of where we're at? I'm trying to get to, this would have happened whether we were in an MOU or not.
Yeah, and I guess I go back to me, you have certain positions that sometimes all our positions are market driven, and some of them may have a market and or a field that drives movement faster than others. Police and fire happen to be one, and I think that partly, certainly MOUs, many kept moving for various reasons. I think part of it was because of the MOU. Some have gone back up and caught up, and I think all these decisions are certainly they're data-driven decisions based on the market studies that we all are looking at. So,
Okay, thanks.
Joanne?
No, I'm
Molly?
I just want to feel that we are doing the best we can do to try to catch up for these folks, because it costs us more when we lose our officers who go to a city that pays more, because then we have to train someone. We have the vacancy for probably a year, and it ends up costing us a lot more. But I really want us to be a city that is fair and that is in the market, and especially for our police officers and our fire.
Just looking back since I've been on 205, I have to say it's finally coming in a little bit better balance.
I hope so.
It was not that in 2005.
Yeah.
It just wasn't there. So for whatever reason, I never knew what the reason was, but
Yeah.
I think that we've moved it in the right direction. So.
I hope so.
okay, the few other components of the Police Officers Association MOU will be lump sum increases for employees at the max of the range. This is the cost for each of those years. The cost does drop in that final year due to the market adjustment. And then, as mentioned earlier, with the revenue trigger, the Councilmember Stipp was alluding to that last bullet there with the management option for a wage reopener if revenue projections are not met. So we are trying to cover both ends of the spectrum there, and hopefully we're in a position to apply more, and if not, we have the opportunity to do what is necessary. The cost of the contract, looking at it year over year, and what you see here in the first bank there with the ongoing, you've got salary, wages, benefits that are associated with, that are percentage-based benefits, your total, and then the last three columns there, the lump sum aspects as well as the benefits associated with those. We're looking at about $535,714 in ongoing cost and just under $20,000 in one-time cost. Moving on to fire. I'll cover similar data here with fire, starting with our covered positions. We have 3 covered positions in fire. We have our firefighters, we have our fire engineers, and our fire captains. 42 firefighters, 17 fire engineers. Very briefly, just a quick overview, fire engineers are the ones that drive the trucks. They are they take care of the apparatus. Our fire captains usually are taking command during emergency responses, so just a little bit of background on each of those positions. Getting into the market data, we have our firefighters, and we're going to see similar data again. This is same chart. If you're looking at our average tenure, we're right there with our benchmark cities. We are in line with our salary range, but when we look at actual average salaries, we're at 88% of market with our firefighters. Fire engineers are a little bit better. We're at 95% of market, so we're doing better there. You will see that the salary range there, we've got some points of concern with our salary range, so there will be some cleanup as we move through the 3 years of the contract there, just to make sure that our ranges are competitive. There's no financial impact with any of those changes. And then with our fire captains, we're at 96% of market, and our range is fairly close to market there. Wow. So the components of our...
Okay, thank you for putting the percentages, but it just shows how how low our PD is in market compared to fire in market.
That's a great observation, Councilmember Campbell. And one thing that I'll say that has fueled some of that, we haven't had the turnover in fire that we have in PD. So we have a lot of new officers within PD that were brought in and caught in the window of time where we weren't given raises. So there's compression within PD that there isn't within fire. There's a number of issues that we are working to address in that PD MOU that we don't necessarily have to address with fire. Although, if you look at our competitive position within fire, we have opportunities that we need to address.
Yeah, because fire is 88, 95, and 96, and PD is 86 and 88.
Yes, at both ranks, all ranks there. So.
I know.
Go way back.
If you go back,
I know.
you understand why.
I know. I know.
So the components, again, a 3-year contract with this group. Base pay. We have 2 other pay components for our fire, for fire, and then we also have other components that we'll talk about. VIBA, which I'll spend a little bit of time talking about. We're going to restructure what we call move-up pay, committee language, and then the last 2 really don't have any monetary issues. The others represent either savings or cost movement, so I'll talk a little bit more detail about those 2. First off, with base pay, again, we have a front-loaded increase of 6%. In year one, that's an average increase. Year two, 4.3% increase, and year five, a 5% increase. Year three includes a market adjustment of 3%. So fire, as we begin to look at the results of the contract on base pay, you can begin to see the movement. This reflects a little bit better in terms of our ability to be able to catch up to market. We're getting very close with our firefighters in year three, and we actually surpass the market a little bit with our fire engineers. Catch it in year one. Year two, we're there. In year three, we surpass it a little bit. And with our fire captains, similar to our fire engineers, we get very close year one, year two, and surpass it slightly in year three.
So are we going to be at the top of the range of everything in 3 years? We're going to be leading the market?
I wouldn't say that we'll be leading the market again. That's the market average.
Okay.
So that would be the market average. So there will be some higher than us, some lower than us, but we would be right
top.
there at the market average.
Wow. Okay.
Other components, the pay components, lump sums for our maxed employees, and then specialty pay. There's two elements of specialty pay that are included in this MOU. One is hazmat pay. Currently today we have a two-tiered system. We're going to be moving from, or proposing moving from, a two-tiered system to a one-tiered system with a specialty pay of $1 versus a market average of $1.02. And for paramedic pay, moving from $2 to $2.25. The market average there is $2.21. So we'd be slightly above the market average on paramedic, but slightly below on hazmat pay. The cost of each of those components are showed in that last
Yes,
column there.
Part of the PD MOU does not say specialty pay for the SWAT team, right?
That's correct. Is it part of the MOU?
Because they have specialty teams too.
Right.
They're not paramedics, but
they're not paramedics. Right. That is correct. And it's not currently part of the MOU and not something that we're addressing in this MOU.
Okay.
It is or is not?
It's not.
It's not.
Okay.
Continuing on to the other components.
Mayor.
Yes, Bill?
Lyman, on that issue, that does not mean that there's police officers who are not getting specialty pay, though. They are getting it via policy rather than via MOU.
Correct.
Okay.
Great. Yeah, thanks for the clarification.
Where's the policy?
I
don't remember seeing that, Bill. I don't know what you're talking about. I'm sorry. You've opened up Pandora's box.
Oh, no,
now,
it's
so, I don't
probably
understand
Policy
it.
200.
Policy 200, yeah, Policy 200.
Which is the compensation policy that we govern. And the only reason that I know this is because of my past. But there are a number of things that are not included in the MOU that we still do by policy for our employees.
That's correct. Another example of that would be tuition assistance. So that's contained within policy, but it's not in the MOU.
But it could at some time be put in their MOU if they so requested that, rather than having it.
Yeah, if it's a
covered by
point
200.
if it's something that we that's approved to discuss in the meet and confer process, and they so desire to bring that up, certainly it's something that it may result in something being moved to the MOU.
Okay, and none of the specialty designation for fire is being covered under Policy 200, but they have elected to put that in the MOU. Is that basically what you're telling me?
Right, actually was covered in policy, but
now they pulled it out.
We've moved it to the MOU.
Okay,
yes,
got it.
These two items here, the hazmat
pay
and the medic.
Okay, all right, thank you.
So a few other components here. We have the VIBA account. The union intends to create a VIBA, a voluntary employee benefits plan for retirement health care. So they intend to create this. This would be a fund that they would create, that they would manage, trust account. The city has agreed to put in $12.50 per member, per eligible member, per pay period. These are monies that we would be moving from the uniform allowance to the VEBA account. So there is no financial impact to the city. It's a movement of about $26,000, almost $27,000.
Joanne?
This is what they would like. They would like to move the uniform allowance to have this account rather than the uniform
Have it
allowance.
in uniform allowance.
Okay.
That's correct. Move up pay. We're looking at changing the move up pay. Currently, today, we have a move up pay clause that if we have a member moving, they would get a minimum of 5%, they would get either the greater, either 5% or the bottom of the range to the position that they're moving up to. So if we have a firefighter that's moving up to captain, potentially you could have a step 2 firefighter moving up to the bottom of the range of a captain, which is a significant increase. One of the things that we looked at and we worked through the meet and confer process is a change to 5 or 10% based on how many ranks you're climbing. That's more consistent with the market. It's an estimated savings of about almost $29,000. And another component of that is to include a 4-hour minimum. So in order to receive move-up pay, effectively this is how they already operate, but in order to receive move-up pay, you need to be in that position for a minimum of 4 hours before you're eligible. I spoke about the revenue trigger. The revenue trigger is consistent with what we talked about with the police department. And the last two components are really updating. This is more language than anything else, but our committee language to reflect, better reflect what we're currently doing with the OCP, with our executive committees and other committees that we have. And then the last element is allowing the donation of a floating holiday to the Labor Relations Bank.
Joanne?
So this revenue trigger based on revenue collections. What revenue collection are we speaking of specifically? General fund? Are we speaking of sales tax? What are we speaking of?
The wording, it's the general fund ongoing revenue. So it excludes the construction sales tax. So it would be the comparison of the budgeted ongoing general fund revenue to the actual
and what was
ongoing
the
general
percent
fund
increase
revenue.
that would trigger it?
If it exceeds by 5%?
Exceeds 5%.
If it exceeds 5% of what we are stating is we're projecting currently.
Okay, go ahead.
And finally, we have the
That
cost.
goes both
Sorry, Bill?
directions.
Yeah, it goes both directions, but that trigger is based on your estimate, right, Larry?
That is absolutely correct. That trigger is based on our estimate. And if you remember in our budget policies, we talk about a 4%. That's our target. And that target really gets narrowed quite a bit when you look at, we really don't like budgeting and only coming in at less than 100% because that creates a shortage of funds. So we're really talking, we already have a policy that our target ranges from 100 to 104% of what we're budgeting. This is saying if we hit 105%, that's when the triggers start.
So other than your honest demeanor, there is nothing that prohibits you from overestimating the revenues, is there?
We are actually going to attach the revenue estimates for this year's budget. If I recall, we talked about attaching them in as part of the agreement so that you have that baseline defined.
Yeah, okay, so now I've got more of an issue with that because if we're talking about revenues today, and we just had this discussion an hour ago about the property tax,
Yes.
there are things that affect our revenue projection that we don't know today what's going to happen 3 years from now. Now, I realize there's a lot, economics and all the rest of that, but that seems fairly dangerous from our perspective. I don't see a lot of protection in it from the city's side.
Okay. First of all, if our revenues come in range, anything below 104% of what we're projecting, that market feature does not
Right.
kick in. So it would be a circumstance where our revenues came in higher than what we've projected that has these triggers. And I believe those triggers allow for a 1, a 2, or a 3% increase only. But we would have the revenue to pay for it because of those higher revenue estimates. If those revenue estimates were to come in that were to create other expenses going up, that's where we would be at risk. But over a 3-year period of time, that risk is considerably lower.
So if development takes off and our development and our construction sales tax and our development fees and all that just start pouring in, and I don't want to complain about that, so I'm going to say that out loud. But if they start pouring in and we're off, and those are one time, doesn't count?
The construction sales tax does not count. The development-related revenue would count in that. But just to give you a little comfort, a little bit earlier when Lori was showing you the revenues, the development-related revenues in that, as I recall, were $4.9 million in our estimates today. At the very peak, we were about 15 to 16 million. At the very peak, that is at building permit levels probably 5 to 6 times what we're at today. So that type of growth would generate a lot of other revenues triggering. That wouldn't be the only item that would be triggering it. And that's where I really don't think that in that context that would create an unmanageable burden upon us.
Okay.
Joanne?
Okay, so scenarios, all right?
Mm-hmm.
Next year, the Census Bureau, state shared revenue, is that part of that increase?
Yes.
Is that already accounted for?
No.
No.
So that would be part of the potential revenue growth that
Puts
would,
them in
would
alignment?
trigger it.
Would
Yes.
trigger it, okay.
But it's the total that has to be there. Keep that in mind, the total that has to be there.
And it just, throwing this out here,
Right.
grocery food tax goes down 0.25%. How does that come into effect?
It's the total revenue. This talks about the revenue that's collected.
But that's still part of, so it's still part of the picture, though.
But if it went down, it's not part of the picture, if you know what I'm saying.
Well, I know, but is it to the opposite thought is my thinking about it.
You saying to the benefit?
No, to the detriment.
At that point, it would be, if you will, to the market, or to the trigger, that would be a reduction, that would be a negative to the trigger.
I'm just
Yes.
trying to understand all scenarios of how this plays out for the future. So,
Bill?
Yeah. So I guess the other half of this thing that I'm struggling with is you go back 2 or 3 slides to where your lines come together. There is no reason why there's an across-the-board push on at least 2 of these 3 position ranges in fire for a reopener to do something on salary. When this contract ends without any other adjustment, we're already pushed over the market on the engineer and on the fire captain. On PD, we're running parallel and we're never catching up. So that makes sense to me. But why is it included in this particular version? Because, and quite honestly, if we look at the numbers that I was shown earlier today, if the census comes in the way we think it is, we're potentially looking at $2.4 and some change million in new revenue. Well, if we're not putting that in the projections that are going into this contract, we can already just assume that there's going to be more money doled out in the third year.
So one of the unknowns, obviously, is what happens over the course of 3 years. If market movement looks like this, then we land where we say we're going to land. But a market survey would drive applying more money to the schedule. So applying more money to salaries would be contingent upon us having market data to support that. So if there's no market data to support that, we wouldn't just be applying money.
Sherry?
Okay, my question is, why did we use a 5.0 annual market movement for the firefighter and a 2.5? I don't know if that's why those lines are coming together. It's a smaller adjustment.
It is a smaller because the range, the number of steps in between are smaller. So the opportunity to move over that period of time is lessened because of the shorter range for fire engineers and for our fire captains versus firefighters that have 8 steps between, and the likelihood of movement at 5% is there.
And that's consistent with the other cities too.
Consistent with the other cities as well. Yeah, it varies from city to city, but they're all at the fire engineer and fire captain level. They're less.
I think we're kind of comparing some apples to oranges when we have the 5% and then we're looking at 2.5. So I think that's kind of a.
Yeah, there is an adjustment there that I think speaks to a realistic market movement over that period of time. The other issue there, because of the lessened steps, you get people to the top of the range, so the movement again isn't as significant as it would be for firefighters who have that broader range, and we would anticipate greater growth from year to year.
Joe?
If I heard you right, and it's my understanding is there's no guarantee on even if there's money available unless the market dictates it. So, for example, if the police have that big gap and there's money available, then you will use to fill it in. But if the market on the fire is just the opposite, then you would not fill it in. Is that correct?
That's correct.
All right. Follow up. Another question. It has to do with the benefits, and I hope I'm not off on this one, but we used to have a couple things for the non-sworn. One was, and I forget what level it was for sick leave. If they had excess sick leave, they could roll some of it over into an HSA account. I'm talking about for non-sworn. And then college reimbursement. Can you just tell me what those are for the non-sworn right now?
For non-sworn, we have a what we call a, for police officers, we have.
Well, I'm going to get from police and fire.
Okay,
I'm just talking about the general non-sworn employees that aren't covered by these two MOUs.
So you have your tuition reimbursement for non-sworn. We just changed the policy there so they can get monies up front. Once they have entered into an educational program in an accredited institution, and they have a maximum of $2,000 annually that they can receive.
Okay.
And that's non-sworn.
Okay.
Yeah.
So yeah.
Vice Mayor, if I may just add on to that, the HSA for non-sworn, that was done back, I want to say, in the mid-2000s.
I know.
That is not an option for non-sworn at this point.
So it's not something that you're putting out there right now. So if they have excess sick leave, it just okay. All right. Just to throw this out for sick leave, and I know some have been looking at it. There's been some companies looking at a combine to, I wouldn't say incentivize people coming to work sick, but the same token, I remember when the budget manager, I was, to be honest with you, frankly surprised the number of people who've been here for years that had no sick leave. Okay, years. And I don't know how you address it. You're the expert on there, but have you ever looked at maybe making it a combined effort, a certain number for both sick and vacation to encourage those that, and again, I don't want to encourage anybody to come in to work sick. That would be the wrong thing. But to encourage those that don't use it as a, what's the term I want to use? Health day, or what's the term?
Earn and burn.
Yeah, something along those lines, that, you reward those that don't do that. And I don't know where the happy medium is, but I would like the city to just kind of look into that, because, again, I was really surprised the number of people that had no sick leave that had been there for a lot of years. So,
Yes.
Just for the women, it's much harder if you're a woman to take maternity leave. I was a government employee when I had to save up. I couldn't take vacation or thing for 2 years so I could take maternity leave. So before we do that, we got to make really careful, because if you lose it, you're going to lose a lot of women in your workforce.
no, I'm not looking at losing it. I'm looking at from a perspective, and again, the city has short-term disability.
No, you can't. It doesn't work for maternity that way.
You sure?
It isn't
No.
a disability.
No. I know it's a choice, but it's my. Am I off on this one?
You can get FMLA, but you can only.
No, I'm
use
talking
so
about
much.
I'm talking about our short-term disability policy.
Or maternity leave.
And typically, unless there's a medical condition, you
Okay.
probably wouldn't be.
Doesn't qualify.
Yeah, you
Okay.
probably wouldn't be getting there. So in most cases, we're talking about uses of sick leave.
Yeah, and I'm not. Don't get me wrong, Sherry. I'm not talking
I just
about
wanted
the.
to don't forget that little
No, I
prong.
no, I
I guess the
understand.
women going, uh-huh.
No, I don't understand. No, I understand that. What I'm looking at, again, like I say, when I was surprised the number had 0. So they take mental health. I guess the term is mental health day. Okay, is there a way to? And again, you're the experts. I don't know if there's a way of managing that or reining that in, but I don't want to obviously impact anything that Sherry's talking about as well, because some people just have to save up. That's save up. I'm looking at the ones using it that necessarily don't need to use it. That's what I'm talking about. So
I agree with you. I just wanted to bring that up to just keep that in mind, because it does take, to get enough for 3 months, it takes
know.
years of not doing anything.
I know. Went through it at my end at the other side, so understand.
And the final slide there is the total cost for fire. It's about $100,000 less on the ongoing side for fire than PD, $454,000, and then or I guess I'm looking at the final year of the contract there. So you can see the each year, 631,444 for year 2 and 454 for year 3.
So,
Joanne?
thank you. So, Lyman, altogether, are we looking at about, for this next year, 2 million sworn and non-sworn across the board? Is that about close or more?
Close. That's pretty close, yeah.
Pretty close.
631 for fire, about 758,000 for our non-sworn, and then for PD, I can back up to get to that number. 600,000. So yeah, we're right about 2 million.
And then
I have a question. If, for example, retirement costs or other healthcare costs continue to go up, when we're talking about the trigger, those would be expenses against any revenue, or how does, even if the expenses go up, it still doesn't? I'm hearing a no. Okay, so even if the personnel expenses go up, it's just the straight revenue.
this is $500,000 with health insurance right now.
I think the key, Sherry, will be the fact when you talk about the revenue, they has to justify the gap. So even if the money's available and the market shows that they're over or equal, then there's no reason to apply it, as opposed where PD, it looks like they're never going to catch up. So
That one's tough.
Mayor. But I think the caution that we have to have with this is if our revenue projections are up, or I'm sorry, if our revenues exceed our projections and our expenses exceed our projections as well, we still have to provide the percentage of increase by the contract. So we could be off by $2.5 million on the revenue side, and we could be off by $3 million on the expense side, and we still have to come up with additional money to fund the increases at the end of these two contracts, assuming that the market and blah, blah, blah. But is that correct?
Yeah, I guess, and if I understand you correctly, revenues might be off, and you're talking about year 1, 2, and 3 of the contract. We would still need to fund those increases based on the MOU.
Yeah. So if we're off on expenditure estimation,
and that
the water plant blows up and we're into it for $10 million that we didn't expect.
Right.
What is your suggestion? What do you want us to do?
Well, I don't want to negotiate the contract sitting here at the table. So I just want to point that out, that we're going to agree to an MOU that has a clause in there that we may not be able to get out of, and that's going to have a potential long-term implication for us. And I'm personally very nervous about that, and I don't want to say how we're going to fix it. I didn't get to negotiate it. I don't get to tell you how to fix it.
So what are we supposed to do now that you brought it up? They have to go back and redo it, or what?
I don't know.
What can
Somebody
we do?
tell me. I don't know.
How much assurance can one get on budgets? Okay, I mean, let's go back to the whole premise of a budget.
Yeah, the budget.
We didn't have assurance. The bottom fell out during the downturn, so I don't know. So as
both
economists, there has to play into something on this.
and both MOUs have a fiscal crisis clause contained. So if the
Oh,
bottom
good.
drops out, there's that opportunity to come back and make adjustments.
Physical crisis, then.
Yeah, the fiscal crisis clause within the MOU. So that
I don't know that that's.
I'm not sure if you're talking about something of that magnitude, but
So now we have some people questioning. They don't know about that. They don't think that's. Tell us the strength of this, and what it means to the people that deal with it every day. Crisis.
so from I guess, and I'll field it, and I'll look to the city manager here as well. But should we have a fiscal crisis, that allows us the ability to come back to the table and to ask for and or make concessions via council approval on those kinds of.
Downturn. Didn't we already do the downturn that came in with everybody in the city hall? Am I right? Did we had to agree on everything we promised? We paid during the downturn when we didn't have any money and went away. What happened?
During the downturn, if you're talking specifically about compensation, things were all frozen at that time. That was pre-MOUs. Now, one opportunity we do have is to tie the expense side to this as well, but that is absolutely not part of the current MOU that'll eventually be adopted by council. We're also not noticed in for executive session for tonight, so there are some things that we can look at outside of this discussion, and there may be an opportunity for us to come back to you, which would be in e-session or another way.
Also, it's my understanding, budget law, number one, whatever's budgeted from an expense, should not be any surprises because you can't exceed what's budgeted. Period. All right. The only thing they could possibly do if revenues came in, they've got that appropriation kind of trigger where they can move funds around to spend the money. But that would more than likely come before us to even do that for spending any more money. So I'm not so much concerned about exceeding expenditures because of budget law. Once the budget is set, you ain't going past it. You're a violation of budget law. The second thing is, and it's my understanding, there's an out in there to the extent if the money's not available, you can renegotiate and what. Now, I don't know what the language is. And again, maybe we got to have a further discussion with the attorney to make sure that's strong enough. But if that's enough, that would cover some type of crisis at the bottom itself. But if the bottom falls out, that means the revenues have fallen out, as well as we're cutting corners on the expenses. So Again, I think budget law itself prevents a lot of this, wild spending, even though you have an appropriation to move it, but it would have to come before city for us to authorize those expenditures. So there's some checks and balances in there, I think, unless budget law has changed, to help protect some of those things. So.
Present it so with the checks and balances for us on the slide, or whatever you're going to information going to give. Joanne, you had a question?
Oh, I was just going to ask, if this occurred, Lyman, if this did occur, that revenues exceeded it, what does that mean? Then what does that mean to us? Another 500,000? I mean, what is the actual number that we'd be looking at for the change?
A percent onto roughly 100,000.
So we're talking, okay, $100,000 on police.
Would be 1%, right?
1%, okay. 100,000 on police. He said police, and so fire.
Right around the same.
Close.
90,000.
So if our revenues are up 5%, it might cost us $200,000. Let's say.
Right.
Yes.
Right.
Okay, that helps put it into
5 to
perspective
6%.
of what
That's
we would
correct.
be talking about. But okay, and back to Joe had a good point about the expenditures. So that was good. Okay. Is it break time?
We're going to take. Did you want to finish this?
Are we going to get something back on that information? Is that how we left it?
Finish retirement.
Yes, we will get back to council. And we're looking at the draft MOU right now for emergency conditions as well. But I do want to point out what the finance director said, that our revenues, we estimate them to come upwards of as much as 4% over estimates. So that's 104%. Similarly, with our expenses, we by practice, we look as much as below that 100% of expenses. So that's 4% swing downward. Combined, you're 8% between those two gap areas. But I did want to point out that that's both on the expense side, also on the revenue side, both directions. But we'll look at the language in the MOU, see how we're protected as well.
Yes, go ahead, Sherry.
I guess the one that really gives me heartburn is that line on police that just doesn't move.
No, I know
That
it.
really bothers me. And I know I heard something this morning on the news about Flagstaff can't keep police officers because they're leaving for compensation. So
Right.
I do know that's a problem, and that just really bothers me. I don't see, now that Joanne got the 100,000, I don't see how that's going to close that gap with all those officers.
Even
I
at
guess I'm having trouble
100,000.
visualizing how it doesn't seem like a lot to close. Fire is closer, so it seems like we're in a better position to fire, but it doesn't seem like with the police department that's going to make
Any difference?
yeah. So I'm sorry, maybe I'm missing something.
No, you're not. You're not missing anything.
So is that bad?
That's the reality. Assuming again, there's an assumption built in there that the market moves 5%. We think that's a fair assumption, conservative assumption, but it might be different. Is there, what does another percent do? Another percent gets us closer. So, and best case scenario, another 3% will move us even further. So I think it addresses both the reality that, this is what we're going to look like, But it also leaves the door open for us to do, potentially to do a little bit more. Will 3% close that gap? I'm not sure that 3% will close the gap. We could draw some further assumptions to see how far it might take us, but again, it's based on that assumption that the
Can we
market's
find
moving 5%.
out what it would take to
Yeah.
close the gap so we
Yeah,
can
I'd
kind
like
of
to
start
know.
planning?
Yeah,
Yeah.
I'd like to know that. It's just the gap is just, it's just unconscionable, really.
Good question.
Break. He's got it.
Besides that, the gap, can you put in increments 1, 2, 3 cost? Put a dollar value to that.
That'd be good. Thank you.
We're going to take a 10-minute break.
Thank you.
Okay?
Thank you.
Back 10 minutes, all right?
Okay.
Time to have a brief discussion tonight on the retirement plans. I think all of you have heard a lot of information on the financial status of the various retirement plans. It's a statewide issue. It's actually a national issue. And the one thing we can always find is someone that's in worse position than us as you look at places like Illinois and New Jersey. It gets real easy to say, thank goodness we're in Arizona. Goodyear participates in 2 defined benefit retirement plans. The Public Safety Personnel Retirement System we refer to as PSPRS. That is for sworn police and sworn fire. That is a plan that's the plan I'll talk the most about this evening as we're going through. Because it really helps identify some things that we can see coming forward and so forth. The remaining of our full-time employees are part of the Arizona State Retirement System plan, which is also a defined benefit plan and is handled quite a bit differently. And some of the cause for the discussion is, well, first of all, the Great Recession really took down some returns and some investments that retirement plans around the country had. Also, around the country, when you look at a national level around the country, employers started looking at that when they had to balance their budgets in the Great Recession, and they looked at, well, let's not put all of our funding into the retirement plan. Not so much in Arizona, but throughout the country. In Arizona, a little of the issues that we deal with really take us back 15 years ago or a little bit more, when both of the retirement plans were above 100%, and as the legislature was trying to find funding to balance its budget, an annual process, as not unique to today, there was a fear that they would be trying to, and in fact, I remember a couple of years where they funded the Arizona State Retirement System. The rates that they set up in the budget process, affect all of us, were lower than the actuarial rates that were assigned. And as a result of those types of things, you start to fall behind. But another thing that's creating a lot of the discussion going in today is the accounting standards are changing for governments and how you report these plans. We are going to, in our next audited financial statements, on the government-wide financial statements, we are actually going to be reporting a liability for the unfunded liability on these retirement plans for the first time. That has not shown up in our financial statements. There have been disclosures, but even with those disclosures, that amount has been hard to find. That is going to show as a liability in our financial statements. So with that, I think it's very important that you have a little bit of an understanding of what that might look like and how that'll affect our financial statements. So the first and most of the discussion, as I said, we're going to talk about PSPRS. and that is what is referred to as an agent plan. Very simply, the investments are pooled. It is managed centrally, but each agency has its own account. Each agency. And by agency, Goodyear Fire and Goodyear Police are two different agencies. And they have a total of over 255 different agencies that are administered. Each agency has a different rate that it pays. It has a different liability. Its exposure levels are different. And I'll give you a few examples of that as we go through. Part of this plan also has a local board. And I think, I point out here a number of the things that our local board does. I think we, compared to what I'm hearing around the state, are benefited by having a local board that is actually overseeing, looking at it, meeting, going through what they should be. There were definitely cases in some of the audits that the public safety retirement system did over the years, found that they didn't even have boards in certain cases and that these boards weren't meeting if they did have them. And the other thing is that claims actually get approved at that board. And so if that board were not doing its job in that, they might be approving claims that otherwise wouldn't be warranted. That's not been an issue for Goodyear, but statewide that's been an area that's been talked about. So I'll start right here with some selected financial information that I pulled out of the actuarial reports. And these reports I'm giving you are actually online at PSPRS's website. What I'm going to give you is a few lines of it. If you go in and read it, it's well over 100 pages long, and it's some good, exciting reading for insomniacs, and I would recommend it for all of you. First, we'll talk about the funding level, and what that means is one side of the equation, you have assets in the plan, and those assets are being funded, or being, invested to match when they're going to be needed to draw when people retire. And so that's the assets of the plan. And then you have liabilities for the obligations for those employees when they retire. How much are we going to have to pay these employees when they retire? And the assets are put on a present value basis. In other words, it's calculated on an assumed rate of return over that point of time because you've got them invested. So your earning rate as you go forward, the compound interest becomes a very important part. So the funding level is the difference between, or it's the ratio from the assets to the liabilities. 100% means you've got the assets necessary to fund your liability, very simply. Well, the entire PSPRS system is at 50%. Goodyear Fire, that plan is at 92%. Goodyear Police is at 68%. So then I thought, well, let me show what is the net unfunded liability. Public safety, PSPRS as a whole, that's about $685 million. Goodyear Fire, it's about $2 million, and Goodyear Police, that's about $9.4 million. Now, the PSPRS board has said, well, we've got to close that liability. We have to have a plan of doing it. And so they have established a process that, an actuarial process that each agency has a rate that will close that gap. And at the end of 22 years, those liabilities will be zero under the assumptions that they've made. So it's the rate will get you there. So to accomplish that, PSPRS wide as an average, 41% of compensation, of gross pay, will go towards the employer's portion of the retirement payment. That is statewide on an average basis. Goodyear Fire, that amount is 13.85%. And Goodyear Police, that amount is 21.66%. Our group, the Finance Officers Association for Arizona, when we met in March, I think it was April, no, it was February, I believe. But anyway, our last meeting, we had this discussion in there. And one of the ladies new to her profession there, after she heard this presentation, said, you know, I just want you all out here to know how good you have it. Where I come from, Bisbee, she happened to be from, their actual funding rate is 94%. So for every $100 you pay one of their police officers, an additional $94 you're paying towards their retirement. She said, we only have 13 police officers. It's a real issue for them. I also will talk a little bit about Paradise Valley. I may have the percentages off on some of this, but it's just to kind of understand how some of these are. And one thing that Paradise Valley does is that Paradise Valley appears to be a place where police officers, as they're maturing in their career, like to go to Paradise Valley, and Paradise Valley likes to hire people that have been around. They don't want to have rookie police officers dealing with their constituents, and it's a conscious decision that they've made. But with that, when you hire an existing employee that's in the system, you bring them in with their proportionate share of the assets and the liabilities. So you are bringing in an unfunded liability when you're hiring that experience. And so Paradise Valley's, they just do police services there. Their ratio is about 75%, or that's what their premium rate is. And that's because of, that's a conscious choice they're making. That's not, at all. That's what they're doing. Now you notice I have this as the recommended funding rate, and I think everyone probably saw articles of some of the other cities in Arizona are looking at a lower rate and kicking that can down the road or deferring it. And that's what I refer to as the phase-in funding rate. We could go at a lower rate than the one I've bolded that I'm calling recommended, and that was recommended by the Public Safety Retirement System, but it also is my recommended rate. We could fund it at the lower level, but what you're doing when you do that is you are spreading that unfunded liability from one particular case that I'll talk about in a bit. You're spreading it over 22 years at an effective interest rate of 7.85% instead of paying it today. And in all of our budget assumptions that we have built since day one, we have built it in that we would fund it at the recommended rate so that we are not increasing our liability as we move forward.
May I ask?
Joe?
Can I ask when he's done? Thank you.
What's the current right now, Larry, for fire and police?
I should have, the fire, let me see if I have that with me. The fire is, they're both just a little lower than that at this point in time. I wanted to say fire is something like 13.5%, and police are 18. Is it a little bit bigger a jump?
Yeah, that sounds about right. What you said.
Okay. I might be a little high on that estimate, though, because the one case that I'm talking about might have kicked in this fiscal year. But this is not a huge increase. This was not like a major impact to our budget this year, these changes.
Did you have a rough idea on cost, what that difference is?
Between these two, our total pension contribution in the budget this year for these two plans combined are about $2.5 million.
Okay, and this is about...
And so as you're looking at these percentage differences, you would look that those would blend to an average somewhere in the area of a 2% rate difference. So $2.5 million or 2.5% or 2% on $2.5 million would get you at about the $50,000 mark.
Molly?
Can you explain to me why fire is so high and PD so low for the funding level?
Yeah, that's a very good question. What you get into, the variables that cause it are experience within the system, salary levels. It's a number of variables that go into the calculation as to what their benefits are. And our police department has more people that are on the longer side of the equation. But with that having been said, compared to the entire public safety retirement system, we're actually lower than that. Said implicit with this, and this was a conversation that came up previously, implicit with this, it would be a hiring policy of only bringing in entry-level employees. Well, you've heard the chief say that isn't practical in Goodyear. We've got to bring in laterals. And the laterals that he's brought in, I think he could address that better. When he's been able to get people in, have had very low experience and has not been a material part of the issue for us at all. And what his plans are moving forward, I think, are appropriate to this.
And we brought a deputy chief over to replace a deputy chief who retired, and he was a veteran from another fire department. So we then encumbered his part of the retirement, right?
That is correct. That's in the fire. Yes.
In the fire.
Now,
okay.
that is not reflected in these numbers
No.
at this point in time,
No.
but that is
Okay.
correct moving forward, yes.
Sherry?
Yeah, when I see 68%, I think kind of like not a real good grade, like a D or something.
Right.
Will the 21% start making that healthier?
Yes.
Will start to, I see the same thing as those two lines. I think that's what I'm seeing here, the same problem. Will that start to close that gap a little bit?
Absolutely, and that's very good. And let me try to put that. When I was talking about the 22 years, the intent of what public safety, the PSPRS board has done in its rate establishments and its policies is that the expectation that all three of those funding levels would be 100% at the end of 22 years. Now, there's a lot of future circumstances there, but that's what they've done, and those rates are to close the gap. The actual rate, I think, for just to provide the benefits at 100%, if I remember right, is somewhere about 12%. Now, at the same time, remember, your employees are contributing, about 11%, and that bumps up a little bit this year to just over 11.5%. So both sides are contributing as we're moving forward.
And then I have one more question. When I see the whole system is funded at 50%, that's
Yes.
clearly, that means there's a lot of people funding a lot less than that since we've got one at 92. If something happens, and I don't really know how this works, I mean, our contributions for our fire and police won't be taken for somebody that isn't.
That is why this is an agent plan. And so
the 50% we don't really need to worry about as much as our numbers.
no, that's a frame of reference.
Okay.
Only a frame of reference to see where we are compared to others. We hear people talking about this, but these are just numbers unless you have something to refer to it. But this plan, each agency is calculated on its own merits, and it flows through. And every year with the local board, we review this financial information. Where is the plan today? Where are we heading, and so forth, so that we're keeping an eye on it.
Joanne?
So obviously, a 92% for fire is a comfortable position to be in. 68% getting uncomfortable. Is the threshold of being comfortable in the 80 to 85%? Where do you is that
Good
your-
question, and I'll take the word "you" out to be more industry standard because I would answer it slightly different than I'm going to. The investor information that I receive, which looks at this, comes from people who buy our bonds, municipal bonds. What do they like to see? What do they hear? And the numbers that I hear from them are often that they consider 75, I see, and 80% as being healthy. I consider it a little bit on the kicking the can down the road side of the equation. I'd like to see it closer to 100%, but that would probably assume that I'm on the more conservative side than most people, which might be shocking.
So back to your statement that you began with, that you're now going to have to be putting this liability into the scorecard, per se. Hopefully we'll end up balancing out well and still looking good, especially compared to other entities. I
Absolutely.
suppose.
This will not. Actually, when I saw these numbers for the first time, because I've just seen these numbers, will say, boy, do you remember when I brought those in? February, I think, is when these numbers got released. And I first saw those, and I thought, that was a big sigh of relief for me when I saw that number is 11 million. Keep in mind on the citywide financial statements where this 11 million plus whatever it is for ASRS, which I don't know today, but those will go on to our combined balance sheet, which right now our total equity in it, if I remember right, is in the $350 million range. It's not just cash. In other words, it's all of our assets that are valued as part of that. The rating agencies are not going to be alarmed with these numbers. If anything, it'll be a positive, not a negative. All government agencies that are participants in plans like that start reporting this way June 2015, the equivalent fiscal year for us, June of 2015. The plans themselves had earlier implementation because we tail the plans. They've got to do their calculations before we can ever put ours in our financial statement. So we're running a year behind them, which is natural. I want to just go through a few of the issues. Why are there issues in the public safety retirement system? One is that there are permanent benefit increases that are built into the system. Those were adjusted by some legislation, Senate Bill 1609 in 2011. But the benefit increases at this point in time are 50% of the earnings over 9%. And those get locked into the system. So if you're assuming, which this plan does, this plan assumes a 7.85% earnings ratio every year. That's what our investment return is every year. If it gets above 9, part of that gets split with the with the retirees on a permanent benefit increase. If it goes lower, of course, nothing happens. And in a few years in the Great Recession, it was actually negative. And so at that point, when you average them out, it's harder to keep that average up there. Mm-hmm. In the past, the actuarial reports did not include this element as part of the estimates. So the 50% that we showed you earlier actually is the result of some changes in accounting for that information where they are factoring that in at this point in time.
Bill?
Larry, as long as you're mentioning these pertinent facts, we should probably also mention how this all came to be. PSPRS is a constitutional.
Yes.
It's a constitutional benefit plan. And,
yeah, And maybe it's best with these two cases if this will help us get there.
Well, I wanted to point that out because everyone goes, "Oh, we can just fix it." It can't just be fixed. It's got to go before the voters. It's got to be fixed because it's in the Arizona Constitution. And I think
that is exactly correct. What we're talking about tonight, you do not have discretion on. You've got discretion on the one on the front chart that I'm recommending you don't do anything about. You have very little discretion, no discretion as it relates to some of these benefit issues. So here we talked about a bill that was actually passed it was Senate Bill 1609 from the 2011 session. Various changes were made within that bill. There have been some challenges to that. The first one, and this is what Councilman Stipp is referring to, was the Fields case, which that case basically challenged their ability to make changes to the PBI, which is the permanent benefit increases. They made changes that took the 9% up to 10.5%. The Arizona Supreme Court ruled that they couldn't change that because of the constitutional issues there, that was a change in benefits that had been promised and can't be taken away. And so one of the reasons were a couple of slides where we showed you the recommended funding rate and the phased-in funding rate. That was really the result of that case. And they said you can amortize it over 22 years, or you can just do it right away. We're electing to do ours right away to do that. That case has been settled. It's done. No looking back, as you've described. It's constitutional, the way it is. There is another case out there. The Fields case was on retirees. The Hall case is one that is on existing members, and that is working its way through the system. It has not been resolved. And that does a couple of things. One, it has the same PBI challenge in it that the Fields case did. The second thing that happened in that Senate bill that's being challenged there, the employees were paying at that time, I believe it was 7.65% as their match, and that was locked in. Senate Bill 1609 increased that match. Next year, that'll be 11.65%. If that case gets adjudicated adversely for PSPRS, that will have a direct impact on us. Our rates for both of those two systems back here, our rates would instantly go up, as I understand it, by 4% in each category. Goodyear Fire and Police. If that got adjudicated the other way. I'm not saying it will, but that's what we would see coming. In addition, there could be some retroactive adjustments that would have to be picked up for that would create additional liability. I just want you aware of that as we're moving forward. It's not anything, it's got to work its way through the courts. When it does, that's when we'll start dealing with that.
Joe?
Question, Larry, go back to the slide on the percentages right there. Phased in and funding rate, that's 22 years, those rates, if you chose that, right?
Not at those, okay. The assumptions would have it at those rates, but when I'm saying that, every year they do an actuarial analysis and it will change higher or lower. Our demographics will change.
It's a 22-year plan.
Yes.
What's the recommended future rate? How long is that plan? The higher rate.
The higher rate is still a 22-year, but we're absorbing all of that one liability in the first year. So presumably next year, we would go down in these two categories if other variables worked in our favor.
Okay, so
I say presumably. The reason I don't think we will is because of the assumed earnings and how all of that flows through. It'll be very difficult to do that. Right now, I think there's a structural deficit, funding deficit within this system that without changes to the Constitution, I just see it continuing down that path of increases.
So the value on the recommended fund rate is to speed up as far as paying off our funded liability, our unfunded
That is
liability.
correct.
So over time, even though it's 22-year, hopefully the rate will actually be less than the phased-in rate
Right.
because you're not paying off as much over the long term. Is
Correct.
that the logic there?
And if the actuarial analysis that was done as of 2014, which is what this reflects, if that was a correct analysis of exactly how it played out, then I think these rates are what you would expect over time. It's the PBI that has me changing that a little bit. So what can we do as it relates to the thing? One thing that some entities are looking at that would be unwise would be somehow pay that whole $11 million today. That would not be a good approach in this equation. But there are a couple of things that one is that I've talked about already. It's my recommendation. It's how we've built all of our budget assumptions and models. Is we're going to pay what we've referred to there as a recommended funding rate, not the lower amount, but that recommended amount. The impact for us is not as dramatic as it is for many other agencies, and let's just get it behind us and move forward. The third thing that I'd like to be able to do this year, unless any of you have concerns about it, is I want to prepay the city's contribution at 90% of what we put in the budget. I want to work with PSPRS and prepay it in July of this year. Why would we do that? If we were to do that, we would get the benefits of earning interest on it at PSPRS's rates for the entire year. So at the 7.85%, I would assume that to be somewhere about $80,000. Now that's not earth-shattering amount of money, but we put it in our budget. We're going to spend it anyway. If we don't do that, at the same time, we would earn through PSPRS about, I believe it was about $8,000. And then I figured that with the city's investment at 50 basis points instead of the assumed 7.85%, that we would earn another $5,000 keeping the cash in our bank account. And it just seems to make sense to do that. Now, with that, of course, you have some risk. If they have a bad year and they actually have losses on their investments, that would prove not to be wise. But overall, in the long term, this seems to make a lot of sense. It's nickels and dimes, but it's something that helps us work towards it. And so that's what I would like to do this upcoming year.
Sherry?
I appreciate you're looking for the nickels and dimes. Honestly, I think any little bit helps to get us there. I know you told us before one time, but a lot of people ask, well, if we lost so much, or it lost so much when the stocks went down, now that stocks are at all-time highs, why are we not seeing those gains recouped? Because I know that was a lot of people's question.
Absolutely is, and there is a chart. I didn't prepare it for this. It's a wonderful chart that'll be in our annual financial report. Now, make sure we show it to you. But basically, the difference between the 7.85% and the actual returns, higher or lower, get amortized. And in PSPRS, it's over a period of 7 years. Okay? So first of all, if we had a great year, keep in mind, once we get above 9%, 50% of that's going for existing retirees. So it doesn't build up as fast. Okay? And then you're taking that difference and you're amortizing over 7 years. Now, as we look at what's going to hit us in the future, and we've had this conversation with the local boards, there's two of them, we still have to absorb some negatives where they didn't earn that 7.85%. And those are some fairly significant numbers. And over the next few years, we'll be absorbing those. And once they get off the books, so to speak, that'll impact us. But that amortizing over 7 years, when they had the really bad years in the Great Recession, that's still a few years coming through for us. questions, comments?
See any?
Okay. And I know this is riveting, but it's my last.
Sorry, Joe came up.
I don't have any problems with your recommendation. $80,000 is $80,000. So.
Okay, thank you. Thought I'd talk a little bit about ASRS. Reason you don't hear as much about it is, one, it's a cost-shared plan. And what that means is all the assets and the obligations are pooled. We will not get something that shows Goodyear's actuarial calculation different from anyone else. What we will get is our proportionate share of the liability. Now, ASRS has not had a permanent benefit increase over the last 10 years. Some to the chagrin of some participants in it, I might add, but it hasn't had one. The total unfunded liability for ASRS, with about a 75% funding level, is $9.9 billion. We're talking big numbers, but it's a big, big system. Our proportionate share, and it's calculated, I believe, based upon the annual premium, and our benefits, our proportionate share is going to obviously be a lot smaller. I don't know. I was just thinking through in my head that it might end up very similar to the numbers that you're seeing in public safety, where we'd have another 10 million hitting us. But I can't say that for sure. That is not very educated. And unless there's other questions, we'll ask Lainey to move forward to the third presentation.
Okay. Thanks, Larry.
All righty, so we're moving on to the presentation that has the first page. It's in blue. It says expenditures dash base budget. No problem. So we'll move on to talking about the base budget piece of the expenditures. One of the things that you do have in your materials was a copy of the budget or the efficiencies that the department shared with you when they did their base budget presentations. Just thought we'd share those with you again, all in one piece of paper, so you could see them. Those were the kinds of things that help the departments absorb some of the things they needed to absorb within their base budgets. But essentially what we're showing here is just the base budgets, which again is the ongoing part of the department's budgets. And this also includes the information that we've presented to you so far with regards to salaries and benefit changes and the retirement change or the pension changes that you've seen. So just for information to give you a sense of the size and the magnitude of the various department budgets. In terms of the capital improvement program, we...
No, it's okay.
Okay.
If he went like that, I thought he had a question.
Yeah, we'll get to the supplemental part of the operating budgets in a little while. In terms of the capital improvement program, you have two items in your materials that are related to the CIP. That includes a large document that is the 10-year proposed CIP. There are some highlighted cells in it in a yellow color. Those represent the new items that are being recommended. And then
Sherry?
And I don't know if today's the day, but I know we discussed before the traffic light up in Estrella, and I know a lot of people from Estrella have written. I don't know, is today when we would discuss that, or would that be another presentation?
Monday, isn't it?
Are we allowed to make suggestions or anything?
Yeah, I would answer it two ways. As we talk about the CIP now, we have $500,000 in year one for one new warranted traffic signal. In addition, we have one other one that would be primarily developer funded at Yuma Road and Canyon Trails. That being said, so if there's interest on the part of council to put additional dollars into traffic signals, that can be part of the discussion tonight. As it relates to where we're at with our 12 intersections that we're currently looking at, 12 intersections are currently being evaluated for where they're at with traffic warrants. So when we get, and there's 7 criteria as you look at each of those intersections, and next Monday in work session, we'll be talking about where each of those intersections are where they're at as far as how many of the warrants have they met, so you can see the big picture of where we're at with all the traffic signals under current evaluation. In addition, we'll be looking at potentially some traffic calming measures and things that can be done up on Elliott Road, for example. But those would be in more detail next Monday.
Okay, so if we don't
So
discuss
tonight's the
tonight-
funding for traffic signals, that discussion, and then next week, and it doesn't mean you can't go back into it again, although on May 5th, we will be presenting a draft balanced budget to you. So does that mean you can't do changes even on that evening? No, but we're getting pretty close.
Joe?
When it came to the CIP, there's really only one project I have on there that I'm wondering if the money can't be spent somewhere else in more value, and that's the right-of-way maintenance, medium improvements on Litchfield and Yuma. I look at the area and I think of spending $212,000 there, and I'm wondering if that can be better used somewhere else within the city from an improvement standpoint. That's my 2 cents worth on the CIP.
Wally?
If I may ask the city manager a question, oops, I'm sorry. Okay. I was going to chime in when Sherry asked her question. Mr. City Manager, I know you said that we could, if we wanted to put in money tonight, it would be okay, but we're going to talk about intersections next Monday. Is the Elliott and San Gabriel intersection one of the 12 we're going to be looking at? And if not, we would like to look at it, I think. Please.
Yes, it is one of the 12 that we're evaluating.
Okay, thank you very much. Perfect.
Oh, and Ken, if we've looked through this, we've talked about, and I don't know if I can talk about this, so tell me yes or no. So we're talking that we're considering a quarter off the grocery tax. That's been the discussion around. Mm-mm. And since I asked today how many traffic lights, can you or couldn't we take that a quarter and take and move that to traffic lights? Not lower the grocery tax, but use, we talked about lowering it a quarter, so just taking a quarter of that money and moving it to help us do some of these traffic lights?
Mayor, members of the council. Again here.
Yeah.
Okay, I think we're okay now. We're looking at 12 intersections. We have one funded in this coming budget year, fiscal year 16, and then one at the end of the 10-year CIP. So none in between is what's currently in the CIP for traffic signals. As it relates to discussion on the food for home consumption sales tax, which I think you just alluded to, that is, we have that under the supplemental discussion for council. That was one after we started the regular budget process, so that is absolutely here for tonight for consideration as we get into the supplementals. Right now we're on the CIP.
Sherry?
Got there first. Yeah, I guess that's what I saw. It's like we have a 10-year gap. And I know, I live in that neighborhood, so I see it. But I know all of those other 11 have neighborhoods and communities and families that are just as, worried about the future. And it may not be a problem now, but when you see, I'd like us to be more proactive, not wait till we have a lot of accidents for all of them. And waiting 10 years for all of them, I think we're going to then really be behind the curve. So I like the mayor's idea.
We have a funding source here.
Yeah.
And it's a need.
It's a need, and it's a safety issue
yeah,
overall. And like I said, I know our neighborhood firsthand, but I know of those other 11 or 12. I'm sure there's families in each one of those other areas that has the same concerns and sees them as potential future disasters waiting to happen. And I don't want any of those 12, if they're making that list, to be a disaster and then come to us after, I think what Bill said, after someone gets hurt. And not just up at Estrella, at all of them. And I think 10 years to say we're not adding a traffic light unless a developer adds it is kind of scary. So I do like the mayor's idea. Maybe that's a way to reallocate that funding. And that's not for a waste. That's for a really good purpose. It could save a life.
Save a life.
Question?
First, Bill. Bill?
Oh, sorry.
The money that we get for the one of our billboards, which we have not programmed for transportation. I think it was a one-time 400,000, and then it was whatever we get, whatever revenue comes out of it. Is that traffic light eligible?
Councilmember Stipp, that's actually reserved for transit, specific to transit. How is that defined? I would have to ask engineering. I don't have that answer, but it is the short answer. It has to be for transit, not traffic signals.
So transit as in, I always understood it to be transit meant moving of vehicles or moving of
public transit.
Public
so
transit,
it would be
okay.
buses. It would be shuttles. Those types of things. So yes.
Are you finished, Bill?
Well,
Go ahead.
I just wanted to. I've got a couple of questions of things that are missing from the CIP, but I wanted to piggyback on the Vice Mayor's statement of, when we look at that and say, well, there's 212,000. I bet you we could probably go through this and identify some things that we may scratch our heads over. And instead of going after the food tax, the home consumption, we program in every year this increases in these taxes. And perhaps we just program in a little bit less and we keep moving forward. Because a lot of these projects are paid for with one-time monies or developer impact fees, which means they're self-funded or they're funded from a different source as opposed to a funding source like the home food tax. I'm just going to say it that way, which is an ongoing revenue source. So I would personally be opposed to doing that.
Joanne, I think,
Okay.
was it? Joanne, did you?
Well, the question I was actually, the billboard was going to be the question I was going to ask. The other question I had, though, was of the general fund amount that you have about $5.5 million listed in here, is that all one-time funds of that $5.5 million, or is part of that from any ongoing revenue, or is that just one-time funds?
The CIP is funded
It's
with
all one-time
funds.
Right, okay.
Yes.
Just as we say general fund, I just want to make sure that everybody knows it's on time. All right.
Wally, did
That
you
was
have
my
a question?
Yes, thank you. I'd like to ask Larry a question, if I may, and then I have another question. I probably have three questions, to be honest. So, Larry, you're looking at the same list I'm looking at. So the Newland reimbursement of impact fees, is that how much we're giving him or he's giving us?
The Newland reimbursement is a reimbursement of impact fees that we collect that we owe to them under development agreements.
I wonder because we did not, as a city, we did not require the developer to put in a light at that clubhouse, which in hindsight, it should have been a requirement because we knew that the Star Point Club was going to be the gathering place for everyone in Estrella. And I can't imagine that we did not have something in our design guidelines or roadway guidelines or something to mitigate for the traffic. So now we're being asked to put in a light that should have been done by the developers. So I'm wondering if we could perhaps talk to Newland, and instead of reimbursing him the impact fees, that money, if we could use part of that and don't do the median, then we'd have the money for a light. Would we get in trouble?
Yeah.
Oh, shucks.
Simple answer.
Yeah,
I was just trying to be a creative financing, that's all.
Quite creative, but
Yeah.
actually the reimbursements for Newland,
Has to be. We have to do
the
it.
one is from park impact fees, which by state law must go for park improvements. This is
Okay.
actually, or for parks. This is actually reimbursing them for the land that the
Okay.
park is located on.
Okay,
Then down below, you see it again under streets. So
Right,
does
yeah.
that fit in?
okay.
That agreement is actually to reimburse Newland for their proportionate share of the Cotton Lane Bridge.
Okay,
When that was built, and that was part of that agreement.
all right, well, we have to leave that alone. So the one new warranted traffic signal of 500,000, is that one that we just say we need somewhere? And if we, or are we looking for another 500,000? I mean, what am I?
That is that's funding for one that is yet to be identified which intersection.
So we could identify
And
any intersection for that. We don't have to hunt up another 500,000.
that could be used for a specific intersection, and I
Okay.
think you'll have more information on that this coming Monday when
Good,
we go
okay.
through those 12 intersections.
We have
All
a
right.
lot of competing ones.
Oh, I know we do. And I wish we could
Ones,
have
so
6
that's-
million
that's
so
why I
that we
was-
could put a light at all 12 of them, but that's
why
what
I
it
was
would
looking
cost.
for another source of money.
Well, I think we ought to have a conversation with Newland regarding that issue and see if he won't be a good neighbor with us and help us solve this problem up there.
Can I ask a question on that? Can they move a traffic light from one place to the other and doesn't
I
cost
thought of that.
Like
Yeah,
the Walgreens, nobody uses that. I'm not
No.
sure why it's there.
That or some of these around the mall that nobody's using, they're flashing yellow.
Can we move it from one
I
location?
don't think that's going to
We
work.
can't use those.
Oh,
I've asked that before.
those, but
I
we
asked
got a
that a
bunch
couple years ago.
Well, we're being
This isn't like checkers. We just can't make the move we want to
Oh,
make, guys.
darn.
Not
Okay.
that far. It's just from the Walgreens.
I know, but it doesn't work that way.
And specifically, that was developer required when they
Oh,
when they
shucks.
did that. So it was their obligation for that intersection. So then we'd so
I
that
guess my concern is just like I told you, we have a weird mixture on that, and we've got the bicyclers that come up on the weekend in packs, and
Oh, yeah.
it's just, and now it's starting to back up as we get more people there. It took me 3 lights this morning to get onto Estrella, so that it's backing up from Estrella into that intersection some mornings. So I don't really know what our solution is, but I know all 12 are important to their communities. So I would like to find a funding source that we can not wait 10 years for every light somehow.
Mayor, have we looked at any grants to find out if we can get any type of a grant
We don't
to put
have-
in
our
lights?
grant person
Is our
left, I
grant
think
person
he's
here?
Left, so
don't look
I
good on
think
paper.
she just left.
Well, shoot.
Elvis left the building.
left the room.
No,
That's too bad.
but specific to traffic intersections, I'm not aware of grants, but that's a question that we'll ask our grant person.
All right, because I don't know if there's anything that we could do.
Well, it's a time absorbing there for the grant. That it seems like we have 2 intersections that have been Yuma and Cotton Lane. What is it, Yuma and Cotton Lane?
Yuma and Canyon Trails, and
Canyon
that one is
Trails.
developer funded primarily, so that one will be going forward. That is reflected in the CIP, and most of that is development money, developer money.
Joanne?
So I know that that's going to be a big discussion next week, going over the 12. And as we look at that, though, back to the whole point of only 2 traffic lights within 10 years, we may need to do some adjusting to the CIP over the next 5 years of changing how some of that gets funded. And I know you don't have that in your asset management or any other things, but that may be something that we have to look at. But in the meantime, to not get ahead of next week's conversation, some of the other ideas that have popped up, like with the flashing lights, crosswalk stuff, is that within here, or is that being funded in a different area? Or that wherever the money is coming from?
that's
Yeah.
in the supplemental.
I
Was
asked
that a supplement?
I asked
Okay.
that this
Wanna
morning,
hit
so
that
you wanted to enlighten.
There, when we move into the supplementals, there is a supplemental related to the flashing
So,
beacons.
okay. All right.
Joe?
Yeah, I'm with Bill on the part. You got to be careful taking ongoing money and moving it to one-time expenditures. So I can appreciate the thought on the food of moving it over, but that's part of your ongoing, and we're already moving a lot of ongoing money into things that, in my view, probably shouldn't be there, but we don't have any choice. So, I think you just got to be careful. I think you want to find some one-time money if you want to build this up, not ongoing.
Well,
That's
that's
just
why
my
I
own
pointed
too.
out the general
Yeah,
fund
yeah.
amounts.
That's
We're
just my
not
2 cents worth there.
ongoing.
Raleigh?
I'd just like to say to the city manager, because I don't know who to address it to and staff, I hope that this will be a good lesson for us, that when we have a developer that builds the clubhouse, that empties out and interested in on a main street, that we require a stoplight. And if we don't have it in our design guidelines, we need to look at it. Otherwise, we're going to have this issue over a lot of the developments that we hope are built here. And they all will probably have clubhouses or swimming areas or whatever. And I don't know that the city would have the revenue to put those lights in once the people move in there. I'd like someone to have a conversation on that to see would that be Katie's group or is that Rebecca's group?
Yeah, Councilmember Campbell, that is one where as you get into developments, you do look at traffic impacts at that time. You can negotiate some of those into it, be it a clubhouse, be it a new commercial center. So there are opportunities for that. And lots of times it would be a cost sharing.
Sure.
So if they're on one side of the street, they're not responsible for the entire intersection. So those are some of the considerations as well.
But maybe we need to change the way we're thinking, or we've allowed these developers to come in and develop and plan. And because we hope to have a lot more people in Goodyear. And I don't know why we can't have that conversation with them.
Joe's got here first. Joe?
Refresh me on the impact fees. Are streetlights any part of our impact fees?
Let me go ahead, because that's exactly what I wanted to talk about.
Okay.
In the impact fee statutes, when that changed, it required specific areas that we had to put. So we have certain items that are intersection improvements within our IIP that would have signals in them, but they would be specific to that location. Under the previous impact fee statutes, we actually had an allowance built in using impact fees to do multiple intersections. I think we had 3 a year. Now, those 3 a year would also, the developer might put them in, but they would get an impact fee reimbursement or a credit to do that. Today's statutes don't allow that. So the conversation that Rebecca and I have been having over the last month or two has been similar to what you've talked about this evening, that going forward, we have to develop a strategy of how we're going to fund these signals on an annual basis, because we know the math isn't going to work. Those 12 intersections, there is no one in this room that's going to say that only one of those will be warranted in the next 10 years. Mm-hmm. None of us believe that. And what's going on in my head in all of that, as we move forward in the future years, for example, we've heard discussion that we have every year we set a target of a 4% variance in the revenue side and on the expenditure side, and that rolls some money into the budget process. In the short term, that's actually how this $500,000 got added to this budget. And in the short term, that might be how we have to do this. But budget staff, myself, Rebecca, are working on this issue to look at those intervening years. The important discussion tonight in the sense of direction is are we adequate for fiscal year 16, which is what we're really trying to accomplish.
Bill?
Okay, so on that note, last year's CIP, we had several projects that were slated for Van Buren and Saraville as 2 roads. This year, the only thing that's in there is Saraville and I-10 to Van Buren. And there are several new projects that have populated. And we've been telling the people, and me specifically, but we as a city have been telling the people in Canyon Trails for years that Van Buren is going to be fixed and Saraville is going to be taken care of. And oh, don't worry, we promise you it's going to happen in FY16, and it's not there this year. And that has been that's been their common complaint, because they were dating back to early Mayor Kavanaugh and the later part of Mayor Arnold's term. So I'd like to know why those aren't in there.
In terms of there was a project for Saraville I-10 to Van Buren that was in this year's adopted CIP for $2.7 million in FY16. That project is now spread between fiscal years 16 through 18 for $2.7 million. I believe
It's
it's
not the bottom here, right?
Yep.
Am I in the right? Okay.
there was another project, Saraville Jefferson to Yuma, which in the currently adopted CIP was programmed in FY17 for $1.7 million. In this proposal, it is in FY20 for $1.2 million. Those two projects were deferred as a result of the changes in the impact fee revenues that are coming into the city at this point in time. So they along with nearly every other project in the CIP that was impact fee funded, has been pushed back to be consistent with the estimated revenue stream.
Okay.
And then there was a project, I believe you asked about Van Buren as well. There was a project, Van Buren Estrella to, I believe it was listed as Cotton, but I believe the project scope was Estrella to Saraville.
Yep.
It was included in the adopted CIP, in this year's CIP in FY16 for $2 million. It was proposed to be funded with the impact fees that ended on July of this year. So it was proposed to be funded with the older impact fees. Those impact fee revenues were not substantial enough to continue with that project. It's my understanding from talking to the department that they're working with a developer for some potential work on that project, and they did not come forward with a supplemental request this year until that work can be resolved.
What was that intersection again? I'm sorry.
It's Van Buren Estrella to Saraville, the road, and that the plan would be to come forward in the next process to request additional funding that may be required for that project.
And that's, for clarification, that's on the south side of Van Buren.
And that's not in this. We don't.
It's not
It's
in the
no
current-
longer in there because there are no resources, because there are no longer any impact fees available for that project.
All right.
And that would also include the intersection of Saraville and Van Buren, which right now is a, what do you call it, a wire?
Span
Well,
wire.
yeah.
Is a span
Yeah.
wire. We have a major intersection in the city that is still a span wire traffic light.
Yeah.
And we're not only are we not doing it this year, we're not going to end up doing it next year because we still can't identify what it is. And then we're going to push that funding project out for 3 more years. So these people who we've been telling since the mid 2000s, it'll be at least 10 more years from the time we first told you before you get that project. I mean, and we start looking at all these other things, and we're throwing around a lot of general fund money and a lot of other things, and I realize it should be paid by developer impact, but man, we've got to do some reprioritization of this, and we aren't doing it as a council. It's being done, and the fact that no offense, Rebecca, that the fact that the engineering department didn't put a supplemental in on it that's a problem. And if if I didn't have last year's sheet, we never would know that. So at what point do we actually get to say what's in and what's out as a council?
Well, Mayor,
Yes. Holly?
I wish our traffic lights didn't cost $500,000 each. I wish 10 years ago, or whenever they started with the beautiful lights, they do look wonderful. They look like downtown Tempe. I wish we would have maybe done things a little different because we just don't have the money. We can't reinvent some of this stuff because I don't know where the money's going to come from. And I don't want to put a bunch of stuff in the CIP that we know we can't fund because we're defeating the purpose. But Bill's right. We do need to decide what goes in there, and then we need to keep our eye on it and make sure that it's progressing the way we think it ought to. But I do hate to tell people you're going to have to wait another 10 or 12 years to get light signals. I mean, that's unconscionable.
Yes.
There's $5.4 million of combined ongoing and one-time general fund money that is being proposed in the next piece of paper that we all have on the list of supplementals. new programs, increased case budgets, et cetera. $5.4 million. I really find it hard to believe that we can't find $500,000 in that to put a traffic light in one location, and then secondarily that we can't reprioritize those things to make this budget work, that we can take care of an intersection and a major east-west street in this city that it's horrible. That drive down Van Buren from Estrella to Saraville is horrible. It doesn't look like anything representative of our city, and we've let it be that way for years. We have an obligation to do something about that. And here's $5.4 million, so we can start picking from that.
Yes, Sherry?
I guess one of the other questions I have is, like in our neighborhood, I know our community paid an assessment, and so we get paid. That was supposed to be for the roads. Why do we not, when we have these assessments? And I don't know. Obviously, it wasn't this council. It was a long time. It was like over 10 years ago. Why aren't those traffic lights? Because the street lights were part of it. Why aren't the traffic lights part of those assessments that the neighbors pay for that street? Like San Gabriel was carved out of dirt when those communities came in. Every house has a like $5,000 assessment. So why, when we do those community facilities districts, do we not include the traffic lights? That's something else that seems to like, and again, hindsight's 2020, and we can say, but it seems like that's maybe for the future when we do that and we do the planning, that we need to look at what at $500,000 a clip, we got to put that in there.
You want to CFDs?
I'll talk about the CFD part and then a little bit about answering your question, but it may get into the whole development thing. At the time, first of all, the infrastructure that's included within an assessment just benefits the area of the assessment, okay? So it's a neighborhood. And if you know that what's in that neighborhood, well, a traffic signal will benefit more than that one particular neighborhood unless it's a traffic signal specifically within that neighborhood. So the type of infrastructure with these assessments that are funded generally tends to be roadway improvements themselves. Sometimes it's other water and sewer, but it's all public infrastructure. The other thing that happens as neighborhoods develop, and I think this is part of the complexity of this problem, at the time that a neighborhood is built, the need for that signal doesn't exist. And it often takes quite a bit longer before that actual need takes place.
And that's true. It's 12 years now.
And that you're now behind the curve at that point. You can't charge an impact fee, and an assessment is done right up front, has to be done within that period of time. Generally, we like those done before they sell the first house. So we do have a little bit of an issue there where, as we're a growing community, that's part of why we've got to be looking at adding signals every year. Is we're just a growing community, and it's going to happen that way.
I got you.
Any other questions? Joe?
What is the 235,463 lighting improvements? What is that? It's on the CIP.
I'm sorry.
It's under Parks and Art
lighting
projects.
improvements.
235,463. What is that?
It's right here.
Right here on the very first
That's
one.
under Parks.
On this one, it's on this one. I think it's one of the parks. No, not this one, sweetie. This one.
We'll have our Parks
This one.
Director address that.
Okay.
It's right in here somewhere, honey.
The 235 you're talking about.
Yeah, the 235.
Sorry, Nathan. Yeah.
Mayor, Council, the 235 for lighting improvements covers lighting new light poles that are needed at Rio Paseo Park, replacement of those poles there. However, some of those assets are now will be included in the asset replacement program.
New ones can't be, but
Sorry?
new ones cannot be, but replacements
These
can.
are replacing of those items. So
So this is to get it started, and then after that, they'll be part of the Is that,
They all replacements?
Yes. They're all replacements, so they would move over
So
to
we
the
can
asset
free them,
replacement.
we can free.
Correct. Mayor and Council, those are now covered for in the newly created asset replacement program. And so that would, those funds would go towards that asset replacement program.
So in other words, if later in the presentation we have recommendations for how to allocate the asset management dollars, if those are approved, we can free these funds up for other purposes.
okay, so, excuse me, just, so again, it's a possibility to lose, Jen, I'm just throwing this out, 235, you possibly are freeing that up because they could be already in another place. And I go back to the 212, there's $445,000. If you can free them both up, get you just about where you need for a light. Just saying. Thank you.
So
I don't want to not do that. I'm just saying if you can get it somewhere else, then that's why I was asking if it's something that can be freed up or not.
So what we're asking staff is to look through this to find the area where we can bring money forth to take care of this. Is that what you're asking?
I think we need to be
Under asset
specific.
management.
We need to be specific about what we're asking for. We're asking for a traffic light this particular year, or are we asking for
Well, that's
right? Are we asking for $2 million for finish the roadway and a traffic intersection? I mean, what is it exactly that we're looking at? I'm looking at this slide, and I see in FY18 we've got $1.1 million that we want to add back a program because we're going to use pavement management savings. Well, if we're going to have $1.1 million in 2 more fiscal years, that's $500,000 a year. That's a traffic light every year right there in the savings from that program alone. So I'm struggling with
okay, but I'd like to know the differences, is the importance and the difference from staff's point of view why that's put up there. I mean, I don't want to talk for them because I don't know. So,
If I could give some background on how we prepared the CIP this year. When we talked about the CIP before, we talked about that we were focused on fine-tuning FY16 because it was the year that we would be adopting, and we needed to have
can you
as
talk
good
up
as
just a little bit
okay.
more, please?
We needed to have as good of a CIP as possible because that would be the year we'd actually be implementing. And then we also next focused on the new 10th year because we were adding a 10th year to the CIP. And so we identified projects and funding in that 10th year. The middle years, we did not reforecast the resources that might be available in that 10-year period because we were going through this update process. So the reason unless there was an item that was identified as critical or something that was a crisis, we did not look for funding in the middle years because they were not the focus of this particular update and they would be coming forward in the next process. The reason there is one project added in FY18 was based on the feedback when we came to talk to you about the CIP before. There was some discussion about in that particular year we had more in
Guys, so let's hear this. So you're saying the feedback was from here or from the staff and the division?
The feedback was when we came and spoke to you about the CIP. We heard a number of statements about this particular project was removed as part of the process to fund the Goodyear Boulevard project. And as we sat and listened to some of the comments at the CIP session, we heard several discussions about street projects, and there was suggestions to add this project back. And since there was funding available because pavement management was more than the required $3 million, we were able to add that back. So it was strictly based on the feedback.
I just want you to say that because we forget when we're in these discussions of all the things we suggest. And I say, Council, does staff have enough information? Is this a direction? I say this usually when we have these discussions. Do you have enough information to go back and make this work? So I think we need to be a little more critical on the 7 people that are sitting up here when we have these discussions and direct staff. We're just as responsible for it as staff. So instead of, let's look at this and try to look at in a constructive, calm way of no pointing fingers. Staff is hired because they're the technical people. why we sometimes think we know more than staff. We don't. And so we asked them to do this and bring back the figures. Now, I agree we have an emergency, which we all feel is a real need. And so I think from the council, I definitely got the feeling about, we do have some fear on these roads about somebody getting killed. It's very, that's the simple answer. It's very hard to be pragmatic about this. And we worry about something happening. So we need to look for some kind of source of funding to help us do this. So I have to have directions from council. Bill, I don't want to speak for you. I don't want to put words in your mouth. So you're saying you see a lot of frivolous statements right now, what we're going to be doing. But here we are at this point now, telling staff that when we were giving them all these workshops and doing these things. So we need to look at this and figure out what you want, council, what you want to give up in order to do some of these things. So you just, I'd like to hear from some of the other council too, what's important. When I look at Saraville, I know, you all got the emails. We've been getting the emails about Saraville, where people are screaming about Saraville. They're upset. So it's not just, there's a lot of places in this city that people are upset because they want it done now. So I don't know how we come to consensus on this and get practical on how we begin this process. So I'm turning it over to you right now to give me some of your feelings so that staff can listen to you. Because we're only at how many slides we got yet to go tonight? So how do you want to handle this, council? All right. Yes, Sherry?
Like I said, I know all of the 12, like we're talking about intersections and roadways, are all important. I know firsthand from hearing from my neighbors what is their concern, and I've expressed that a lot. I would like to see if we can go back through and look at this and have staff, because like you said, they are the technical experts, see where there is additional funding, and if we can get maybe Saraville and the one up there done, if we can find that extra 500, I think that would, because then the money we slated for the flashing beacons could be turned into a light too. So I think that might, with some of the hints from Joe. But I don't want to micromanage each of their budgets either. And I can see stuff here. It's like, oh, I don't think we need that. I think that's covered, like that 1 million. But I think we need to hear from staff. But I would like them to try to find what they could if we could do both intersections.
Joe?
Mayor, if I may, just
Yeah.
for clarification on that, if I may, Mayor.
Go ahead, Brian.
So when you say 2 intersections, you're suggesting we put 2 traffic signals at 500,000 each into the budget, if we can find the funds to do that. And I just wasn't clear on which intersections. Is it waiting till after next Monday's presentation on the intersections, and just put a placeholder for 2
Well, I think right
in
now
there
it's
for now, or what?
The placeholders for 2. I don't know all the details on all the other ones, but I know, like, we've heard from Saraville. I know we've heard from Estrella. So those are the 2 I know the most about. But yeah, I think, have the presentation and look at all the factors. But if we can find money for 2, I think that's a lot better than money for just 1.
Sherilyn?
Well, as I recall from one of our recent meetings, is that there was, I keep hitting it. There was a person that was going to put together some information on traffic counts and on the, especially the, I think the Australians.
It was actually up there. We talked about the traffic count up.
I thought there was someone who was going to, and maybe I misunderstood then.
Yes,
Traffic
ahead,
counts
Brian.
for Elliott Road or for
that corner, to do some additional study and with information on that corner.
Yes, there has been some evaluation, and it is a continued intersection to be looked at as part of the 12, and so in terms of warrants, where we're at with that, and part of that does include traffic counts.
And I was a little confused at the information we got on accidents or no accidents at that corner. It seemed to be conflicting information coming across.
It was conflicting.
Did anybody else feel that way? I thought maybe I just wasn't following the.
All right, so just
The math.
go ahead,
If I
Brian.
may, yes. When that was asked for, it actually predated. It was the last year, but it ended before two accidents actually happened. So those were then sent out to council specific to the area around Elliott Road near San Gabriel. So those happened after the 1 year period we had looked at it. But that was then supplied to council. So there, in fact, been two accidents up in there in the last year.
But I thought there was other, like some of this stuff seemed to be
Up there, it's because we have Taco Bell going in, and we just put McDonald's in, and it's a very difficult corner, very difficult road, difficult setup in that area. So I think that's where the discussion came
And
from.
the discussion was it's bicyclists, kids, pedestrians.
All in one.
And
I
traffic
understand that, but
altogether.
it was just that I thought that some of the information we were given was on Estrella Parkway and where the light is coming out of Walgreens. In addition, I just couldn't follow the road map.
And it was the San Gabriel, but like Brian said, it was before. And what brought it to the head up there is after we had the discussion, literally less than 5 days, that's when I ran into a neighbor who had been struck exactly like I said. I was concerned. That's why I said it may not have a bad history, but it's a potential accident. And that was my concern, is like literally within a week, there was an accident exactly how I was afraid it was going to happen. So that's where my concern was.
No, and I,
Go ahead.
So that's why the conflicting.
I understand all of that. All I'm saying is I felt conflicted information was sent out. I really was having trouble following the roadmap to figure, no pun intended, and that I needed a more structured way of getting the information, and that I thought there was more information, more study being done to provide more information on exactly what was going on in that corner. That was my point, is that making a decision before we have the information seems goofy.
Joe, did you have something?
The only thing I was going to add is if the lights are an issue, which it sounds like, wouldn't it, to me, it would make more sense wait till Monday till we get the presentation, and they may say that we need 3. They may say we need 4. And then after we get done with the presentation, then the question is, can we find the money to meet the recommendation? So that's the only thing I'm saying, because we don't know yet what they're going to present, and so.
I agree with Joe. I don't think we're ready tonight to number out of the 12 what we need. Wally?
Okay. I've got 2 questions, and one's for you, Lori. Let's see. Fiber project, Van Buren Street, Estrella Parkway to Cotton Lane, $185,000. Is that federal funds, even though it says GF?
That what's listed here would be general fund requirements. I'm not sure if there's other funds as well.
Well, to me, I don't even know why we're putting fiber in, since we can't synchronize the light fixtures anyway. So that's something that we could look at somewhere
We don't
else.
want to do that, Wally.
Well, you just said.
Let's just call order. Just 1 second here. Okay. How much more of this have we got left in the presentation?
We're going to walk through the CIP, and then we're going to walk through the supplementals, and I believe that is what's remains. Okay. Rebecca has come to the table. One thing that we're going to make in terms of an improvement for the future CIPs is this is a project that has substantial federal funds along with it.
That's what I thought. That's why it should mark that.
We have historically not reflected those in our CIP because they are actually implemented by ADOT.
Okay.
And so we're going to find a way in the future to make it clear when an item's on here. We'll do something like in the title or something, put the amount of federal funds so that I can answer that question for you.
That's all. Yeah, I thought it was federal funds, and when the mayor said, and Bill suggested maybe we look to see where we could get the money, this didn't indicate federal funds, and I know we don't want to mess with that. But my next question is on the community center recreation complex, the $1 million plus some change. Is that the money we're setting aside in the event we want to build a community center?
My understanding is that this is a planned project, but that this was what when the forecast was done, when we prepared the CIP last year, these were the amounts of funds that were available so that we could start setting them aside to be able to do that project in the future.
So could we take that 13
I mean, the 1.3 million and do something else with it, and then just move the community center down to start on 17, 18, or 19? And if so, there's 1.3 million, Bill, right there.
At this point, we wouldn't be able to say when you could add back any resources that you chose to take out of 16, but it would certainly be on a list that would be dealt with in a future CIP project
Okay,
process.
thank you.
Joanne?
The last time we were speaking of the CIP, one of the items that had been presented was the Bullard Wash improvements. And I think we all agreed that that could be pulled out to free up to allow things to move forward. Is that what we're seeing here? Was you took that out and you moved things forward? Because I don't remember what the years were out for the other items. So
that was an unfunded. That was one of
it was
several unfunded. It was not a funded project.
It was not
so
a funded. It was within there.
It was
but
a request.
Okay.
Just like the items that are on here that are in yellow, they were
I thought
requests.
They had numbers within years.
They did have numbers within years, but it was simply their request for the project. So they identified we would need to channelize over 3 years, and then we'd add in trails over 3 years. So it was simply a request that was put in through the process.
I see.
And so we just gave you the list of all the projects that had been requested so that we could get feedback and decide how to move forward.
All right. Thank you.
Bill?
Larry, I see 1.8 million in pavement management in the CIP, and I see 1.8 in the supplementals. Is that 3.6?
No, if I may answer.
Oh, so yeah.
It's showing on both lists, mainly so we could show it to you with the asset management, but it is only in the funding analysis once, and it will ultimately be programmed in the CIP. So the 1.8 million you see on the CIP page is the same 1.8 million you see in the asset management category. It just happens that that particular item will end up being budgeted in the CIP. So there's not a duplication in terms of the funding that's available. It's only accounted for once.
Okay. And I guess that I'm confused by that because of the rolling stock and the lights and which are counted twice. So how do we differentiate? You said if we approve it later in the supplementals, it'll come out of the CIP, is what you said when Nathan was sitting up here. So I'm just trying to, how can I tell?
This is the one situation where a particular item that was requested as asset management would really be programmed in the CIP. So there's no other instances where there's an item on this list as well as in the CIP. It's just showing it to you in the place where it would ultimately be adopted. The other, and we can move, if you'd like to, I can move forward to the asset management slide to show you what's being done there.
I was going to suggest let's move forward.
Can I ask I've got one more question
Bill.
about a generic, another item. Under facility and technology projects, we have police building at $750,000, which I always assumed was the operations building.
Yes, that's the trailing cost of the project that's in process right now.
But the project itself is $12 million.
I believe it's a multi-phased project. Yeah. And so this year they're building the first phase of it. And if you see this, there's City Hall and then there's Police Building Phase 2 is an impact fee funded project for $6.6 million. That's the rest of the project.
Okay, so, but we're not going to start that until 2020. So why are we going to spend $750,000 in 16 and then wait 4 years before we start that project?
The $750,000 is the completion of the project that's happening right now that's funded in the current year. It's just the last parts of the cost. So there's a project happening in 15 as the Phase 1 project. This just happens to be the last of the funding for the project that's already in progress.
Okay.
So there'll be a completed project at the end of next year.
Got it. That makes more sense. Just kind of a general observation about this. Last year we had color, we knew what funds they were coming from. That was extremely helpful. But I think a little bit more definition that explains that this is the last year of a multi-year project. This is year one. Some way to show that would be very helpful. And Mayor, to your point about things that we say here, here we are on the 20th of April. In 2 weeks, we're supposed to have a work session on the tentative budget. This is the first time we are seeing this completed project. So if we are not waiting until the last minute. We spent the beginning of the month through 2 very long nights listening to what we've already approved rather than what's coming. And I think that time might have been better spent talking about these projects. And related to the Bullard and Van Buren, I remember someone saying we'd like to see it back, but I don't believe this council ever gave direction to staff to make sure that it ends up back in here. So I think we've been fairly clear on some of those things, and that's why when we keep running back and saying, what is it exactly that we want? Tonight we've talked only about traffic lights. So if I was a staff member, I would assume I need to put in traffic lights. Are we not going to do anything on Van Buren? Have we decided tonight that Van Buren and Saraville is out? I'm looking at my fellow council members. Have we decided that? Because I haven't heard that. I haven't heard that it's in. I haven't heard that it's out. So what direction have we really provided to staff? We haven't done that.
So where is it in the first place?
It's gone.
Oh, all right.
And I think that's a valid
that was my
point. Is
Get out of mind.
they're
Yeah.
gone and they were in a previous, and we don't, if like you said, if you had not had last year's with you and noticed it,
We wouldn't remember.
we would have not remembered. And so why are some of those items pulled out that we don't recall? Especially if they're that close to being fun. It's one thing if it was 5 years down the line and you forgot. When it's that close and all of a sudden it's gone, that doesn't make any sense. And that leaves us, in a bad position, especially if it's something that, as you've stated, you're out talking to the citizens about. That's difficult.
And it wasn't just me. Sherry did it too. We both responded to the same
right.
the same groups of citizens that said, what's going on with this? And we used the same information at different times. And now we're saying, hey, it's not that important. Oh, well, that's a different story. So I don't know. So I think if we're going to provide any direction, we probably need to be looking at that as well.
Well, and sometimes things are piecemeal, and then once we get it all, then it's a whole different scenario. Then you go, you know what? That seemed important that night, and now we got all these other things, and now we have to prioritize what's of true importance. And that's where it's tough. We don't have, 48 hours to sit here and go over everything all at once. And so it's easy to have to take stuff in sections and then forget stuff and then bring stuff back. And then it's a priority. I get it. I mean, the 2 nights that we did spend talking about the things that were in the past, I had said, what would have been helpful for me is complete the picture. Say, okay, this department, here's what they did this last year. Now finish the sentence for me and let me know what's going on with this department for the future. Complete it all in one, we're seeing the whole picture of that department. I think that will be helpful to me in the future because you're not coming back and going, oh, well, that was the past. I got to remember that. You're seeing the whole thing all at once.
Do we have any documentation of our work sessions on Bullard and Van Buren? I remember it being discussed several times over. Do we have anything that we can look at?
Yeah, Mayor, we do have history of that.
Okay.
The one thing on Bullard Van Buren, it wasn't a unanimous. I mean, we're not voting. The challenge is we're hearing some yeses, some nos, so we go ahead and put it in there. Certainly, those things that are anything in there really is under the ultimate decision at council.
So we could have some information sent out, even send it out on a yellow paper or send it out on something to the council. So why don't we, at this point, let her continue with her briefing. Questions are still allowed. I'm not shutting off people from talking. So why don't you just continue right now, okay?
All righty. So I don't know if we need to go over the CIP projects. I think that essentially we've covered all of these. It's essentially
Do we
items.
need to?
Yeah.
All right, go ahead. Yes.
Maybe it's just me, but one of the things we're trying to do is get a sense from council, and looking around, we're trying to gain consensus again without voting because we're in work session. And is there an interest to look at additional road work? For example, Saraville Van Buren trying to potentially look in finance director and budget manager. I'm not even sure it's possible. to look at trying to get that done instead of over a 3-year period, over a 1-year period. It's things like that that would be helpful to understand. Keep in mind that we do have to have the funding that's available for it as well.
I think if I could
right.
add to that just a little bit, and I'll throw the mic around a little bit too to help out. But I think we've heard considerable interest in trying to get an extra signal light, subject to the conversation
You
coming
think?
in a
I
week.
think so. Uh-huh.
We've also heard comments about, is Bullard and Van Buren important versus Saraval, for example, when you've got a project that got stretched out to 3 years instead of the 1. Feedback on that from you as a group is important, whether it's, yes, we need you to try to figure out how to accelerate it at the risk of others, or no, what you have here makes sense. And the same thing comes in as it relates to the Van Buren. Now, what I heard Lori saying, I don't know how all of the numbers work out on this. I do know that over the years we received some money from some that have built along Van Buren, that there is some money that's set aside, not $2 million, but some that we've collected where building has happened there that can also go into that pot that isn't money you see here. You saw that when Lori talked about the cash balances. There were at that time it totaled $2.8 million, if I remember right, of money that's designated for very specific transactions. A portion of that would be on Van Buren. And so that point comes up also. And that one's already being worked on, that it needs to get back into the system. It's how it's going to get back into the system and when, and answering that question. But the more we can get from you a sense of what is it that you don't like. Well, don't like is a horrible word because it implies it's bad.
You can relate.
Yeah, which would you prioritize different as you're putting that through there? That really is the input we're looking for, and we really want to encourage that.
So did we? Let's give them an input on the Bullard and the Van Buren in section, and then the Saraval. So I don't know how we do this out voting. So just nod heads or
question.
Yes, Joanne.
So the Bullard and Van Buren improvements, if please remind me, wasn't that the discussion that we were doing this for as an economic driver?
Yes.
We're talking about an economic driver,
right,
versus safety issues, and versus an item of when I say safety issues, the lights, the traffic lights, and then we're also talking about roadway improvements that have long been discussed that needs to be complete. So, in a priority,
there's
safety, citizens, economic driver. That's to me
Well, those are the 3 items we discussed here. So put them on the list. Is that what we're saying? Okay, Sherry.
Yeah, sorry. I agree with Joanne. I think safety is our priority, first of all, for everything. And just in general, not just my area, but all the areas, if 10 years for I think we need to really look at that plan for traffic signals throughout as we grow. Then I think it's really important that we do look at where the citizens have been, I want to say, waiting the longest, and maybe we don't move it up to 1 year. Maybe we do it in 2 years instead of 3 years. I mean, I think anything, if we can get something started, maybe not as long a delay, I think that helps too. And I that would be my direction personally, is like, let's see what we can do to kind of move those up, and then move up. If we do 2, then the 3rd year do the Bullard and Van Buren.
Comments over here?
One other question, and I think I know what it is, but since you bring up the digital billboards, I know that the one is on transit. The other one that we used all the money to build that was to purchase the evidence facility. Mm-hmm. But that has ongoing every year. Was it $100,000? Oh, is that what it?
About $100,000 a year.
$100,000 a year. Okay. Now, is that going into ongoing, or is that still building up again? How is that being used?
It's going into ongoing revenue.
Thank you. I just needed to clarify.
Okay. Bill?
the Bullard and Van Buren, we took off the plan to fund another economic development, and we were going to add it back when another economic development opportunity came in. That was a discussion that we had. So until there's an economic development thing that's coming for Bullard and Van Buren, I don't know that even rises to the priority over these public safety issues, especially when we're talking about that's the equivalent of 2 traffic lights. And I realize that there's a downside to not using it for an economic development opportunity, but let's have a couple of really tragic accidents, and that will do a lot to damage our ability to attract economic development as well. So I not to mention the risk and the lawsuit issues that go with it. So I think we have to be very, very careful.
I think we've all settled it. Definitely the danger one is the lights, and we want to take care of that. Can we get some feedback from the Economic Development Director?
Yes. Economic Development Director can specifically talk about what some of the opportunities may be.
Just tell us a little bit about the Bullard so that we have an idea, because we talked about it before, and council and I remember on and off and on and off. So.
Sure, I would say that, Mayor, that the Bullard and Van Buren area was one of our key economic corridors, and what we want to do, put in infrastructure there. I'd say it's really important. I understand what council's saying about the need for safety, but if you're talking about economic development and where I think it's a key area for us, to be honest.
That's what my memory said when you came up, when we've had several of these presentations on that. So I don't think we're talking about taking it away from the lights. I think we all have that number one. So, that's part of your decision making here, is that economic development. So put that into your decision making. Thank you. Appreciate that. So we still have that on the table. Go ahead.
Before you, let me ask the other side of that question. Okay. Is at some point in time, there's going to be another really great opportunity that's going to need a lot of money that we are not going to have, because we decided to invest it in a traffic light to spruce up an intersection or to do something else. So at what point does this whole thing stop?
I understand. I understand what you're saying, and I know there are projects that come along and say we really need to do this now, and that happens. One of the things that we're trying to do is be more proactive in terms of economic development and try to get those opportunities before know where those corridors are and before the projects come, so you're not always reacting. So that's something to consider in these discussions.
And I that's why I look at Goodyear Boulevard. We had plugged into the budget $2.5 million to fix that intersection and to improve that. Well, actually create that road and then improve that area, because it was a great economic development opportunity for us. And we tied up that money for a while, and then when it came time to use it, our estimates were off, and we needed to find $2 more million. So now we're at 4.5. Now we're going to do this for 1.1, and maybe something else is going to come along, and it's going to be $3 more million, and we're never going to have it. We're never going to have enough. So at some point, we need to really decide where and what are we going to do.
And the
so
sky's
I don't want to
fall
say
in. So
no,
you can't. It's just very difficult to be at the level you want to get progress. I mean, otherwise, let's not do it because we're not sure about this. We're not. Bill, there's a thing called moving forward a little bit, and it isn't all just so precise. Sherry?
I have a question. For some of these numbers that we have here, have we figured in, I know these are one-time monies, but have we figured in any of the difference from the census that we're going to get, that other money? Is that figured in here, or is that, I don't want to say a windfall that we're going to get, but who knows? I mean, that's all I know. There's issues with that now, but is that money that we can maybe see that we could use towards some of this, or is that back to like what Joe says, using
that's ongoing.
Ongoing, that's because ongoing. It's not one time.
That's ongoing.
There's nothing that prohibits you from using ongoing money to pay for one-time projects. It just means that you
It's
wouldn't
just the
fund
theory,
ongoing.
it
It's
is.
just that you wouldn't want to turn that into an ongoing need. So you can certainly, in any year that you have ongoing funds, use them to pay for one-time things. In terms of the census, we, as I mentioned, we didn't reforecast the resources for the middle years. So the census certainly will have an increase, will generate a revenue increase for the city that wasn't envisioned when this CIP was developed. And certainly next year, when we're preparing the budget for FY17, that would be, those resources would come into the picture and would be forecasted available for the CIP or other general fund needs.
Because that might help as well if we can estimate some of that and see if that can move some of these projects. Because we have a lot of really good projects and worthy projects, and it's really hard when they're all very worthy for their own reasons that you can say, well, this one's worthy, we really need the economic development, and this one's worthy for safety, and this one's worthy because the community's been waiting for 10 years. So maybe we could. It's hard to prioritize when we don't know what's going on in the middle. I guess that's the problem.
Well, we have an estimate, a number, assumption of a number, but we're really kind of at the beginning stages of all this, and there's lots of politics going on in the background of this. Do you want to?
The only thing I would add is we will know our numbers next March, and politics are happening between now and then. But that's when DOR, Department of Revenue, has the numbers to then give to the cities to plug in for budgets. So that would be March of next year.
But then could we kind of take that into consideration as we're planning these and maybe help move some of these projects a little bit forward? And then if it doesn't work out, then we have to reprioritize our reprioritization.
I don't know. That's a little. Just knowing the conversation that's going in the background on this right now, I think it's a little bit of a risk. That would be my. I've sat in on a couple of them, and I would say it could be a little bit of a risk.
It'll be a good conversation, but I think it needs to.
Sherilyn?
Well, I just wondered, assuming things are moving forward with the census, not that I would attempt to spend the money before we have it, but when could we anticipate that revenue could start showing in the budget? We've probably had that answer, but I don't remember it.
July 1st of 2016. So that's that would be the following year's budget was talked about by Lori.
How many hours ago?
Okay, so we need some direction here,
it's
Council,
okay.
on the Bullard. To keep it where it is right now?
I feel bad because I'm probably asking a question that's been answered 14 times over the year. What do those improvements look like?
The Bullard and Van Buren, I'm looking behind me, sort of have engineering answered it. The signals are already in at that intersection.
Thank heavens.
So yes. But I don't know if we can talk about some of the design elements that would entail. The goal is to improve that corridor for more shovel-ready sites along the Bullard Avenue corridor between Van Buren and Yuma.
Is this on?
Yeah, okay. Can you give her a microphone?
Microphone?
She got it? Okay.
The project entails both right-of-way, roadway improvements, and landscaping. So it would be that complete corridor.
Yeah. Wally?
Well, we always say we can't do something because we never have shovel-ready
That's right.
areas, shovel-ready projects, shovel-ready anything. So I understand the importance of the Bullard, and I understand the importance of the light, and I understand the importance of all of the other intersections, and I feel bad that Saraville has been such a mess because of the 303, and those residents have really put up with a lot. I think that after we have our conversation Monday on the 12 traffic lights, we're going to have a better feel for what we can do as far as prioritizing those 12. We've told you we need one, definitely, maybe two. Well, okay, Bill, we do need two. You're just breathing? Okay, sorry. I thought you were going to fall out of your chair. Okay, so two, and then, but I don't want the Bullard to go away forever because after Sherilyn and I sit on CBDG, we can never ask for anything because we don't have shovel-ready projects, and that's just really important. And you're trying to make the Bullard area shovel-ready so that a developer will come and say, "Okay, I'll do it, I'll build there." But if it's not, we just can't do it. So I'm for whatever everybody else is. I'm easy.
Joe?
You know, I mentioned this before, so this should be no surprise. The problem I have with getting too far ahead on the Bullard improvements is that it's zoned for certain things, zoned that you can put warehouses and a variety of things on there. And I know it's been years, but we've had discussions to try to get the developers on board on the city's vision so you don't get too far ahead making all the improvements, which improve their land, make it more ready to do something, and they go and do something that we don't want to have done. And that's always been my issue with the improvements, to make sure they have the same vision that we do, whether it's an overlay district or whatever the case may be that they buy into. So we don't make all these improvements and they end up putting a warehouse or something else that they're zoned for. That's my biggest concern about getting too far out in front. And it's nothing new. I've mentioned it before. So
This is a pretty basic improvement, though. This isn't too deep into the
Landscaping, right?
It's landscaping, and so I mean, it's not.
no, but I think at some point we got to sit down with those
I
developers and
agree with you.
we got to make sure they're on the same page we are. You know.
Bill?
So, but we've characterized this as making this a shovel-ready project. It's not. This is beautification of an intersection. So, again, I mean, I hate to be very argumentative about it, but all we're doing is making the intersection look better. We're not improving the property. We're not making it any more shovel-ready by fixing the intersection than we do if we leave it alone.
Well, I haven't seen the proposal, so I can't argue with you, and I'm too tired to argue.
I know. And to be very honest with you, this is when I start to really get going, and I'll go on until 3 o'clock in the morning. So,
Mayor, if
Brian?
I may, this is 2018, so it may be that the focus is more on this next year, because council always has an opportunity to come back in, and we always do a recalibration, readjust to the CIP every year, but the focus may be more on the 2016 at this point. It's funded in there. It's in 2018, and I think after we have more discussions next week, we might be able to have see where this one then flies.
Great. So why don't you continue?
All right, just to quickly go through the water and wastewater CIPs. Essentially, the only project that's being proposed for next year is the block wall. That is a funded project. The rest of the projects there would come forward through the process that's going forward. And in wastewater, 2 projects are proposed for next year that are in the funded part of their program. The rehab of a north digester at the Goodyear plant and the aeration dome at the Corget plant, and those are projects that were identified this year as being critical to needing to move forward. And then the balance of those would be in that unfunded until council acts on the rates part of the program. So then to walk through the supplementals, and that you have a document which is got some color coordinating. It's a list of the, it starts first with the general funds supplementals. The green are the asset management items that are recommended. The next color are the kind of salmon or whatever are the one-time items that are being recommended.
So if we don't want to recommend something,
I'll walk through them and you can tell me what you don't want to do and do want to do. The lavender, bluish, whatever is are increases to the base budget, those types of things like utilities and things. The next color are kind of new programs or new initiatives. Then there's a section we'll go through of other items. The white items are all the things that were requested by departments but are not being recommended. And then we go into the sanitation, wastewater, and water pages. So I'll kind of walk you through this using slides. First, what I wanted to do is go through what the asset management recommendations are. As you recall, when Larry and Bob presented before, we talked about that there is some need to do some deferred catch-up. And so this is what we're discussing in terms of recommending for how we allocate the $5 million that you funded in the current year budget. 2.7 million would go to parks right-of-way improvement catch-up. 965,000 would go to parks and park facility deferred maintenance type items, and 57,000 would go to some rolling stock equipment that were deferred in parks. Then we also talked about that there were some departments out there that had assets that they don't quite have their full plans done yet. Things like that, but we've reviewed their plans, but we aren't at a point where we can recommend reserves for them. So this is recommending funding those particular supplementals, and they're the items listed in green, with the exception of the $1.8 million, which we saw was in the CIP.
Joe?
Just quick, this is what Nathan was mentioning earlier. If it's funded in here, there's 235 on the other piece to free up.
Exactly.
So, okay.
Bill?
Larry, is this and the only reason I'm directing this directly at Larry is when we had this discussion about Goodyear Boulevard, wasn't this the area you wanted to leverage the money from?
We did, and that has been replenished as part of the budget process.
Okay, so is there a possibility to leverage some money out of this again for a one-time project?
I think the opportunity here, beyond looking at the specifics there, what we're doing, if you look at the note on the right of this slide where you're adding the 1.3 million, and then you see the line that says balance to 2 million undesignated, those two items are what we are proposing for a fiscal year 16 seed for areas that we don't have specific plans for. The biggest area of that would be in facilities, where there's a facility master plan that's going on now. What needs would we have to implement? But as part of the fiscal year 16 budget process, that would be a discussion of, do you want that in asset management, or could that be used for one of the other projects that the general funds would otherwise apply to?
So an hour and a half ago when we said we don't have any money to do these things, there's $680,000 at least sitting in this account.
Plus 1.3 million that we're putting in to seed it to an additional 2 million.
Okay.
But
Joe?
No, I appreciate the thought. My only concern is worked really hard to get an asset management fund. If we start tapping into it, I just want to make sure that it's really money that we should be using and not borrowing, from Peter and robbing from Paul, because I remember when there was no money in these things, and now we finally got something with a plan in place. So I just recommend caution if we tap it and we don't
The only
replace.
place I want to be specific on is when we talked about the 5 million, and we used that more as budget capacity than we used it of the dollars. That was just simply budget capacity because we had programs from the future that we were bringing back, and we've replenished that. The 2 million that I'm talking about that's on this slide in two places, the note on the right and the balance undesignated, is for areas that we have not developed what those exposures are and how much. So I'll compare them to the 5 million that we put in last year's budget where we didn't know. There's still seed money. Is that a reasonable amount or is that a high amount? At this point, I'm going to just say it is an amount. I don't know, but I in answering to the question of council discretion there, that's to do some future expenditures that have not been identified at all compared to the 5 million or 4.5 roughly here, as well as some others that are on these lists that have been identified.
So if I understand you correctly, the 2 million wouldn't put a big a dent in it. You could replace it in the future because you're not quite sure what that's going to be used for today. So if for some reason there was something that they wanted to do from a CIP standpoint, it wouldn't be what's the term I want to use? It wouldn't be fiscally irresponsible to tap that $2 million. I guess I don't know if that's the right term, but you kind of get my gist on there. I just don't want us to get too far ahead in the asset management because it took so long to get to this point. You know what I mean? So.
And we don't have that programmed at all.
The $2 million, correct. The $2 million is not programmed for anything specific. It is just creating an additional capacity to deal with the rest of the asset management analysis.
But to add to that, fiscal year 17, next year when we're having this conversation, there will likely be an additional amount for those items that weren't part of this program that we're still a work in progress on.
Okay.
Go ahead.
All righty. The next slide is the what we're recommending in terms of the FY16 dollars for the ongoing parts of the asset management program. And this kind of gets into the piece that I think we were talking about. So the first column represents the new money that's being allocated or recommended to be allocated from the FY16 funds to the reserves. If you recall, fleet really needs $1.8 million a year, but because there's a big item coming up in 17 and 18, we're proposing putting an extra $200,000 a year in for the first 2 years. And then the next column over is we talked about that we would take these resources from the general fund and we would put them in a special fund just for that purpose, and that then we would have to budget to spend the money out of that special fund. So next year, Fleet needs to spend $1.161 million on the things that need to be replaced. So they don't have to spend quite as much, but we know. And so then what you're seeing there as the last column is, in the case of Fleet, it was already an existing reserve, and they're starting with $1.5 million. So by the end of next year, they'll have $2.3 million available as they're moving forward to meet those upcoming needs. I won't go through all of these in that kind of detail, but just kind of wanted to give you an idea of what's in each of these. So for IT, there's $1 million coming out of the general fund. $650 of that would be spent next year on the needs that are identified in the plan for that year. So those are the two existing reserves. Then we'd be creating a new reserve for parks. And these are the dollar amounts that were identified as the annual ongoing requirement for the parks pieces of the plans. So it's the $925,000 a year for the ongoing needs for right-of-way replacements, the parks and park facilities, $280,000 a year, the rolling stock requirements, and then the ballpark rolling stock requirements. So that's the new reserve that we'd be creating for parks, and then we'd be spending $1.1 million out of that reserve next year.
So basically, we move into the same way when we talked about lights. For the next time, we'll look in to have a reserve. Is that what we were talking about? Just make sure that I'm on the same boat. So ongoing needs of street lights.
But this is for things to be replaced. Yeah. So,
I know this.
Yeah. Okay.
But would you do the same type of thing where you reserve and add and move?
Well, we would program something like new traffic signals in the CIP. So we would identify a way to say, yes, there's $500,000 a year or $1 million a year we can add into the CIP. And so it's not truly a reserve. You're going to have to adopt it each year and consider it each year. But we kind of identify in the future this is important and we think there's resources to do it. Okay.
Any questions on this one?
And then the last item is showing that the $1.8 million is needed to bring the pavement management to the $3 million number. Now we'll just start walking through the supplementals that are being recommended. These are the one-time items that are being proposed. I won't go through all of them in detail, but and certainly if there's questions you have on any of them, please ask. But essentially, there are these are items that are one-time in nature in engineering, and you'll see on the next page in development services, there's some temporary staff being recommended because, again, we're not sure what's happening with development. It's not stable enough to know if we need to add positions on an ongoing basis. So we're recommending another year of some temporary staffing in those areas to deal with what's currently forecasted.
Okay, so on the big sheet, those would be in
the salmon color.
Contract services for planning, a vehicle for the inspector supervisor, training, contract services for plan review and building inspections, temporary inspector, temporary CIP, project manager. That says continue, so I assume we have one.
Correct.
If we have lost or not achieved as much as we expected in development, why are we continuing to spend $500,000 on temporary positions? If our development stuff is all headed downward and we haven't achieved what we thought and we're way under what we thought we would be, it doesn't make sense that we're going to continue to fund these positions. I mean, obviously we do that when it's on its way up, but not when it's on its way down.
Yeah. I think there's a couple of things there. One is that the individual building permits have dropped off, but the workloads completely in those areas haven't. A little history, and I was thinking about as we were going through that slide that showed the revenues way back when in the first part of tonight's discussion. It showed, as I recall, the budget for this year at $5.6 million, the budget, and that's where we're coming in. We're projecting it to go down a bit based on trends and lower building permits to the 4.9. The last 2 years prior to this, we had a budget in the area of $4.6 million, and we had actual collections closer to $6 million. And those are a little more indicative of the workloads that we have had. The discussion actually that we've had as a staff is that the workloads to get the job done, for these inspections and so forth, we're getting concerns from our department that this may not be adequate. And if we come in higher than the 4.9 million, we actually expect to need additional staff support over and above what we're showing here to be able to address that. This really did contemplate that reduction in the services, and most of these are kind of continued to be able to keep them going. So I hope I answered what you're asking there. We're really kind of doing what we are and just trying to make sure we're hopefully slightly ahead of the game, but not very far ahead from what I'm hearing on from the departments.
Okay, just my second follow-up question or not follow-up to that, but the second one on that salmon area is in parks. We got median improvement phase 2 and storm damage and erosion control, which I only assume is a result of storms. Those sound an awful lot like on the previous slide, the $2 million. No, one more. Oh, no, that one right there. That sounds an awful lot like Parks right-of-ways at 2.7.
The storm damage and erosion control is if you'll recall, I think we've come forward and talked to you about allocating a city manager contingency for the damage from the September storm this year. Not all of that work was being covered in the contingency allocation this year. So the storm damage and erosion control item is completing the work that was associated with the damage from that storm. The median improvements is a specific project that is underway now. It is Estrella Parkway between MC 85 and Estrella Star Tower.
Can that be funded with right-of-way money instead of this?
These are new improvements as compared to, I believe, aren't these new as compared to maintenance?
But these numbers that we're putting up here are self-inflicted. We're limiting ourselves based on these numbers on this slide.
Yes, but what we're trying to distinguish here is maintenance compared to something that was never there.
But if we're trying to scrape together enough money to work on Project A or Project B, I'm just suggesting that perhaps there may be some movement. You guys would have to figure out how do you want to do this, whether you can absorb it or not. Some of these monies look like they could be absorbed within an operating budget. You know, when you give a department 19 or $20 million and we're dishing out a $20,000 supplemental, kind of makes you wonder if there's not a way to find 20 grand in a $20 million budget.
Yeah, and, I understand the point, and that is totally council discretion, but also a reminder in the process that as we do the base budget, before we ever start this, one of the processes we go through is with each department, we review those base budgets, and as we talk about the needs, the list of needs actually starts higher than this.
Oh, sure.
And that process, some of that is what of those needs can you fund out of your existing department? So we do that already in the process, and that has taken place. Is that to say it couldn't happen? No, but I would tell you that something wouldn't get done in that department. I think we're getting at that point. You're absolutely right there as to, in those percentages, can you sneak one in? Yes, but you would take something out.
Okay.
Wally?
I've got two questions, Larry, on fire. The firefighter recruit academy. Are we losing firemen that we've got to have another firefighter academy? We have 5 openings. How do I not know that?
It's been in the reports we've been getting.
So it's going to cost us $54,000 to train 5 firemen.
That's probably a bargain.
Yeah, it includes.
All right, and then my second question.
Can we have the fire chief answer this?
I'll just come up
Well,
quickly and get
and
rid of
this
information.
this is also fire workforce telestaff for 40,000.
I got a question on that.
Is that the computer program that is their timesheet thing, so that they don't use pen and pencil anymore?
I brought Paul up.
So to address, good evening, to address the recruit supplemental breakdown, for the regional academy for 5 recruits, it's $4,500 a person, so that comes out to about 18 grand. Additional equipment is $1,000. The physicals to hire them before they start is $3,500 total, and then their PPE that they get before they go to the academy is $31,000. So total of $54,000 there. And then the second question was on the workforce telestaff. This is the upgrade to our current system that the vendor is recommending for us. This will allow us to move off the SQL database that we're currently on. ITS supports us on moving that off as soon as we can. And then upgrading all the phone lines to voice over internet calling.
So, okay, that told me really, I'm sorry, nothing. So is it a computer program, or is it?
It's our staffing program that we've been using for the last couple of years.
Okay, yeah, it took us 3 years to get the staffing program money in the budget in the first place, and that was only 10 or 15,000 or something, wasn't it? 7,500. Oh, 75,000. Okay, and this is the one that you can set your shifts up.
Yes.
Okay, great.
It also tracks overtime reporting, and will eventually downstream to the SAP.
Okay, and what's a fire station security station hardening?
That's for Fire Station 187 to provide enhanced security for their station.
Upstairs, in Mobile?
Mobile, yeah.
Well, we haven't decided on that. I don't see how we can approve that. We haven't decided.
Councilmember Campbell, if
Yeah.
I may, that is putting it in there because nothing has been decided at this point. So it will be needed if sustained down there, if operations are sustained down there.
Well, I think we need to have another council conversation on the whole Mobile thing.
It's not a done deal.
We will be coming back to council,
Okay,
yes.
thank you very much.
Go back to her.
Okay.
Bill?
We haven't gotten there yet, but as long as you're sitting at the table, I figured I jump forward to the ongoing increase to base budget. Do you guys mind? As long as the chief's sitting there.
Where are you?
The blue.
Page 2.
The blue section.
All right.
Top of page 2. The request is for $56,000 to increase the training budget.
Correct.
If I remember from last year's budget presentation, our current training budget is like $22,000.
It's actually $19,500 for all of fire operations.
So we're looking at a 200% increase in training costs.
Correct.
And of that, we cannot, with the new standards, incorporate EMT refresher and save $22,000.
So that's the bridge program that we're being mandated by the state, and that's what we're budgeting to hold the class and also to fund the overtime for the class as well.
And that's
the 24-hour bridge program. Yeah, we're mandated by the state to get that done by the end of 16. I'm sorry, beginning of 16.
What's a bridge program?
To take them from the current standard to the new standard.
Oh, okay, thank you.
But I thought when we talked about this 2 weeks ago, you said that that was something we could do on duty and that could span the course of the entire year, and we wouldn't need the additional training money to do that.
That was based upon the supplementals that we had put into the budget for next year. Knowing that knowledge that we need that money to put that forward is how we're going to allocate the funding for that.
Okay. That's all the questions I had on fire. And I just want to point out for Wally's benefit, sorry, Councilmember Campbell, two items down is a $68,000 ongoing increase to base budget.
Where are you?
Building services,
Oh, are you in the blue again?
still in the blue,
On-
68,600.
Oh, got it. Okay, thank you.
Yeah.
Water storage project?
Water storage project.
But we talked about the water.
I know.
But this is different. This is different. We didn't talk about this.
This
And
is
we
to
can't
store
talk
it.
about it because we can't talk about it.
I'm just pointing it out for your benefit.
Well,
I
that's
know
why
it's
I
late.
didn't bring
Store
it
it,
up because I
right?
couldn't
We
talk
need it.
about it. But I could talk to the city manager one-on-one. Okay, Brian. I'm sorry, city manager.
Did you have a,
Excuse me.
you're done? Did you have a question?
So how do we say we don't want to approve it till we talk about it? I mean, is this a done deal?
Councilmember Campbell, the budget, the draft budget will be before you on May 5th. There are many activities going on between now and then.
May 5th, okay.
Anybody else?
Oh.
Not yet.
Okay, keep going.
I'm being
So you're good
quiet.
with we haven't covered one time? Alrighty, then there are the base budget increases, and again, these are the things where we've gone through the department's budgets and identified areas where they could not absorb increases. Some of the items here are use of promotional items, the printing and binding associated with the InFocus, the current version of the InFocus, maintenance and other requirements for some of the changes we've been making in technology, booking fees for the jail facilities, the cost of police services in Sonoran Valley. In Fleet, there was a utility rate increase associated with the new facility that they've opened.
Sorry, are you on the front page or the second page?
This is, we're going through the,
Blue section.
Blue?
we're in the, now I'm confused.
You're in the blue
We're
section.
in the blue on the top of
we're
the
in the
second
blue.
page.
Thank you.
And then the rest of that group are the item that was just mentioned, the access control system. We're converting the access control system in all the buildings. The fire department items that were just discussed, a small increase for the United Way campaign, annual campaign, and then some ongoing, some items in the parks budget related to increased costs in terms of the contracts that they use, maintaining vacant land. You'll see a couple places where the credit card fee costs have been going up, and then professional services.
What is the professional services increase for the ballpark?
It is an item that is associated with new events, and it is actually offset by a greater revenue increase. So it is essentially self-funding.
You want
But
further
it's-
explanation?
No, I'll take it for now.
Okay, Joanne?
So to the credit card services issue, and because I have seen that throughout, and you said it, in other areas, our fees are obviously going up. one, I would ask that I would assume we are looking at companies comparing as to why the increase in the percent. And two, if it's ballpark related and it's ticket sale related, does that come off before? Is that coming off before we split the price to the Indians and Reds, or are we having to eat that and then we are paying the Indians and Reds?
Great question, Mayor and Council. The credit card fees are taking off, and they're split 1/3 to the city and 2/3 to the teams. So we initially will have in this case, we've been averaging about $50,000 in credit card fees. The city is only responsible for 1/3 of that. What this does here is gives us the budget allocation to be able to spend the 50 up front, or as the expense happens.
Okay, thank you. And so then throughout the city, what's going on with, it's going up everywhere, so what's going on?
As far as ours, and looking for additional or competitively checking out our services there, the time frame is that as we do the ERP conversion, we really want to do that as part of that conversion at the same time. The bulk of our credit card charges are in the area of the utilities. That's the bulk of the dollars, which is the third phase of the ERP project, which will be towards the end of this upcoming fiscal year before we would start implementing that. So that's the timing on that. You've seen it a little bit in other departments that take it, development services take credit cards at a certain level, but they won't take the real large ones because of the fees involved with it. So we will be exploring over the next 12 months those types of options, but we're not there yet.
I just noticed it, so thank you.
Okay.
Go ahead.
All righty. And then the last group, we'll move on to the fourth group there in kind of the yellowish, brownish color or whatever. These are we kind of classified these as new programs or positions or initiatives. And so they include items such as the hardware and software support required for the SAP system and other hardware improvements that we've made, establishing an internship program in the human services or the human resources area, making our innovation funding initiative, putting funding more funding in for that, a generator for the new evidence facility, a body camera program, which would include a position, and in another slide or two I'll go over position ads for you, and the position would be related to records requests that would come along with that type of a program. And then some economic development programs for business recruitment strategy, marketing plan, and a retail attraction strategy. And then into parks, Veterans Day parades, some tree trimming, wellness park.
Bill, I'm sorry.
Go ahead and finish, and then.
Yeah. And then new areas that need landscaping, the rapid flashing beacons that were mentioned before, and then the stormwater management program, which is some new requirements that we have to manage stormwater issues. And so this is the beginning of a program. It includes both some one-time items as well as starting to establish a program.
Bill?
All right. I'll start at the top of my list is the IT stuff. We just spent $4.5 million on a new software system that was supposed to include maintenance and support for the first few years. And right off the bat, in year one, we're seeing $300,000.
I've looked back at Dan. I'll make sure that I say this correctly before Dan has to come up. What we talked about on that is to provide the capacity that we can absorb it. There is 1 year of service provided that's already part of the base fee, or that's part of the original budget, but we wanted to get this in the budget now so that it is sustained. So that's why that's there. It's to get it moving forward.
Okay, so what's the one time of $129,000 then?
Dan.
Because if you remember that
Right-
night,
Right below it.
we already went deep on this project, and now we're going deeper.
Is it in which one is it in?
And I get placeholdering it for ongoing, but if we don't need it this year, why are we tying up $200,000?
This is on the one time.
This includes, it's on the,
One time he's asking about is 129.
Yes.
Yes,
That's what it is.
Would you repeat that?
Yeah, I'm glad you guys understand it.
I didn't quite get that.
Getting late.
That's what happened.
I will try the explanation, and then Dan will agree to it. Today, we have $129,000 in the budget for HTE. So the increase needed is we need the 304 in the long term, but in the short term, we have to do both. So we're looking at the HTE portion of that cost as being one time. That will go away. We won't have to maintain it after we implement it. I know that's very convoluted thinking, but it was kind of how we thought going through this. The 304 is the cost we need for the SAP. That's ongoing. All of it is. But you got 129 already in your ongoing and your base budget that exists, so we only need to bump that up to 175.
But we're showing we're using 129 of
Yes.
one-time money. So if it's in the base already, then all we should theoretically be doing is increasing it to 175.
We're
of ongoing,
increasing
right?
the base by 175. That's correct.
Right.
The ongoing, we are still going to have to pay HTE maintenance over the next 12 months. But we converted that from being part of the base to, in effect, being a one-time cost.
So did you take it out of the base?
duplicate.
Because it would have been in the base already, right?
Yeah, we need 304 in the base. Your budget today is 129.
Got it.
So the 175 gets you there.
All right, it's late. All right, thank you for that one.
Thank you. You have another IT?
Oh, no, I don't have another IT
All right,
one.
Thank you.
I've got 2 on PD and then the 1 on economic development.
Go.
All right. The generator for the evidence building, this evidence building is costing us a heck of a lot more than it did the first night we talked about it. And now we're back for another $85,000 for a generator. I understand what a generator does and why we need emergency power, probably to run the refrigerator that's got all the body samples in it. But this project has been, every time we turn around, it seems to be another nickel and another dime, but it's coming in bigger chunks of money. So I guess I'm trying to figure out, were we just so off in the very beginning that this is where we're at?
Yeah, Councilmember Stipp, when the evidence building was designed, there was the generator was left off the design. That was discovered after the building was being outfitted, and so now we have to go back and add that because there's no reserve power if we have some type of failure there. So that's where we're at.
And I get it. It's just, obviously, it's a point. The other thing is on the body cameras. This is a pretty, I think, significant policy decision for us as a city that until we see it tonight, this is it. I mean, we've not talked about it before. So I don't know where everybody else is at.
I'm 100% for body cameras.
Me too.
100%. I've done a lot of research into it. There's just no way that I want to put our police on this protects our police as well as the citizen. And there's just what the attitude out there on police right now, the environment that's going on, it's gone viral on the television. There's no common sense. There's just extremes. There's accusations. And if there's one thing as a mayor I want our police officers to be safe. And if our police officers are doing something wrong, then this is going to say, hey, you didn't handle this correctly. We have some evidence on it. But to me, that is worthwhile. Does anybody else want to weigh into this? Joe?
The only thing I'd ask the chief is, and again, I think body cameras is probably where we're going, but with that being said, would it make some sense to kind of test it out in a small group to make sure you have all angles covered, you have the right amount of personnel needed to maintain the records, you have the right amount of personnel, because now you've got public information requests that they're going to have to track that. If you do it full bore at one, you might find it overwhelming as far as the pricing and the people you need. You may coming back to us for more. So, again, I don't have a problem with body cameras. My question is I know some of the cities are using some kind of roll-off where they're doing a percentage of their staff just to make sure they've got all the bases and all the people and all the materials and everything they need to do it. Just a thought.
Absolutely, and the good thing is that, body cameras are still a new program, but they've been around a couple years, so a lot of the bugs are getting worked out. We know that we're going to be creating a tremendous amount of public records and video redaction that's going to be needed with this body camera program. When we look at the position, our record staff right now handles over 4,000 public records requests a year. They even have 20 hours of overtime built in to our record staff every 2 weeks just to get by with what we're doing. And we know when body cameras get rolled out that everybody we deal with, anybody arrested, people in our community, attorneys, prosecutors, insurance adjusters, everybody is going to want the video. So we know we're going to have a significant impact. It will also impact the city prosecutor's office and the city attorney's office, who have no additional staff for the additional requests. Phoenix Police Department has estimated for every 100 body cams that they have on the street, they'll need to hire one redaction specialist to handle the load. Gilbert PD is looking at hiring 1 to 2 redaction specialists for their public records requests. And Mesa is so inundated with requests right now that they're doing a whole evaluation of their staff to see what they need. So part of our proposed position will be not only to handle the increase at PD, but to also handle the increase of video redaction for the city prosecutor's office and city attorney's office. As far as the body cams themselves, again, there's been a lot of research done. And I'll give you the real quick 1-minute version. Obviously, some of the benefits of the program, it sends the message that we want to be transparent, we want to be accountable. Cameras influence the behavior of officers, and they influence the behavior of the people that we encounter. When we're dealing with a suspect who has other ideas and they see that body camera on the officer, a rational person, now, not all of them are rational, but the rational person is going to change the way they act in front of the camera. We know, and it's a proven fact, that it helps reduce complaints on officers. One of the biggest body cam and the first large-scale body cam studies that was done was out of Rialto PD. And they basically did a year's test and determined a 58% reduction in use of force by officers and an 88% reduction on complaints on officers. And obviously, we're nowhere to that scale, but there definitely will be a reduction in complaints. It helps us with capturing evidence for arrest and prosecution because everything is on video. It will also give us an opportunity to identify other needs for police training. In other words, if we view some video and maybe the officer is not explaining something correctly or not giving the 100% most accurate information to somebody, we know that we may have a training issue there, and we could go back and train our officers so it could identify training issues. What we've seen is an enhanced prosecution rate. Studies have shown that there's a 30% increased conviction rate in domestic violence cases with body cams. The Surprise City Prosecutor's Office found, and they've had cameras about 1.5 years to 2 years now, they have seen less cases going to trial after folks view the video. So the cameras are actually a good thing for employees, and they're a good thing for our residents. And most of the agencies around the valley either have body cams in place or are already purchasing them. Everybody from Phoenix, Mesa, Tempe, Gilbert, Surprise, Glendale, Peoria, Avenel, and Scottsdale all have cameras or in the process of purchasing them. And really one of the last things we want to do is to be one of the only agencies without cameras, because it will raise the question, well, what are you all trying to hide in Goodyear? So that's the 2-minute version on body cams. Good thing for our community, good thing for our agency in the city.
Joe?
Just to follow up, it's not the issue I have with the body cams. I just make sure when you roll it out, is every officer immediately going to have one? So now, because again, as you had mentioned, you're going to have all this increase. My only concern is how you roll it out. Not that you have them. Is there going to be enough people to do the redaction? Because I imagine a lot of the officers are going to want to use the body cams to write the reports because they don't remember everything. So they're going to go back and they're going to look at the cameras to see what they did. So now you're looking maybe a little overtime in addition to some of the. So that's my only concern. Are you going to give them all at once and roll them all out? Or are you going to kind of.
No, the only thing we're looking for is purchasing 76 body cams that will outfit patrol, lieutenants and down, and our traffic and our canine, really two of the areas of most complaints.
Okay.
And I can tell you, we did something I left out. We actually did a pilot program back in 2013 where we outfitted 5 sergeants and 5 officers and 1 sergeant with body cams. But our pilot focused more on placement of the cameras and what type of the cameras are best and those type of things, low light, sunny day type filming, rather than the overtime implications and complaint type things. But, I will tell you too that the overtime issue is a concern. However, there are systems out there. In fact, one of the ones, the one that's being used the most and one we are looking at actually has the ability for officers to view the video in their car, whether it be on their smartphone or their tablet or their MDC, right there in the field and write the reports off that rather than waiting till the end of the shift. So there's different technology out there. So.
Thank you, Chief.
Sherry? I'm sorry. Joanne, I'm sorry, Joanne.
I appreciate that. I understand Bill's question because this obviously is a $25,000 to purchase, but an ongoing issue of $123,000.
Yes.
And so it's amazing that is going that way. But to the point is we didn't have all this background information, and so not knowing is this reactionary to the times or just exactly what you said, even though it may have been just a few minute synopsis of it all. We didn't have it, and so I really appreciate what you foresee as the good outcomes possibly out of it. Sounds like a paper nightmare at the same time. I am curious though, Rourke, how do you see this? Is there something you'd like to add to this? Is this, where do you see this coming into play for us?
The Chief and I have discussed it, and it is the way of the world. As a community, we're going to have to go to body cameras, whether it be this year or shortly thereafter. As the Chief cited to all the cities that are going to body cameras, there's starting to be an expectation, at least on the criminal side, that you have this video evidence. It's kind of like the CSI effect from a few years back. Juries are coming to expect that you're going to have the body camera. And as the Chief also cited, on the civil side, as far as civil liability, you do have the point of view of the officer in that liability situation that either proves or disproves the facts in the case. So it's just another piece of evidence, and it's also helps the officer safety. So from a legal perspective, it is going to be Siri has an opinion as well. I've lost my train of thought. It's going to be a records management issue. We've talked to the Chief about that. The City of Phoenix, they manage the records in the prosecutor's office. Some of the smaller communities seem to be going with the records analyst model, let the police department handle the redaction issues and the disclosure issues. So it's going to be a program that takes a while to roll out, and it's going to take cooperation with the various departments, but said it is the way of the world. So
there is a lot of discussion, has been a lot of discussion among the mayors and the advantages and disadvantages and opportunities it's going to bring to the city. So yeah, and I think your domestic violence one has been pretty has grown. Yes, Sherry.
I would agree with that. I think there's nothing more powerful than getting the officer's view when he rolls up on the scene, and if someone changes their story or their tune at trial, you're not playing a tape. You've got it live. You've got it right there, what was going on. It can't be like the officer misunderstood me so I think that will really help. It also helps the county has certain protocols that everything has to be tape recorded for certain felonies. So I think we're saving the time and the effort with that too, because they won't take cases if certain things aren't tape recorded. So they have very specific protocols. So I think we're giving the best evidence. I think it's worth the investment. And I think it does help with liability, especially because a lot of times
Lawsuits, does it cut down?
everyone's got a cell phone now, and right now you may only see part of the encounter. With the cam, we're going to be able to see the entire encounter, what might have led up to whatever incident may have occurred, because a lot of times when someone just comes on the scene with a cell phone, you don't see what led up to it, and I think that's really, really vital. My question is with the ongoing, and I've heard about different programs, and Taser has one. I don't know who you're looking to go with, but are we going to be like renting? I know it's like a per an officer on Taser server, or is it in-house? How do we store it?
Actually, the way the cost is really broken down is a $25,000 purchase. Cameras are not that expensive. It's not like in the day of the, dash video where the systems cost $5,000 to $7,000 a piece. Cameras are relatively inexpensive. So that purchase gets us 76 body cams. It gets us the cloud, and that's how we'll be storing our data. Our IT, we would inundate them if we tried to do any of this in the house. So we'll have the cloud storage, the training, the warranties, and we will also get any technology type upgrades over the next several years of the contract will be included for that cost. The $50,000 is part of our ongoing. That's the storage in the cloud. That's what's involved with that. And then we have, of course, the position lumped in there also. So
and then I assume you're going to work out some policies and procedures that I think are really important, like when the officer's not on duty or on his break, how it goes on, how it goes off. And I think those are really important, the privacy issues.
Absolutely. And in addition to all the benefits, there are a lot of issues and a lot of things that we're going to have to work out. The good thing is there's some really good model policies out right now, so we're not reinventing the wheel. We'll be able to use some of those good things that are out there. But everything from, do we record in somebody's house? What if, what do we do with personal information that ends up on a recording? What about juveniles? What's the best system for us? Data retention, all that kind of stuff we have to look at. So it won't be something that we run out and buy these tomorrow. It will be a thought-out process involving, city attorney and PD and several groups working together for the implementation.
Because I think that's one of the issues that's come up is there is a concern. There's some people you can see as public record requests and make their own like internet show almost. And if there's civilians that aren't subjects, or how do you protect all that? So I think there are a lot of issues, but I think it's a great program. I appreciate the fact you're going forward with it.
Thank you. Any other Molly?
Well, I'd like to thank you, Chief, for bringing it forward. You and I have had a conversation about body cams for the last 2 years, and I'm glad to see that we're doing it. I'm of the opinion that I want our police officers to have every safe equipment that they can get their hands on to keep them safe, because they're the ones that are out there. And we are aware that the criminals now are more aggressive with the police than they have been before. My take is I don't know if they want to be able to charge that someone mistreated them so they can sue, or if they want the notoriety of it, or if they want to get someone to cell phone it or what. But whatever it is, I'm glad you're doing it, or YouTube it, right. I just feel that that'll make our officers a lot safer, and thank you for bringing it forward.
Any other questions? Bill?
Not of the chief. I just got my next and last.
Oh, the next one? Okay.
Yeah. Thanks, Chief. It's on the strategic marketing plan for economic development.
Are you gray or
Are
yellow?
you the next page?
I'm yellow. Same thing that the PD was in.
Oh, in the middle. Okay.
In the
thank
middle.
you. Oh,
We did a strategic plan for
yeah.
economic development a year ago, and I'm assuming this is pushing that forward. But, if again, this is 150,000 we could be putting toward the intersection. So what? I just question what it is.
I thought you would say that about the intersection, yeah. That is, it's exactly what you said on the focus on success strategic plan that council passed in 2014. It was really, that's really to implement that policy or that program. And so it's a marketing campaign that we, I think you know that we discussed that we went to a firm called Atlas and we did a strategic SWOT analysis and that sort of thing on Goodyear. And basically, in order to go forward in those industries of focus, the suggestion was that we be more aggressive in terms of marketing. And so that's what this plan is to do. So it's traveling, it's all kinds of things. It's getting Goodyear's name out more nationally and regionally, but it's traveling and it's really focusing on those areas that Goodyear needs to be focusing on in terms of aerospace and defense.
What about your trip this last week?
Yes.
Use that as an example.
Sure. So that the trip that we went on this last week to Miami for the MRO show, the maintenance, repair, and overhaul show for the airport. We had great contacts there. It was really to get a good standing there at the trade show and to meet with companies that we have relationships with there, but also to get new prospects, and we did get some new prospects from that. So it's really just to implement that and be a little bit more aggressive in terms of that policy.
Does this $150,000, doesn't that represent about 10% of your budget? Actually, a little bit less than that?
Yes.
Actually, more than that, I mean. Aren't you about?
We're about
900
650, I think. I think we're 650.
Was it 900?
I think it's about 20%. I think we're about 650. So it's really to be more aggressive in terms of trying to get the projects that we all want to go to Goodyear.
So at the end of this, we should be able to see some return on the investment.
You should, yes, absolutely.
This is a huge ask given everything else we've been talking about tonight.
Mm-hmm.
And so
I'm gonna have a discussion with you. A huge ask, but we around this table have been asking this all year long. So let's remember the conversations we've been having. We've talked about more entertainment. We've talked about more manufacturing. We've talked about this. And then I remember around this table you saying, when is this enough? Remember, we asked, is this enough? You were ready to give more. And now we're at this point where we've had this discussion. We've directed them to do some of these activities that they've been doing. They've shared the information on Focus on Success. What were the other programs? And so, we've been around a table listening to this. So, Joanne?
Michelle, the $35,000 for the retail attraction. So, I mean, I kind of lumped these three together,
Yes,
really.
They're very intertwined.
And I mean, if it's back to just the strategy for economic development, you just call it that in a way. But is retail attraction strategy, is that back to the retail coach? Is that an ongoing?
And it's going to be or an RFP to get some help in terms of a specific recruitment strategy for entertainment and retail so that we can, rather than, focusing on things that are going to be the most impactful for Goodyear and be our most, promising roads.
So that's
to take.
different than the study you already did with retail coach?
Well, this is going to be in addition to that. Yes, so it's continuing that. We don't know that the retail coach is a specific, so we don't know if that would be the road that we would go. But it's along that line, and really, it's we're finding that with the retail and entertainment, you really have to have those contacts and be very specific, and instead of just kind of going one-offs and saying, contact this person, we really want this, and so that maybe you won't have to do that as much. But for us to be able to come to you and say, here's what we've been doing, and here's what we've been going, and why.
And I do believe you need a marketing budget, and it needs to be ongoing. Obviously, for what we want to attract, there's no doubt, and so that's why I kind of just lump them together. But I guess what throws you sometimes are just the words, like when it says strategy, you think that's a plan, but then yet a one-time plan. But no, it's not. It's an ongoing plan, and so I guess really at the end of the day, it's just you having the marketing dollars to go out and bring the companies and the jobs, which in the long run. Just as Bill stated, we should see outcomes from that. And the return on this investment is, it's too big to, is needed that we would allow it to just drop off. Unfortunately, I mean, in the priority level, it's not that large of numbers. So.
We just need to see something. I mean, we just need to know that the efforts of somebody in economic development is bringing something to our city.
Yeah.
I see Krispy Kreme going into Avondale, for heaven's sakes. Where's my Krispy Kreme?
They left us. I don't know why.
No, they were.
I mean, you know, no, they're
that
just
was a family
they're
thing.
doing they took over the A&W root beer in front of the Home Depot. I was there this morning, and they're putting in Krispy Kremes. But it's just that we want to give you money. We want you to be able to do it, but we want to see results. We've sat here for almost a year, and we're still here, waiting for something to come in. So,
Sherilyn?
That's it.
Well, I just wanted to say, in my experience with economic development, this isn't a big ask. If you're going to travel and you're going to go and solicit and determine that your good prospects, not just a list of people you think maybe, you have to invest in it. This is not a big ask, in my opinion, for what we're attempting to do.
Mayor, that might not be a good time, but I will encourage council to attend the groundbreaking for Michael Lewis on Friday and Harkins on Saturday. So those are coming up. So
It's nice to remind that we are getting some economic development. Thank you.
You bet.
Can I just ask one quick follow-up?
Bill?
We have a marketing person
Yes, we do. In the department.
in
yes.
your department.
Yes, we
So
do.
if we on it, and I assume that person makes at least $50,000 a year.
Yes.
So of a $650,000 budget for the whole department,
Mm-hmm.
200,000 of it is now going to go for marketing. It is a big ask.
Mm-hmm.
So the expectation is that there will be something to show for it. And a list of leads generated from GPEC to me is not a list.
And that's absolutely not what that part is for. That's dropped into something else. So
obviously that's what we're hoping for is a better list. So
absolutely.
thank you for the explanation.
We ready to go on? Oh, Sherry?
Not with Michelle, but just in general. Is it okay to ask to move on?
Yeah, I'm done.
Okay, your bill's done. These are just quick because I don't know what they are necessarily. So, this was actually Bill's question, but he said he asked enough. Could you tell us what the stormwater management is for $200,000? And I won't let Bill ask any more questions.
I will do my best, and if I don't get it right, I'm sure somebody will come up here. I believe in the engineering department is going to take responsibility for coordinating citywide stormwater requirements. So there is an item in here that's some cleanup in the Bullard Wash area is a big chunk of that is related to implementing stormwater things. And then there are other new requirements that there are consultants for, and I guess I would turn to Rebecca if she has more on it.
Yeah, I think that one, if we could get a little more detail on that one, because it's a little hard to.
Why are we taking it over? Like I said, so it's technically not a question. My mic isn't on.
You hit your limit.
Okay, so in response to the stormwater management program, this isn't anything that's new. It's actually been in place since 1997. We did experience an audit about a year ago where we were notified of deficiencies that we had at the city. So we've implemented a new program to adhere to the requirements that are set forth by the federal mandate. And this is, in a sense, for us to really bring ourselves up to the standards. And so it's associated with all of our stormwater runoff, whether it's associated with a construction site or just simply off of our municipal right-of-way. And it's a way for us to monitor that. So whatever goes into the storm drain and how it travels through our system and where it outfalls to ensure that we are keeping that free from debris, et cetera. And so this is just, it's an education process and it's an inspection process. The monies associated with Bullard Wash are quite significant because we have 66 outfalls that flow into that eventually flows into the waters of the U.S. And so it's a requirement of ours to make sure that we're monitoring that.
I have one more for you, I guess.
Mhm.
The one with the flashing beacons. Now,
Yes.
if we were to put the light in San Gabriel, that $75,000, that's what you're talking about, would be freed up then.
Well, it's $25,000 per rapid flash beacon. So associated with that supplemental, there's actually 3 locations.
Okay, so there
but
could
yes.
be 3. Okay, so some of that could be freed up or moved
Correct.
to other locations. And then my last one is, I guess, more for the city manager. I really like the idea of the wellness park, but I see another $75,000 in there for a master plan. And I guess my concern is we don't have a place. I mean, we can't do the parks we've master planned. And it's like, I guess I don't see where it's going to fit in is my thing. Because I know we've been promising the park in the central. Although it's a great idea, I hate to see this one jump ahead of that in the central part of the city. And then I know we had a master plan with the church, and we're still waiting on the church. So my concern here is if we master plan it for $75,000, are we going to have a master plan that I hate to say the city center, Georgia, but that sits there and now has to be redone because it's been so long that by the time we get to it, and it's not in the 10 years anywhere. So I guess I'm a little conflicted how that's going to help.
Mayor and Councilmember Lortano, it's a great question. This is obviously we're going through a process to try and gain access to that on or before July 1st of 2016. There's an interest in the part of private sector partner to go forward first, and if they do, it's very important for us to look at the entire acreage. I'm being a little bit vague in some of these things because we're still kind of behind the scenes on some of this, but it would be looking at how that portion integrates with this, as well as a greater use for it, eventually fields, things like that. So it's starting to look at the entire acreage, and there's concepts right now for 8 or 9 different types of uses. So this would be really trying to then put those on paper, the connectivity, things like that, the trails, the fields, and where private sector can go. So it's trying to make sure we're staying on top of, especially that private sector may go first. And if they do elect to do so, then how does it really fit within this entire area?
I just don't want to have another beautiful plan and beautiful idea that sits
Like
on
the
the
city.
shelf
Yes,
and
yes,
never gets funded.
yes.
That's my
pain.
concern.
I feel the pain.
So
on
I
that
hate to
one.
bring up the city center, but
Well, and it's a very valid question, and I was going to ask more about it myself, especially when we still don't know the full numbers of what it's going to cost just to implement it in maintaining it and just all the things around it. And I suppose that's part of the answers that would come out of the master plan, but I worry that we're jumping ahead. And I would ask, knowing that Nathan, actually the church has come back to the table, I'd like to hear, what is moving forward with that. And it didn't have to be tonight, but I think we need to I'd like an update and find out what's going on with that. So I would appreciate
a little bit
that.
differently on this too is it has partnerships in it.
Yeah.
The health part does.
Well,
so it's
church
a
does too.
bit different and more on a professional side, some of the partners. It won't be, it's just not like our parks. It's totally different. A new concept. So, yeah, I can understand all your questions. I'm sorry, Sherilyn, I didn't see you.
My comments are that I consider it more than a park. I consider it an area that is almost a detriment to Goodyear because it's not attractive to drive by. It doesn't get your attention. It's not a positive. But in this case, I consider it all kind of like marketing dollars in that you're taking an area and you're creating something unusual. Granted, it will be in parcels, but if we have a private partnership, that's just an extra bonus.
Well, it's an economic driver. There's no doubt.
Economic driver, an image That's why I call it like marketing dollars, because that's one of the things that we fight. What is different about Goodyear? Well, this is one of the things that would make us what is different about the Valley of the Sun in the West Valley. So anyway, that's just my opinion. And so I think that needs to be brought into the equation when you're considering it versus some of our other parks. I would say would probably address more people's needs as well.
More of a medical cluster. That's what it's going to develop.
I'm just saying.
Georgia? Joanne?
And something I think that just as we end this evening is that we all have, everything that we've looked at tonight and discussed all have valid points. They all do. You can sit here and go back and forth on the validity of everything and what it's going to help the city and it's all a matter of us having to manage the priority of this or that. And, because everybody can come up with a good point on something. I think the other follow-up that I would like that Wally and Bill both kind of keyed onto, and that's the Mobile discussion and what's going on here, because some of that money equals $75,000 for the wellness. Some of that equals each other, and so I think we really need to have an update on that.
Okay,
so
go ahead and continue.
Ready?
Here we go.
Quick summary of the 4 positions that are included in the recommendations. We've talked about the police department records specialist for the body camera program. There's also a recommendation to reestablish the Public Works Director position, and that position would be established in the Water Fund, but would be funded by General Fund, Water, Wastewater, and Sanitation funds, as those programs are all funded that way. Yeah, isn't that impressive? It took a lot of work to come up with that. There are 2 positions recommended in the Sanitation Enterprise Fund. The first is converting a temporary into full-time, and I think when Mark did the presentation on his base budget, he talked about that as one of the efficiencies for them. And then the other is a sanitation worker position that would be associated with the container program that we will be taking over on July 1 under the current contract. And this would bring somebody in advance of that to get us set up and ready to go, so we're up and running on July 1. The next group is back to your list. It's after the yellow areas. And this is a few items that have come up outside of the process where the departments have been requesting supplementals. The first 2 are basically new obligations or new needs that we've identified in the last few weeks. One is a potential increase in the funding for the special census to do additional marketing and to manage the project. The next one is a legislative change at the state level that will require us to pay the cost of them collecting revenue on our behalf, so that item will need to be funded. And then there's 2 items where we have looking for additional direction from the council. We previously had a discussion, it's come up a little bit already tonight, about the potential change of 0.25% in the food tax, which would be a $250,000 impact to the budget. And then also there was discussion during the department-based budget conversations about the potential to bring in focus to 12 issues a year. This $100,000 represents the cost to do that. Essentially, we would have to bring some of the production of that out of house, and that's why it seems like a large increase to go to 12 issues. So we would.
Let's have a discussion again on that, just quickly on that in focus. At this time, is it worth the additional for so let's have just a discussion again on it, okay? Bill? Excuse me, I'm sorry. Bill?
A lot of the discussion that we kept saying that night was maybe doing the in-focus differently than we're doing it now. And I know initially it came up as let's push it to 12, but there was a lot of discussion, and I know I mentioned it a number of times, and several people nodded their head, that when we have a number of pages dedicated to Parks and Recs program or something else, that we could actually use a smaller amount and drive people to the website and then use it there. So I don't know that we've fully vetted what we can do with what we've got. And simply throwing our arms up saying, well, there's no more money to do anymore is not the innovation and the efficiencies that we've been talking about for the last 2 years. So I'm with you, Mayor. I don't know that we want to spend $100,000 right now to do it. I would like to see us for the next year try to do something different than what we're doing with the money that we have right now.
In the publications we're now putting out.
But do it differently. That's
Differently meaning more citizens' issues or more citizens' information or more. I think we ought to
more topical, more.
I think there should be a strategy. I think
Yeah,
it's also.
I can't. It's now you're beyond my creativity.
It is, and
capability.
So what I'd like to suggest is that each of the council members put it in an email and send it on.
To the city manager.
You can say city manager.
Yeah, I think through the city manager.
I mean? Give us a view of.
I think somebody just needs to rewatch the video from the work session. There were probably 50 suggestions in there.
Let me say something. So that evening we discussed about, do we have 6 or 9 a year? Please clarify that first.
We have 8.
We have 8. Okay.
None of the above.
Okay. Back to that night, my point was if you were doing so we can have every month something going out there, those last few months or intermittently, I know you don't, it's like every other month in a way, that it's then the website version of that month. So it's like you're still doing 8 paper ones that we've always been doing, but those other months is the website version. And so it's back to strategy of pushing also into Bill's statement of, okay, the Parks and Recs areas, if you're changing the strategy and you're getting more Google hits and we're really pushing the website out there, and then people start to realize, especially when it's young families that are signing their kids up, they're bound to be website users, and you can maybe take some of that information out of the paper versions because it's now online all the time. But it's back to teaching our citizens the tools that they can have. And so, I don't know that we needed to go to 12 printed versions of In Focus, but it was changing the strategy of how we're getting that information out there. So that was my thought.
My question is that In Focus publications to 12 issues is $100,000 a year, or is that $100,000 additionally?
It would be additional to the existing budget.
Okay.
It's even worse.
I'm not crazy about 12 issues a year, and this is my reasoning. I am very adamant that we do need a paper newsletter because I don't care how hard you're going to drive people. They're not always going to go to the website. I can guarantee it. I tried it. I experienced it. People that I thought would absolutely go to the website never did, went back to a paper newsletter. So I'm adamant about that. But I believe the times of the year that we're not putting out newsletter are times where the postage on those newsletters is going to be wasted, as well as the newsletter, because while we don't have half the population, we have a significant population that leaves in the summer months, and that in addition to less activity. So I thought 8 was a good number, and I thought we did that well. I agree, looking for other options, perhaps, that we could connect with people who will be on the website, because I'm not denying that, particularly in younger, perhaps that's their first line. But anyway, those are my thoughts. I really do not think 12 issues is the answer, and do believe that the other 4 issues might be a waste.
Jerry?
You forgot who I was over.
I did.
It's getting late.
It's getting late.
She didn't call you Joe.
Or Bill. I agree with Joanne. I think a lot of what we have with the In Focus and why we kept it is it's very generational. I mean, the millenniums and a lot of the Generation Xers, they don't even use books in school anymore. I mean, everything is iPad. So I think that's important. But if you put the information in there that where you can find it on the website in the InFocus gives them a heads up. Yeah, and the people that leaving are probably the people that are going to want to have the paper copy. It's more of a generational, people that are going to be gone for the summer, because we have a lot of Canadians up in Australia, so they're gone for the 3 months. But I think we really do need to drive more of it to the website. I don't know if it's cost cheaper, if there's some months we could add just another page to it, which is 4 more pages, rather than adding just if we have more information on 1 month, if that costs a bunch more.
I think what would be really helpful for staff, if I may, would be to get direction as to why we think we need more issues. Is there lacking information in the current issues? And that'll help decide whether we need more issues, whether they're electronic, whether they're hard copy, mailed, so on and so
Well,
forth.
in my personal opinion, I think what I've been hearing, I'm going to give it to Wally in just a
Thank
minute.
you.
But I do hear from
Gee
council
willikers.
is they want sometimes us to be reactionary right away. They want it like it would be a newspaper. It happens today, it's in the newspaper tomorrow. So that can only be done by the internet and information out to the public, because with all the decisions we make, somewhere down the line, we have a citizen complain about the decision we made, not knowing we made the decision. You know what I mean? Because they haven't read anything. And so it was information. Isn't that correct? Because Joe, you bugged me on this one, and so your feeling on it is?
I'm feeling on it because of what's out there right now. When you read the various publications, is a lot of stuff that's going on in the city is not getting covered. My thought is, I agree, there's other strategies to getting your message out, but not everybody goes on the internet. Not everybody, does Twitter. Not everybody's on Facebook. And my question is how do we fill that void of getting the information and get our citizens engaged on what's going on out there? And that's why I brought the issue up to start with. How do we do it? Because there's a lot of ways when you're talking about marketing, whether it's in economic, there's a lot of ways of getting your messages out and your various messages out. And my concern is a lot of it may not be getting out there. And my thought on the 8 months, and maybe, maybe it's even one more, I don't know what the answer is. But if you can point them to the internet, that's fine. But to be honest with you, I've gone on the internet and I've done my surveys and queries. I don't think it's the easiest to get around, and that's just me personally. The site, all right? I just don't. But again, I'm not as savvy on it as some of the others are as far as locating, because there's so much stuff out there, what you put in and how do you find it. Versus I had some, I think I shared with you, I had some relatives that were actually from South Africa, friends from South Africa, who actually read our In Focus cover to cover and was amazed on how much information was in there about our community. All right, so again, I think some pick up Read, some pick up Twitter, some go Facebook. My thought was how do we get the message out to our citizens, what's going on out there, and get information timely to them so they know what's kind of going on. And again, if you look what's out there, not a whole lot's getting covered, at least in my opinion, on what's going on in the West Valley. That's just my 2 cents worth.
Any other comments?
And just
Wally first.
Wally?
Thank you, Mayor.
You're welcome, Wally.
I've been
Gonna explode over there.
Yeah, I know.
well. I like the In Focus, but I really don't like the In Focus. I think we can do a much better job. I understand Bill's concern about Parks and Rec having so much in the issue, but they were reaching the specific age group of 90% of our residents who read the In Focus. If they do not do that, if they do not put their schedule in our publication, they will have to do a publication themselves, because every park and rec or department in the country has a brochure that offers their programs. And you pick it up and you look through it and do whatever. So I think we can be... I think we can do a better job on some of the subject matters that is included in there. In Focus, perhaps we need to focus more on the city and our vision, what's going on, and that sort of thing. But then on the other hand, when we had the water issue, it was extremely important, but that only really affected Interstate 10 and south, because that's where who are our water users. But it was a very wonderful issue as well. It's the only way that as a council member I can put a newsletter out to all of the city, because I'm not offered that opportunity on our website. I wish we had a website for each one of the council members that we could do something, a message or something, but we don't have that capability. So my little council corner that I get once a year, I think I get it once a year or once every other year or something. Once a year?
Once a year.
Okay. And that's my, that's my shot to fame, to say anything so they even know who I am. So I appreciate that part, but I just think we can do a better job. I don't think we need to go to 12 issues. We have the same problem with snowbirds in the community that I live, because they throw the Valley View, the West Valley View, in the driveway, and we all have to pick them up. Otherwise, they just gather dust. I don't know how we could differentiate who is a snowbird and who's not, other than maybe we don't publicize or we don't do an in focus June, July, and August, and we do it the rest of the year. So I don't know, but I just think we have room for improvement.
No?
Well, my suggestion on the Parks and Rec thing was just an example that.
But you're right.
Maybe a different way, but
Yeah, you're
ultimately
right.
how I started this was there's got to be a different way. Shireen, to get to your point, the issue that and what I exactly said the first night was, we heard very often during the last election cycle that there are so many things that this city has done very well that no one knows about. And to quote, we're the best kept secret in the city. And that can't be. And we have got to get out what it is that we're doing. And you and I had a conversation about the notes to know and what would it take for that to go out in an email blast, and that was too expensive too. So, but it's something like that, quick hits. We've spent coming up on, I can't even do the math, 6 hours talking about the budget. We've never spent 6 hours talking about next year's budget. And there will be nothing in the newspaper, and there will be nothing come out of City Hall regarding these 6 hours unless we do it. And that, for me, personally, that's the point. The whole next In Focus ought to be on the entire budget, for crying out loud, to talk about the things that we're trying to accomplish.
And we will. The July issue will be focused on the budget.
Oh,
So
it's
thank
not
you.
until July?
Not this
Yeah,
one,
this is
but
just April.
no,
May,
there is
June,
a
July?
June water.
She's saying, but
Wait,
she's
wait,
saying
guys.
that's
Hey,
when that.
let her explain.
will come
Let her
about.
explain.
Yeah, there will be a June issue that will be focused on the water quality and the water quality report, and then the July one will be a budget issue, and that's when the budget is adopted, and we can talk about it.
But my point was 6 hours tonight, great discussion on a lot of different issues, and no one will know a single thing about it. And that's what we have to, for me, that's what we have to fix.
And we will.
Oh, yeah. Yes. And they get picked up and then thrown in the garbage.
But okay, so at the very end, back to so it's not so costly. The notes to know, or the fact that we have 8 printed, and that's not an issue. But it's the other months that see nothing if there's an online version. And I know that's still costly because you have to put it together. But it's still another way of always having information out there and new information that picks up that time lapse when we don't have In Focus. And that was back to, we were talking about, we need to get, it's communication, it's information, and how can we solve some of it? That's just the point.
Well, I think you got a lot of suggestions on this tonight, and I think we have a couple more. So why don't you just finish so we can close this up for tonight?
And I guess if there's any feedback on the food tax item.
Well, on that one, we will not go forward with 12 issues on the In Focus. I think that consensus.
I think you got the consensus.
Yes.
I think that was it.
Thank you.
Consensus on that.
So, Mayor, when do the notes to know come out?
I don't read it, so I must be missing it. The notes to know, or you to me, or
Email that's sent out to all the city employees.
yeah, I
that
don't
we
read
get
it.
copied on.
Sorry.
Right, and
You got to go on and.
If it's not in my council, if it's not in the email from Lauren that has all my stuff in it, I don't read it. I'm sorry.
So you don't go through the.
Mm-mm.
Oh, okay.
No, not
It's tidbits, though. It's tidbits that
It's in where?
it's shorter version of
It's
getting
short.
quick.
It doesn't take long to read. Go ahead and finish the presentation.
Did
I think
did
we're
the
done.
council wish to provide any direction on the 0.25% change in the food tax?
Well, I don't think we have enough time to discuss that tonight, but it's now 11:15, so I'm going to leave it up to council. If you want to discuss it tonight, we'll go forth.
I'm the one that will be the
I can
biggest
see-
voice,
I can
and
see
I
you
will.
want to talk right now, Bill. Go.
No.
Really? You know what? No, I don't want to talk about it tonight. I'm tired, and this has been a long time, and I don't want to go into this discussion now.
Good,
So I
because
would
we
rather
ha-
not.
We have, don't we have an opportunity, just to let you know, that we're going to have our next meeting is going to be on the 27th, April 27th, which is Ron and our 52nd wedding anniversary.
Aw.
Yes, so if you all like to congratulate us that night. And so we're going to have a work session at 4:30. So
What's it going to be on?
session is on 2 items.
That's right.
One will be on Yuma Road, the bridge over the Bullard Wash, and some of the things that are going on there for reimbursement requirements of us. And then the other one is on the 12 intersections. And then we have a regular council meeting that night. So we believe that it will take more than an hour. So the following Monday is when we come back to council with a balanced draft budget. I would just ask the finance director and budget manager when you would really need to know on this last item.
I guess I'll go ahead and answer that. We're putting together the budget as it's balanced. I think there are several issues, not just this one, but several issues that have been discussed tonight. Adding a traffic signal is one of them. Some road issues that have been talked about, some eliminations that we can do, the duplication, for example, on the lighting. We will do our best to put together a balanced budget with what we've heard tonight, but if there are items at that point, I would say 2 weeks from now when we present the balanced budget, we really would have to at that point in time have that night the input from you so that 2 weeks later we can adopt the tentative budget.
we do it at this work session that's coming up on the 27th.
There's a council meeting after that.
There's a council meeting.
We can, Mayor, yes, we can always add this as a specific item to talk about on that evening.
Bill?
I realize it's exceptionally inconvenient. We only do it one time a year, but can we just do a special meeting a different day? We're gonna spend next Monday night here until 11 o'clock again talking about these same issues, and we're all going to be just as tired and crabby then as we are now. Hey, I'm speaking for myself.
I don't know. I don't think I've been that crabby.
Speaking for myself.
No. All right.
So I'm just throwing that out.
It means another meeting.
So I am gone.
No, we've got a meeting on Monday. I'm just saying. Do it on Tuesday. Do it Tuesday night.
I can't do it Tuesday night.
No, not.
Can't do the 28th.
Can't do the 28th?
Mm-mm.
All right.
Neither can the mayor.
Okay.
On the 28th.
That's fine. Then.
Sorry. Or Joe either.
Well, that's why I'm saying Monday meeting.
Election.
Mayor, members of the council, just conferred with our city clerk. While we have 2 work session items, 4:30, that'll be completed by 6, and we do have a public hearing, there are only 4 items on the agenda, so this could be one immediately following if that's
So
a council's.
meeting afterwards.
Right, special work session afterwards or a work session item.
That's fine. Because we won't be there all night talking about it.
And do you want a quick rundown on
It's
the
either yes
enterprise
or no.
supplementals?
I mean, there's
I'm
no
sorry, what?
ifs, ands, or buts.
I would suggest we add the rest of the presentation
Yes.
on the same evening.
Thank you. All right.
There was more. So there's
I
more.
know, that's why I have
Georgia,
it.
there was
So
more.
anyway, just to remind you of the meeting, this meeting has not been adjourned yet. I'm turning it over to the city manager.
Oh,
Brian?
I will be very brief. I had some announcements, and I'll just forego those. One, Mayor, you did ask about the when council talked about the consensus for Bullard Van Buren. Answer is that it was on March 16th where council, in the minutes, where council said keep Bullard Van Buren in there for 2018. It pushed it down the road a little bit,
Did
so
I
to
not
speak.
say that?
But
Give the mayor a little bit of
that's-
credit tonight. I
well,
remembered that.
And as we find these out, we'll let you know. And the other is we talked a bit about communication, and the only other item I'll share tonight is we received over 27 hits on our Facebook announcement of the Harkins groundbreaking. 2,700.
Oh, well, you didn't say 100.
You said 27, and I thought, well,
Did
why
I
are
not
we even
say
talking about
27?
it?
2 billion. No, 2,700 likes on our Facebook.
Bob.
So that was that. Social media is alive and well. That's a record, huge
Good.
record for us.
Good. I
Okay.
think I had 2 follow-ups for you. I will let you know in the morning because I remember there now.
All right. Anybody
I did.
have
I
follow-ups?
gave you 2 follow-ups.
Yeah,
All
but I'll
right.
get to him Monday. I'm not doing it tonight.
Thank you for the presentations. I appreciate. Thank you for all your patience tonight, and thank you, staff. You had to stay whether you wanted to or not. But thank you for still being that you're still smiling and you're still in your seats. So I'm going to let you get out of your seats now. Meeting adjourned.
Oh, great.